Yahoo Finance All Market Summit Road to Recovery. Today we have exclusive interviews with top newsmakers. Dr. Anthony Fauci will be here with the latest on COVID-19. We'll also hear from Bill Gates. On the economy, the CEO of Best Buy, Corie, and the CEO of Walmart, Doug McMillon, will be here. Also, the CEOs of Delta, Hilton, and Booking.com. And 2020 brought a seismic shift on the issues of race and social justice. We'll hear from Robinhood CEO Wes Moore and Goldman Sachs' Asahi Pompey. Come join us as we bring together the leaders who are shaping our lives today and driving change for tomorrow. This is Yahoo Finance All Market Summit Road to Recovery. Hello everyone, I'm Andy Serwer, Editor-in-Chief of Yahoo Finance, and I want to welcome you to the 2020 All Markets Summit Road to Recovery here at the NASDAQ in Times Square, New York City. The issues this year are as momentous as they are obvious. COVID-19, racial and social justice, and economic collapse, and the election. At Yahoo Finance, we've been covering the road to recovery as our nation looks to get back on its feet. There are myriad stories of individuals and businesses figuring out ways to move forward. In today's sessions, we'll explore that more deeply. Our summit will be mostly virtual this year, of course, but we're still pleased to bring you that incredible roster of guests who will address these issues and more. And now, without further ado, let's begin the Yahoo Finance 2020 All Market Summit Road to Recovery by welcoming Michael Corbat, CEO of Citi.
Michael Corbat has been Citi's CEO since 2012. Citi is one of the largest consumer and investment banking groups in the world, with 200,000 employees in 160 countries. After 37 years at Citi, Corbat recently announced he'd be stepping down as CEO, handing the reins to Jane Fraser, who will become the first woman to lead a big Wall Street bank.
I'm here with Citi CEO Michael Corbat. Mike, nice to see you.
Andy, good to be with you. Thanks for having me.
So let's jump right in. I want to ask you about the latest earnings report. You guys beat expectations, especially with fixed income and equities trading. How has the bank weathered COVID-19?
Well, I would say so far we've come through it, I think, in a very strong fashion. And I think throughout 2020, we've continued to demonstrate the significant earnings power of our franchise, which has shown itself in terms of, at this point, 3/4 of the way through the year, revenue growth of 3% despite the crisis, a strong quarter, net income of $3.2 billion, $1.40 a share. The underlying diversity of our business model, I think, has served us well. If you look in there, you mentioned the performance of our markets business, fixed income business up 42%, equities business up 8%, our banking business up 13%.
Consumer banking not doing quite as well as some of those other areas you talked about, number one. And number two, the stock has also lagged a little bit, the market and some of your peers. What's the explanation there?
So I'll start with the consumer banking piece. I think clearly from an industry, not just a Citi, but an industry perspective, obviously the revenues in that business remain under pressure due to the impact of the pandemic. From a Citi perspective, that's manifested itself or shown itself predominantly in the declining credit card spending. Credit card is a big business for us. A big part of our clients' spend historically has been on the travel and leisure space, and so we haven't been able to obviously escape that. But I think at the same time, through the programs that we've offered in terms of forbearance and other things, I think we've seen a consumer, not just here in the U.S., but around the world, that's in many cases or in many ways shown phenomenal resiliency. We see savings rates up, we see delinquencies, and we see credit charge-offs actually at levels below where we were a year ago, I think, which many people would believe and cite to be extraordinary. And again, in this quarter, from an income perspective, our consumer franchise made $1.4 billion despite those challenges that are out there. I think, Andy, from a share price perspective, that Citi's performance relative to other banks has varied through the crisis, and that could continue over time as we move past this crisis and demonstrate our resiliency. And again, I think the way we've come through the past 9 months has shown that so far. We believe the stock price will adjust accordingly. Back in March, along with other U.S. banks, we took the proactive step to suspend share repurchases to further bolster our capital. Our capital's up at a 11.8% common equity tier 1 ratio, and obviously gives us a position of strength. We continue to pay our dividend. We get a 51 cent per quarter dividend that we came into the crisis paying. We continue to pay, and we're committed to continue to do that.
Mike, I have to also ask you about the fact that Citi was fined $400 million earlier this month for lacking adequate risk controls and entered into a consent order with the Federal Reserve. Should investors be concerned about that?
Well, I would say first that we are disappointed that we've fallen short of our regulators' expectations, and as we've said very publicly, as an institution, we are fully committed to thoroughly addressing the issues identified in those consent orders. As part of that, there are 4 main areas of focus in there around risk management, data governance, controls, and compliance. And I think importantly, what ties these together is the need or the desire to continue the modernization of our infrastructure, our governance, and our process. And we have had remediation programs in place. And while we've been making progress against those, we're simply not where we need to be. And we acknowledge that.
You've seen Black Monday, 9/11, 2008, 2009. How does this downturn compare to that?
Well, I think first, Andy, we need to recognize kind of what this is. And, at its core, this is a pandemic. It is a health crisis, and will not be solved until we have an answer to that, till we have a health answer to that. Clearly, a manifestation of this health crisis is significant economic challenges, not just here, but around the U.S. So I think different from some other crises that have affected the financial markets. The financial markets are not at the center of this, right? It is a derivative effect of the health pandemic. And I think the great news or the silver lining in this is that I think the financial system globally, and in particular in the U.S., comes into this as a source of strength. We talked about capital, we talked about liquidity, we talked about reserving. And I think very importantly, what's different this time, in particular from the last crisis, is the fact that the banks, and in particular the big banks, right, have played a very important, or the very important role as that transmission mechanism between government programs, fiscal, monetary, whether it's central bank or broader government programs, and the real economy, right? So whether it was the early days of the crisis when the Fed was injecting liquidity, or they were putting in place certain types of lending facilities and liquidity facilities for the markets to take advantage of, it was the bank, in particular the big banks, that actually really brought those to life.
So how would you characterize the U.S. economy right now, and how critical is another round of stimulus at this point?
Well, I would say that the U.S. economy has actually performed better than expectations, right? If we take a look at what you would think would be happening around GDP, around unemployment, around the challenges of individuals, families, small business, bigger business, I think so far the programs that have been put in place by the Fed, those programs that have been put in place coming out of Treasury, I think have served us well. What we don't know from where we are is what the forward trajectory looks like, and so so I think right now we're all trying to watch the data to see that as we head back into colder weather, as we head back into flu season, do we actually see a continual uptick or resurgence in terms of COVID cases? As of late, we've seen a bit of that. I would say in some cases that was expected, but really what we want to see is, again, we want to see that curve turn and bend and start to go back down. And clearly, I think we all have optimism, and there's a lot of work going on in terms of the vaccine and the antivirus out there. And hopefully that's not that's not too far in the future, and that we can get that out, we can get that scaled, and we can give people the benefit of that, so that we can start to have a more expedited return to normalcy. Our willingness to use mass transportation, our willingness to go into crowded space, our willingness to go indoors into a restaurant. I think all of those things are critical. From a stimulus perspective, I think without a doubt, people recognize that that we probably do need another round. I think we've got the ability to be more targeted this time in terms of those businesses, those geographies, those areas that have been more acutely affected by the virus. And I think at this point, it sure feels like to me, it's not about are we going to get it, it's when will it come, and exactly how will that be designed as we go forward.
You mentioned the Fed, and I want to ask you about Jay Powell and his policies, and specifically about negative rates, Mike, and how concerned are you about that? Or maybe you think that's something we should turn to?
Well, I would say one, Andy, is that as a company, as a bank that operates all over the world in 100 markets all over the world, we've experienced negative rates, right? We've seen them in Europe, we've seen them in Japan, we've seen them in different places in the world. So negative rates aren't, while they might be new to the U.S. when they come, they're certainly not new to a company like Citi and the way we operate. I would argue, and I think that Chair Powell has argued this or stated in his testimony that the transmission mechanism of negative rates isn't necessarily that effective in the places where we've seen it. I think it creates strange behaviors, it creates strange bubbles, and I would say hasn't in totality been all that successful. I think what I've heard is Chair Powell has spoken is a reluctance to go there. And I think, kind of feeling that there's maybe some other tools in the toolbox that could be more effective. I think as an example, away from the Fed, I think moving away from the monetary side of things being the answer, maybe taking a harder look at what type of fiscal programs. We've had a lot of talk about infrastructure, other things that are out there that could actually provide a lot of benefit broadly across the U.S. economy or other economies. And so, again, we're in unprecedented times, and I think that we should continue to think and act creatively in terms of how we attack this. And for me, negative rates is probably not from what we've seen the next or best place to go.
Right. Are you guys at the bank concerned about a contested election? Have you guys discussed what that might mean for capital markets or the functioning of lending or just the bank's business?
It's a scenario that people talk about, and I would say that it's kind of one of the things that we are and certainly will be keeping an eye on. Again, we are a political institution, and the people speak, the people vote, and we certainly respect that process. In terms of kind of market disruption or how that plays forward, hopefully. The results are clear, whatever they are, and hopefully there's a smooth transition around that. But again, I think the markets and Citi will certainly be prepared. And this year we've gone through unprecedented periods of volatility, of volumes, and I think the markets have stood up very well to that.
Talk about your employees and your teams working from home and how you manage that with such a large, global, as you say, institution. What's that been like, and how's it going?
Well, we've got around the globe, as I said, operating in about 100 countries and territories around the world. We've got about 200, little over 200,000 employees. At the peak of working remotely, we had the vast majority, 90% plus of our people working remotely. And I would say that the investments that we made in systems and infrastructure so far have served us really well. And my operations and technology colleagues have done a great job. That, during peak periods, we've had in excess of 150,000 of our colleagues in our systems, working online through the city systems, and they've stood up very well. And I think that, a year ago, if you and I would have had this conversation and I said, let me tell you what we're prepared for, and let me tell you what I think, we can do, the kind of numbers I'm talking about, you probably would have wished me well, but probably thought I was a little bit crazy in terms of the ability to do that. Well, I think here we find ourselves, and that in fact has happened. It is our goal. It is our objective to get our people back in the office safely, and as part of that, we're being driven by the data. It's not about a date; it's about the data. And so, again, when you look at the places we come to work, we've probably got about 60% or a bit over 60% of our people back in China and Taiwan. We've got over 30% of our people back on average across Asia, and I would say in Europe and the U.S. we're probably more in the low single digits to low teens.
Looks like the chief executive is back a little bit.
Yeah, I'm here. Yeah, I've been back for a while, and again here at headquarters, we've probably got somewhere about 10-12% of our staff in, and obviously that depending on the trajectory of things, will continue to come up. But I really commend our people in terms of the work that they've done and the safe environment that they've created for us to return to.
In September, you launched a $1 billion in strategic initiatives to address the racial wealth gap. Why did you do that?
Well, clearly the events not just of this year, but how things have moved, or lack of movement over time, certainly hasn't been lost on us. And when you think of cities' central role in local economies and the financial lives of Americans, we believe that we can have a significant impact on helping, in this case, to address and to close the racial wealth gap. So in June, as protests for racial justice intensified, I challenged cities' business leaders, my team, to develop solutions that we could go at and attempt to tackle systemic racism in our local economies and communities. And the announcement we made, Andy, around our action for racial equity was our response. And what we did in there is try to go at this with a pretty comprehensive approach to providing greater access to banking and credit in communities of color. By the way, what we do, right? That is our day job. Increasing investment in Black-owned businesses, expanding home ownership among Black Americans. And if you go back for the last 10 years or so, we have, while not being the largest bank or the largest real estate bank in the U.S., we have consistently been the largest lender to the low and moderate income housing across the U.S. And so that we thought, we could bring some expertise to, and obviously advancing anti-racist practices in the financial services industry. So in our $1 billion commitment, $550 million to support home ownership for people of color, $350 million in procurement opportunities for Black-owned businesses. So as a company that manages big businesses, and we spend a lot in our communities, we obviously have the ability to drive that spend and to push that spend and really try and support Black-owned our Black-owned suppliers. $50 million in investing for capital for Black entrepreneurs. Again, kind of reaching out there. $100 million in support for the minority depository institutions. Right, the minority depository institutions operate in a number of these neighborhoods that have been significantly affected in the COVID pandemic. and ways that we can support them, and whether that's with monies, whether that's with lending support, whether that's helping to provide them expertise or other things that we can do to help them continue to build their institutions. And finally, $100 million from our foundation in grants to support community change agents for addressing racial equity. So, real money, real tangible actions. We're excited as an institution around it. We've already begun to get out there and to kind of put these monies and to put our efforts to work. And the institution is completely behind it, and I think excited by it.
And finally, Mike, I'd be remiss if I didn't ask you about this major changing of the guard that is taking place right now. You're leaving the bank after, okay, I'm going to do the math, 37 years, right?
That's right.
37 years. And Jane Fraser is taking over as the first woman to lead a major U.S. bank in February. What's your legacy? What can we expect from Jane? How's the transition going?
My thinking was influenced by a few things, right? One is going back to 2017 when we did our big investor day. We embarked on a 3-year plan that would take us through the end of 2020, and it's kind of always been my ambition to see that through. Second, as you mentioned, I have a ready now successor, right? Jane has been with us for going on 16 years. She's had a number of jobs across the organization. She and I have worked always very, very closely together. And, in many ways, we've been, preparing her for quite a while. As I kind of think about the accomplishments or kind of what happened on my watch, obviously coming out of the crisis, we increased Citi's net income from around $7.5 billion to over $19 billion last year. We more than doubled our return on assets in terms of our portfolio. Our return on tangible common equity went from about 5% to north of 12%, closing the gap with our peers. We went from returning hardly any capital in 2012 to returning nearly $80 billion in capital to our shareholders in the last 6 years, and we've reduced our share count by about 30%. So, and I think all of that hard work and what we've done so far, I think, is very positively manifesting itself in terms of how we're coming through COVID, in terms of our performance, of our resilience, and I think the trajectory that the firm is on. So, I'm proud of what we've done, and I'd say I'm very confident in terms of the great management team we have in place, and I know Jane's going to be a fantastic CEO.
And we wish you well. Michael Corbat, CEO of Citi, thank you so much for joining us.
Thanks for having me.
Coming up next on the Yahoo Finance All Markets Summit Road to Recovery, the CEO of the NASDAQ, Adena Friedman, on the markets, IPOs, and a lot more. And then Dr. Anthony Fauci and Bill Gates on how to stop the COVID-19 pandemic. Stay with us.
Adina Friedman is the CEO of the NASDAQ. With more than 20 years of industry leadership, Friedman makes sure the NASDAQ stays ahead in a highly competitive world and at a time of profound generational and technological change. Under her leadership, she's transformed the NASDAQ into a leading global exchange with operations across 6 continents.
Welcome, I'm Julia LaRoche. And I'm pleased to be with NASDAQ CEO Adina Friedman. Adina, thank you so much for having us here.
Absolutely, it's great to have you here.
Well, we appreciate it. I want to go back to March 2nd. You wrote this op-ed in the Wall Street Journal, and I'm just going to quote it in part. You said, quote, "Look, markets are resilient and capital is part of the cure for this pandemic." You were really reassuring investors at the time. Can you take us back to that moment and then kind of walk us through the last 7 months?
Sure. Well, certainly back in March, there was an enormous amount of disruption happening in the markets as people were absorbing the news that there was a pandemic that is sweeping across the world. And so as we thought about what do we need to make sure of that investors and the population understands is that in our system, when we have a problem, capital is part of the cure. In terms of making sure that companies get funded to be able to be problem solvers, for one thing, whether they're solving problems to help us through the pandemic, like healthcare companies, technology companies, but also in terms of managing through the disruption to their business in terms of some of the other parts of our economy that were hard hit, capital became a really critical component of them being able to work their way through it. So our view is keeping the markets open was an absolutely critical element of making sure that our system and our economy could continue to function as we were absorbing that news and starting to walk into a different world.
You know, I would like to just kind of double click on that a little bit. You know, the markets have obviously done very well throughout the pandemic, yet we still see a lot of suffering across America and I guess the world, and we were having this conversation earlier. Would love to kind of just explore that a bit more. And you have an interesting vantage point being the CEO of the NASDAQ. You have a pulse of the economy. What do you make of what's going on?
Yeah, I would say that it really does feel like a tale of two cities in terms of some elements of our economy that are just unbelievably hard hit. We have a lot of companies that are struggling significantly, a lot of parts of the economy that just aren't working the way they should. And of course, small businesses in particular are hit the most. And so as you see the fiscal stimulus and the monetary stimulus that's come out of the government, those are critical elements of keeping our economy going through what is an incredible disruption to many elements of the economy, whether that's retail, consumer retail, certainly foot traffic into restaurants and into stores, as well as travel-related or companies and things like that, where they just are hit to the point where none of this is completely outside their control. But yet they have to manage through potentially a very long period of time of significant downturn. And yet on the flip side, you have all these technology companies and healthcare companies that are frankly enabling us to continue to operate as an economy, that are creating, for instance, if you think about home delivery, it went from being a consumer convenience to a necessity during the lockdown. And then people started getting used to that convenience to the point where now they say, to stay safe, I'm going to continue to leverage that service. Well, that then, for all of those companies that are providing that service, that's a huge, huge boon to their business. Same with remote working, in terms of all the companies that really empower us to continue to work in a completely remote environment. And then, of course, the healthcare industry, where not only healthcare companies solving the COVID problem, but it's healthcare companies solving many health problems. People understand these are long-term investments, and there's a lot of capital being put to work there right now.
Well, of course, we're at the NASDAQ. We have the opening bell right now, so we just have to plug that right there. Let's talk about your business and how that's been doing. I think it's worth highlighting, this was a very striking statistic. In the third quarter, you all had 105 IPOs, 174 in the first 9 months. A lot of pent-up demand, I suppose. What is driving that?
Sure. Well, going into the year before the pandemic hit the world, we expected to have a really strong year for IPOs. So we saw a lot of demand really building as we exited 2019. In fact, we had about 190 IPOs last year as well. So it was a busy year last year, and we saw that we could end up having an even busier year this year. But when the pandemic hit, we saw a massive disruption. Every IPO was put on pause, and we weren't sure what was going to happen. And so in April, we actually talked to our investors and said we could see this being a much slower year than we thought it was going to be based on what was happening at the time. But then some IPOs started trickling out. So first it was a healthcare IPO, and then it was a significant tech company, ZoomInfo, that came out. And they did really, really well. And so as people started realizing, investors have a lot of cash to put to work. There are not a lot of other asset classes that can deliver them returns and yield because of the fact that the Fed brought down the interest rates so low. And so then they say, well, gosh, in order for us to be able to meet our investors' needs, we need to start to look at putting risk capital to work, and equities was the best option. And then some really, really interesting companies started coming in, and it started taking off. So by June, we started seeing a very healthy environment growing. And then, of course, you also see this year kind of the year of the SPAC. So a lot of acquisition company vehicles also choosing to tap the public markets at the same time that operating companies are. So we are very, very pleased because we have 80% of all operating companies going public so far this year have chosen NASDAQ. And then about 50% in the third quarter of the SPACs have come to NASDAQ as well. So we've had a very, very robust year so far in IPOs.
What's your take on the SPACs? You're right, we have seen this real boom in this space, and you have a lot of folks who are well-known names, and it seems like almost everybody is making a SPAC at this point. What do you make of it?
Sure. Well, if you think about the types of people who are coming into the SPAC market, they're generally very well-known investors or very well-known CEOs who have a great track record. And so from the investor perspective, they could choose to raise money through private vehicles and out through LPs, which they normally do. Or in this particular case, they're choosing to raise money in the public markets to allow retail to be a part of it. But then the interesting thing about SPACs is the way it works is you have essentially 18 to 24 months to find a company to populate the SPAC. And at the time that you populate the SPAC, the investors have another bite at the apple. They get to vote on whether or not they support the company that you choose to acquire. So in a way, investors are putting their money behind a great name. They're then saying, well, I still have some control over the outcome here because I get to vote on the ultimate company. And that seems like a pretty interesting way to deploy capital in this environment right now.
Mm-hmm. Well, I want to kind of shift gears because over the last few years now, we've had these kind of growing tensions between the U.S. and China. And we're going to have Ray Dalio on later today. And in our conversation, he brought up the capital flows, that he sees capital flows going to China, more IPOs coming out of China. How do you think of the global competition? And specifically, what do you make of the STAR market? Of course, one of the news over the weekend is the Ant Financial IPO coming to Hong Kong in the STAR market.
Well, it is very much a global competitive landscape for capital formation. So the exchanges in China and Hong Kong are highly competitive in terms of trying to attract companies that are domiciled in China to come and list there. But then we still have a lot of companies from China also looking to tap the U.S. public markets. And so it is a great opportunity for Chinese companies to realize they have a lot of choice. But we also have to make sure that the U.S. public markets remain open and available to companies coming from China and the broader Asian region. And that's where some politics have come into the mix in recent months, that we are cautious about making sure that when companies come to the U.S., that they are vetted the way that they should be, of course, and that the audit firms live by the same standards as any other jurisdiction. But at the same time, you want to make sure that we don't choke off access to capital by making it so that the barriers to entry are too high. So it's been an interesting time for us to manage through a global capital competitive landscape, and at the same time making sure that the companies come here live up to the standards that we expect.
Of course. And I think it's another topic we should explore, and that is capitalism. Of course, capitalism, it sometimes brings a lot of controversy these days, or at least it seems like that. It's got a lot of critique around it now, and I know you have this concept of cooperative capitalism. Would love for you to unpack that for our viewers, and how do you think that's evolved during this pandemic?
Sure. Well, I remain a true believer that capitalism as a concept is the best system that exists because it allows for people to maximize their opportunity. I think the key, though, is to make sure that everyone in society has an equal opportunity. So that's where I think that the execution of capitalism could continue to improve. But both in terms of making sure that everyone in our society has access to capital to create a business, create jobs, and be able to innovate around ideas that they have. And I think we still have work to do because we have a lot of underserved and certain minority populations that really just don't have that equal access. And so we want want to make sure that as a purpose initiative that we have, that we start to make sure we educate entrepreneurs from all backgrounds on how they can access the public markets or early capital as well to grow and expand their businesses. And at the same time, we have to look at what is the responsibility of a company, in particular companies that have been scaled and grown in terms of their responsibility in the broader societies that they operate in, the communities that they serve. And what we're seeing on the back of the pandemic is that companies have really stepped up and stood up and said, I'm here to make sure that I provide a great return to our shareholders, but I'm also here to serve our employees and the communities around us. And so some of the commitments that we've seen them make in terms of my favorite example is a grocery store chain who basically bought up all of the produce from local farmers who otherwise were not going to be able to sell their goods during the lockdown. And they bought them all up and they donated them to food banks. Or you saw car manufacturers transferring their plants to be able to create ventilators. Those are great examples where those companies took that moment and said, we're here for a broader purpose, and we're going to make sure that we serve the communities around us, in addition to making sure our shareholders get served over the long term. And I think that is the kind of spirit of cooperative capitalism. I think going forward, as we go through this pandemic on the other side of it, there's also really big opportunity for companies to cooperate with government to say there are some big problems that we now have within our societies, and there's a way for us to use innovation in order to solve those problems. The private sector really benefits. They have great innovation, and they have great access to capital. The public sector has the ability to solve big problems. And if you put those two together, you have a really great ability for us to advance our economy and advance our society going forward.
Something else in there that I'd love to explore further with you, Adina, of course, like access to investing in the markets. And we've seen a lot of brokerages bring their fees down. We've kind of seen this wave of new retail investor participants. What do you think is the biggest barrier to stock ownership? We mentioned this kind of tale of two cities. You know, the market's done so well, but we know the wealthier own the financial assets in this country. So what do you think are the barriers? And if we address those barriers, what are the broader implications when we can have more access to the markets for more people?
Sure. Well, today, I would say over 50% of the adult population in the United States owns equities either directly or indirectly. They might own them through a 401k or through a pension, through their own mutual funds, or direct ownership through the stock market. And what we're seeing this year is a whole new wave of retail coming in and saying, I want to have control over my investment decisions. I'm going to come in and participate directly in the markets, which is very exciting. But you also want to make sure that they get educated properly so that when they come in, they have a good experience and they stay for the long term. So we've actually launched an investor education portal in conjunction with the online brokerage firms and other industry organizations to make sure that as these new investors come in, that they understand what they're buying, they understand how to leverage the markets, they understand how to think about investments over the long term. But at the same time, we have still a lot of work to do to make it so that the other half of the population also have the ability to access the markets as well. And that comes to a much bigger program in terms of access to banking in underserved communities, making sure they can get small business loans in a way that they may not have access to them today. And then ultimately, if they're able to create a business and create jobs, then giving their employees equity. So the more we can have employees of these companies own equity, to me, that's a great way to spread the access to capital to the broader population.
Yeah, it's an interesting point. I think I can bring up a recent example of more companies who are starting to rethink that and bring up equity investments for their employees. One final question for you, because when you think of the NASDAQ, it's more than just a stock exchange. It really is a market technology company. I know you've been at the forefront of a lot of changes, so would love to kind of pose a broad question to you. We talk about the future of work, what that might look like. What do you think the future of markets might look like, the future of financial services? I'd love just to kind of explore a bigger theme with you here.
Sure. Well, certainly the financial services industry has always been a data-first industry, right? Every decision that happens in the markets is on the back of data. So we've been in that business, the data-first approach to running our business for a long time. But what's really happening now is a complete digitization of the trade life cycle. There's still a lot of elements, particularly post-trade, that are on either old tech or done in a more manual format. So you're going to see more digitization of that. But the thing that's most exciting to us as a provider of technology to over 130 other markets around the world, and we also provide advanced surveillance technology to the broker-dealer community, is leveraging the cloud. So can we bring markets into the cloud? Could we operate NASDAQ as a cloud-enabled marketplace? And I think that we're getting closer to that reality as we've been working with the cloud providers and as we've been re-architecting our own systems to be cloud-enabled and a microservice architecture. So as we think about the future going into the cloud, that then gives you a much more of a data-first approach to running markets, which then you get better access to machine learning, intelligence capabilities, which can then provide even better surveillance and better, what I'll say, defensive capabilities in the markets, as well as more alpha generating opportunities for investors and for the broker-dealers. So to us, I think about it, moving the infrastructure into the cloud, leveraging all of the capabilities that the cloud have in terms of data management and machine learning, and then continue to advance those markets to be able to make it so that we become ever more efficient and ever more global.
Adena Friedman, CEO of NASDAQ. This is something that we'll want to explore further with you. I thank you so much for your time, and thanks again for having us here.
Yeah, thank you so much, and enjoy the day.
Thank you. And we have Hans Vestberg, Verizon CEO, next.
The Yahoo Finance All Markets Summit is sponsored in part by the International Well Building Institute.
has been Verizon's CEO since August of 2018. He's currently leading the quantum leap in ultra-high-speed communications, 5G. The Financial Times referred to him as the 5G evangelist. Vestberg is currently preaching the gospel of a new digital world and the promise it brings. That promise is even more critical in a post-COVID era. He's also a leading voice on climate change, digital health, and a passionate proponent for equality and social justice.
I'm Alexis Christoforous with Yahoo Finance, and joining me now is Hans Vestberg, Chairman and CEO of Verizon, which we should mention is the parent company of Yahoo Finance. Hans, always good to see you. Thanks so much for being with us.
Great to be here. Thank you for having me.
So this has been a milestone month for Verizon. You shared the stage with Apple's Tim Cook earlier in the month at the launch of the iPhone 12 event. And there you talked about the expansion of Verizon's ultra-wideband to 55 cities. What does that mean for the company? How is that a game changer for Verizon?
We have worked with our 5G strategy for several years right now and deploying our 5G as well. I think that what's happening last week when I took the stage together with Tim Cook was, of course, that we have the network, we have the ultra-wideband 5G that you talked about. We turned on the nationwide 5G. And then, of course, given the importance of the iPhone in the US for the consumers, then we have the phone that the majority of US consumers have. So that was sort of the reason why we felt this is now 5G is getting real, because all the components are coming together. So, and as you might know, our strategy is very clear when it comes to our network. And first of all, we have the best 4G network. Then we have the ultra wideband. We have that in 55 cities in the most dense part of the country, where we can do a lot of new things with high speed, capacity, and low latency. At the same time, we turned on the nationwide 5G on a lower band of the spectrum. That is covering more than 200 million subscribers in 1,800 cities. So all that came together alive at the same time as the launch of the iPhone 12, which all of them can enjoy all the technologies that we have deployed in the network. So that's why it was a big moment for Verizon. We have been part of this strategy for years, and now it's sort of coming to the market, to our consumers and to our customers.
Definitely exciting times for Verizon. But Hans, I think that overall consumers are trying to wrap their heads around 5G. In practical terms, what does 5G mean for their experience? Will it greatly and radically enhance things from 4G?
Yeah, that's how we have built it. So Verizon has built actually, so it's not only sort of a linear progression from 4G. We built the 5G ultra wideband because it's so transformative. It's 20x the speed, the capacity is so much wider, the latency is so much lower. So you can do things like AR and VR in real time. You can do the multi-viewer sort of cameras at an NFL game with 7 concurrent cameras at the same time, and you can pick and choose. These are things you can do with the 5G ultra wideband. So of course, we have built the network in order to make a step change for 4G. Remember, we have the best 4G network already, and it's really good. So we want to do something extra. The 5G nationwide is in some sort of a level of the 4G network, but that's just the beginning of it. So we have more to do over time, of course.
You mentioned the NFL. I know that Verizon has invested a lot in bringing 5G to sports stadiums, to airports. Sadly, these are areas that people are not frequenting right now because of the pandemic. So Hans, do you hope or expect those investments to start paying off in 2021?
So if you look at the 43 arenas we have built when we have sport events, we can already now use them, because if you have 5G ultra wideband in the stadium, you can actually transmit all the cameras back to the user, and the user can actually sit at home in the sofa to enjoy 7 cameras, not being in the stadium. So even though we are not frequenting these places today, we can still enjoy the investment we have done. Then, of course, airports, and public places. We see less people today. I think that over time we will get back to those places, maybe not equal as before, but that's where all the capacity is. That's where the constraints are. And that's where we have our 5G ultra wideband, which means that we are going to be totally unconstrained in these places, and we can do things we've never thought about doing before. So clearly we think this is the right strategy and for our customers, and that we have seen paying off over time, and we will continue to do so.
We know that 5G speeds with Verizon are ultra fast, but one of the concerns we keep hearing is that it doesn't blanket a wide enough swath of space. What are you doing to improve things there in the coming months and years, Hans?
So this year we basically do 5 times more small cells on 5G ultra wideband. We just last week, we launched 19 new markets. So we are continuously upgrading it and to get a much broader ultra wideband. But I said, we also did the nationwide on another spectrum that is for 200 million people. So we continuously develop our network. So we always have a future-proof network for our customers. As the phones are working on the 4G, it's working on the nationwide 5G, and it's working on the 5G ultra wideband. And in all the different models of iPhone 12, we have all 3 levels of the network that we have built. So I think that's a proof point for how Apple thinks about our future and how we think about bringing our customers in all these experiences.
Hans, I want to talk a little bit about leading this company during this unprecedented time. The pandemic has forced dozens of companies to lay off workers. Verizon has not had to lay off any of its 135,000 employees. How have you been able to do that and pivot for your employees and for your consumers during this time?
First of all, I think we started out very early on having a conversation what will be important in this crisis. This crisis is a crisis nobody has seen before. There are no playbooks. I mean, it's not like a bank crisis or a telecom crisis or something that I've been experienced before. This is a crisis of health. People are dying from it. It's the health and safety of people, which is totally different. And then of course, that pivoted into an economical downturn. And then, of course, on top of that, we got the racial injustice. So it's a very broad set of crises outside our company that we need to think about how we're dealing with. So the first decision was that, hey, we need to see that we take long-term positive decision for all our stakeholders. And we have a stakeholder management with customers, shareholders, society, and employees. And we understood that whatever decision we take right now will follow us for years. So we need to think about long-term. That's why we prioritized our employees extremely high in this beginning, the safety and health of them. Remember, we have all our stores, we have our field engineers being out there every day. Not all our employees could be home and doing remote work. So we needed to really prioritize that. Then we need to prioritize our customers. There will be customers that are not able to continue to pay their bills. The infrastructure is second most important infrastructure in the country after healthcare. I mean, so we decided we're not going to disconnect anyone, any consumer or any small and medium businesses because of non-payment. And we are working with all of them in order for them to see that they can continue to refinance. And we even have taken away charges, giving them more data. That was important decisions, but not only that, for our own employees, we worked a lot with communication, and some of the viewers might know that we run a daily webcast. We have done that since February for all our employees. We have had days where we had more than 100,000 employees tuning in. I was live myself for 9 weeks, basically, every day. Nowadays, they only bring me in once a week because they're tired of me. But it was a way to communicate and do things differently and right in a time where the nation really needs it. So that is just a couple of things we have done. And of course, we extended all the caregiving leave, etc., with full pay, because this is unprecedented times, and our employees going to remember this time. Our customers going to remember it. The society is going to remember it, and clearly our shareholders will remember it as well. So we just need to see that we manage all the 4 stakeholders, and that's how we set up the company.
You know, it's hard sometimes to step back when you're still in the moment, but what have you learned leading this company through this pandemic that perhaps, you know, you can pass on to entrepreneurs or to other leaders, or, you know, if you find yourself in another unprecedented situation down the road, Hans?
So first of all, I speak to many of my peers, and they have done fantastic as well. Nobody believed that you can pivot and having so many employees working from home. And I think that goes for me as well. I'm proud how quickly we could pivot the model, how we can change how we work in the stores, how quickly we can change the way we're doing field operations with the safety and health as a number one. So I think that's a learning. I think the other learning in the crisis moment, the communication is so important, because you cannot rely on the next level in the organization relying information, because it's so fluid and there's so many questions. That's another learning. And finally, the learning is that in crisis, the decisions you take are so important, because they're going to live with you for years, and you need to think long term, because that's how the constituency around you think. So that's a couple of learnings we have taken from it. And then you learn personally how you're going to do work with video conferencing in a totally different way, democratizing meetings. There are many things we have learned, and we still are learning from this pandemic and downturn. We have seen how to work in this new environment.
It has highlighted the digital divide in this country. So many of us now needing to work from home, so many school children needing to do their studies from home, and they don't necessarily have the tools to do it. And I know that Verizon is working closely with some other companies to help change that. Tell us what you're doing.
So this is a moment that is very important for our society. I mean, we know the challenges we have in our society, and many of them can only be addressed by the decreasing the digital divide. This pandemic, of course, the silver lining in this pandemic is, of course, being that we can see it works to have healthcare, education digitally, getting information digitally. But also, if we don't do it right, we can actually increase the digital divide as well. So this is the opportunity to see that mobility, broadband, and cloud services is the 21st century's infrastructure. And every government, every country, and every private sector need to think about that. So that's how we've been thinking. And what we're really focused on has been education for underserved schools. We have invested more than $500 million since 2012 in underserved schools, where we give them both the broadband, but we also give them the devices, and we give them a curriculum, a digital curriculum, because it's very important when you talk about the digital divide that it's the accessibility of the technology, of the broadband. It's also the affordability. You need to be able to afford it. And finally, it's the usability. We all like Netflix and all of that, but we need actually STEM education or healthcare application that can work on top of it, so we get the social benefit from it. That's why the public-private conversation becomes even more important these times. I can assure you, Verizon will do everything to continue to lay out the broadband over the country, work with the different constituencies to see that we're getting healthcare and educations for all that needs to do that digitally.
Now, speaking of social impact, I know that Verizon has set some pretty aggressive goals when it comes to energy efficiency and making a difference when it comes to climate change. You vowed to power the business with 50% renewable energy by 2025. You want to be carbon neutral by 2035. Tell us a little bit, share with us how you plan to do that, and what do you believe is the private sector's role in all of that?
I think we have seen the pivot in the private sector over the last years. I mean, we understand that we're such an important piece of progression of our society. I mean, that's why when we came with our new strategy for some 2 years ago, we said that all our strategies are based on the 4 stakeholders, are the society, employees, customers, and shareholders. And we have North Star for all 4 of them. But remember here, I like philanthropy and doing right things. This is part of our strategy, that we are doing education in schools. That is part of our strategy. Broadband is important for us. It's a core strategy. Bringing devices out at work and giving digital STEM education. All is part of our strategy. We want more children and youth to learn about technology, and especially females, because we need more females in our industry. So all in all, that's part of our strategy. And that's how I think about climate as well. And that's how I think about human prosperity. All that we have embedded in our strategy, and we have sort of bold ambitions and North Star for all of them. And I think we're progressing well. On the climate, for example, we're now doing our second green bond. that we launched just a week ago, where we actually are taking $1 billion. This is the second $1 billion that we're investing in sort of green technology in order to support the climate change and reducing the climate change. So all in all, we have actions behind all of them in order to get there, but they're embedded in our strategy. That's the most important, and it's part of our strategy, because usually when you have tough times, the first thing you start cutting is philanthropy, but you not start cutting on your strategies. And that's how we're thinking at Verizon. I think I see many other corporations doing it as well, and we understand our responsibility as a large corporation here in the US and in the rest of the world.
I like it. You got to think bold. Hans Vestberg, Chairman and CEO of Verizon, thanks so much.
Thank you very much.
Still ahead on the Yahoo Finance All Markets Summit, Road to Recovery, live from the NASDAQ. Bill Gates and Dr. Anthony Fauci, and the latest on the fight against the coronavirus. Stay with us.
Gates is the co-chair of the Bill and Melinda Gates Foundation. The Microsoft co-founder is one of the world's most well-known and most respected philanthropists. His organization's programs work across the globe in several key areas, including health, education, economic development, and gender equality.
I'm Andy Serwer, editor-in-chief of Yahoo Finance, and I'm joined by Bill Gates, co-chair of the Bill and Melinda Gates Foundation. So we're 7 months in, Bill, since the pandemic really hit the United States, late October. What's your assessment of how the U.S. has handled the pandemic?
Well, sadly, as we go into the fall, the number of cases and deaths is going to go back up again. And the reason those numbers are so high is partly because our response was very poor. Our testing, our messages about masks and social distancing make us near the bottom in terms of rich countries and how bad the epidemic has been.
Do you anticipate it getting even worse in the winter weather?
Yes, the amount of time you spend indoors, the fact that people are not getting clear messages and they're tired of the restrictions, and the fact that as it's colder, your upper respiratory tract doesn't do a good job of suppressing the virus. So your that seasonal transmission level is pretty clear in the data. And so all those things are working against us as we go into the fall.
Yeah, I know you're loath to call out people personally, including President Trump, for specific behaviors, but what can we do to convince people that maybe they shouldn't hold big public gatherings with people without masks?
Well, I think the most malign thing is where you start to attack your own experts and, suggest that maybe politicians know better than disease experts. In this case, the CDC has not been allowed to really speak out. When they tried to put information on their website, that got edited by politicians. We now have a pseudo expert advising the president. Tony Fauci is a great person. His messages are quite clear, but as he gets attacked, those messages aren't able to develop the kind of patience and helping each other that would bring the death rate down.
Let me switch over and ask you about vaccines, Bill, and get your take on where things stand there. How soon do you expect a candidate to be approved?
Well, I think likely early next year, with any luck, we'll have 2 or 3 of the 6 that are in phase 3 trials right now. The Pfizer has a good chance of being amongst the first of those. They're a very experienced vaccine company and designed their study very well. But also, AstraZeneca, Johnson & Johnson, Novavax, Moderna, Sanofi. We should have choices of vaccines sometime early next year.
Do the hiccups, I guess maybe is one way to characterize it, that J&J and AstraZeneca have seen, does that concern you, or is that sort of a normal course of events?
Well, having 1 or 2 safety stops where you go in and look and see how was it related to the vaccine, that's not surprising, but these are, we need to take these things seriously. And we do have 2 of the vaccines. AstraZeneca still, the FDA trial specifically is still on a U.S. hold, and the Johnson & Johnson recently went on a U.S. hold. Now, those are very professional companies, and they'll dig into it. But if it turns out that there is a safety issue that could knock out some of the 6, and it's amazing to have 6, but some may not be efficacious, and so. It's great we have a second wave of vaccines that our foundation has been funding that come after those first 6. And so even if the first 6, 2 or 3 get approved, their effectiveness in terms of stopping you from being sick and stopping you from transmitting may not be perfect.
And I know you've talked about the need for a global distribution plan for the vaccine. I mean, what could this look like in a best case scenario, Bill? And I guess I should ask you, what would be the worst case? I mean, how could this play out?
Well, I think the likely case, which is fairly positive, is that we have enough approvals and volume in the first half of the year that by summer, we're in a very different place than we are today. The number of deaths down quite a bit, and so that we're able in the second half to almost everywhere open schools back up. We won't be completely back to normal because we won't have got to the 70% plus of the population vaccinated by then to really drive the numbers down. And as long as this disease exists anywhere in the world, the chance of reinfection will always be there. And so we need to participate for our own self-interest, for humanitarian reasons, for strategic reasons. We need to connect up with even the poorer countries and figure out how we can make sure there's enough vaccine for them.
I mean, China recently joined the COVAX initiative, which is a group of 183 countries led by the WHO that work together on development and distribution of vaccine. The U.S. has not joined, so you would anticipate maybe it would. I mean, this sort of puts China in a driver's seat, perhaps, in a way that we're not.
No. China has a number of vaccines that at a technical level look promising, but because they haven't been submitted to a gold standard regulator, they're unlikely to be used extensively outside of China itself. Now, there's a few of those that could go through a process in Europe or the US and then would join the list of options that we have for vaccines. That's only good for the entire world. The US has shown a lot of support for funding vaccines for poor countries. The US is a generous giver to a thing called Gavi that got started back in the year 2000. And so all the US has to do is make a special allocation to Gavi to procure these vaccines. And in fact, some of the bills in Congress, a Republican bill and a Democratic bill, have had sums of money for that international response. And so we're hopeful when there is a stimulus bill, which of course that's not totally clear, but that it will include this money to buy vaccines for the poor countries. That would be in alignment with the U.S.'s past history of being very generous and playing a leadership role in global health.
The administration bill has meddled really in the development and release of the FDA's vaccine approval guidelines. Can Americans trust that vaccines will be properly scrutinized before approval?
Yeah, we did have a very unfortunate incident where the FDA decided that you needed to wait 2 months after you'd enrolled over half of the trial and dosed them in order to have a large enough safety database to see if there might be side effects. And for a brief period, the White House was blocking that or saying that it was inappropriate or claiming that one of the companies had objected to it, which is just not true. Eventually, the FDA did succeed in getting that in to their guidance to the companies, and the companies all have their reputations to defend. So I think if the FDA approves a vaccine, that is the gold standard compared to the regulators, and the professional staff there, is clearly on notice that they shouldn't let politicians tell them what to do.
I want to go back to that comment you made about the stimulus bill. So in other words, international funding for vaccine distribution is tied up in the stimulus bill?
Yeah, in fact, the stimulus bill is the best opportunity to get that because it'll showcase that in order to be a good citizen and stop the disease outside the United States, that the portion of resources required to do that is less than 1% of the stimulus bill, and it'll just be amongst the various measures to help out there. I think given how distracted the country is with an election and all the problems the pandemic has brought, that no standalone bills are, getting done for anything. And so being part of that overall thing, I think that's how the people in the Congress who support these things have decided that's the most likely way for something to get done.
Interesting. Americans have become increasingly wary of vaccines, sadly. And so with this major time to be taking a vaccine next year, we hope, are you concerned about that, maybe resistance even? And is the Gates Foundation working to address that potential problem, Bill?
Well, in fact, the wave of wild stories about the vaccine, that it's, a conspiracy, it's based on evil intent, often referring to either myself or Dr. Fauci. That is a wild new element that I wouldn't have expected. And so you do have to ask, is that going to mean things like mask wearing or willingness to take the vaccine are affected? I'm still hopeful that, there's 30% of the population who understands this is to benefit other people. And so they'll go first. And that is that experience clearly is people are seeing that there's, very, very few side effects and that it's working well, that then we'll be able to get up to the 70% plus that we need, even if the vaccine's very effective, to block the kind of exponential growth in transmission and put it into an exponential decline. And so I think we'll get there, but it's more at risk than I expected because of that political interference and those political messages.
And a lot of those crazy stories are being shared, of course, on Facebook and YouTube and Twitter. Have you or people from your organization been in touch with those companies to try to talk to them about mitigating the spread of that misinformation?
I think those companies are doing more now to do that. This is kind of a wild phenomena, and we've always had some awareness of about vaccines, but not this idea of connecting them to a plot, like microchipping people to track them, or things that even in a fiction story, it wouldn't be all that believable. So I hope we can get the truth to be more interesting than the sort of oversimplistic explanation of what's going on with this pandemic.
Bill, many Americans are forced to wait in line at food banks or go to non-essential jobs that expose them to COVID just to get by. Is another round of stimulus important to an effective public health response?
Yeah, I think we will get a stimulus at some point. Even the Fed chief, who it's supposed to be a pretty non-political job, is really, he's an economic expert, is saying that a stimulus is quite important. And of course, you're seeing the job losses as the industries that had some support, like the airlines, are now losing that support. And so the layoffs, including what state and local governments are going to have to do because they have less revenue. So they're going to have to cut their payrolls quite a bit. And you start to get, if you're not careful, into a negative cycle of the economy shrinking. So although it's, ultra confused, like most things with some of the current politicians, I'm hopeful, and in this case, the sooner the better, that we do get some type of stimulus out.
Obviously, coronavirus is a key issue in the 2020 presidential election. I know you don't like to wade into politics that much, but the two candidates have very different visions with big implications in terms of how to fight to contain the virus. I wonder if you have any thoughts on either plan and then just generally about how COVID is affecting the election.
Well, one thing that everybody may not be aware of is how fantastic the CDC has been historically. They're the best in the world. They train themselves in terms of how to communicate, including getting bad news out and, getting people to take measures that protect themselves. And they've been muzzled. You don't hear from them, and they're top epidemiologists. So, if you want to hear what a politician who wants things to go well and people to, praise that politician, okay, that's one approach. Or if you want to hear from people who understand diseases and disease models, that's another approach. And, that there are many, many issues in this campaign, but one is a bit about, do the experts get to be the ones who are helping to set the policy, or are the experts attacked when they try and share the truth about the tough situation we still find ourselves in?
Obviously, the focus of the Bill and Melinda Gates Foundation is public health writ large, but have you considered weighing in or advising in terms of election policy, simply because it means so many people congregating?
We're doing a lot on the tools and making sure they get done quickly, making sure that even within the country, they'll be distributed on an equitable basis as opposed to who can pay the most. We still have a terrible flaw in our testing system that the government is paying for tests where you don't get the results back within 24 hours. And it's such a waste of money, and it's helping to drive lots of infection because you don't hear your result until well after you've infected other people. And as somebody who works on disease, I keep waiting for sanity. They should run the headline every day: U.S. testing system worst in the world, delayed results being paid for.
I remember early on, Bill, I think maybe it was April, you said that you didn't think things were going to get back to completely normal until the fall of 2021. And it's looking pretty prescient right now. So where do you think we'll be a year from now, October 2021? Are you still sticking with that?
Yeah, well, the slowness on the global response means that fall 2021 won't be completely back to normal. Our goal for that should be that a lot of the service jobs can be back in place, and certainly school can be back in place. But we'll have risk of it coming back into the country during that time period. I hope that there's a small chance that the great new tools, the monoclonal antibodies and the vaccines, won't show good results. The probability of that is very, very low, but it's not zero. So, we're all awaiting the effectiveness data from the 6 trials, and it's very appropriate. We have, many different approaches that at least the phase 1 and phase 2 data did look very good. I think things will be a lot different, closer to normal than to what they are today.
And finally, Bill, your father passed away recently, and our condolences to you for that, and your family. And I don't know if you remember, but in 2009, I visited with you and him in Paris and interviewed both of you for a cover story in Fortune magazine. So that was a lot of fun. And I know your dad was critical in terms of the creation and the mission of the foundation. What was his role in the creation and the mission, and what was his influence on you?
Yeah, he played a critical role in many respects. One is his example is his book he wrote called Showing Up for Life, that talked a lot about volunteering, civic duty. So even I was growing up, my parents were involved in every, Planned Parenthood, United Way, Municipal League, you name it, and felt that was important. They talked a lot about philanthropy and giving, but even more concretely, when I endowed the foundation with the first 20 billion, I was still full time at Microsoft, and so it was my dad and Patty Stonecipher, a great Microsoft executive that Melinda and I knew and trusted. It was the two of them in partnership that created the foundation and got it going, and did a great job, so that as I got more time free and eventually moved over to the foundation full time in 2008, a lot had been accomplished there. And the whole tone, the modesty, the integrity that my dad had this very positive influence that endures to this day.
Bill Gates, thank you very much for your time. Thank you for your work, and best of luck to you.
Thank you.
Up next, how to beat the first modern pandemic with Dr. Anthony Fauci. And later, the CEO of Adobe and our new digital-first economy. We'll be right back.
Not often you meet somebody who has helped save millions of lives, but that's exactly what Dr. Anthony Fauci has done. As director of the National Institute of Allergy and Infectious Diseases, he's one of the world's top infectious disease experts. He's advised 6 U.S. presidents on domestic and global health issues. This year, he's faced one of the toughest public health challenges yet, the COVID-19 pandemic.
Welcome back to Yahoo Finance's All Market Summit. I'm Anjali Kimlani, senior reporter here, covering all things healthcare, which means everything COVID as well. And that gives me the responsibility and the pleasure to introduce you to someone who needs no introduction, Dr. Anthony Fauci, director of the National Institute of Allergy and Infectious Diseases. Dr. Fauci, thank you so much for joining us today.
Good to be with you. Thank you for having me.
I'd like to start off with a debate I'd like you to settle for me, please, and that is, right now we're looking at skyrocketing cases across the country, setting daily records at more than 80,000 cases per day. People are saying that this is a third wave, but I seem to have missed that, so I'd like for you to settle this for me. We're in the third peak, clearly. What wave are we in? Is this an elongated first, a second, a third? Please.
I look at it more as an elongated and exacerbation of the original first wave. If you look at when we got hit badly, which was dominated early on by the Northeastern corridor, particularly the New York metropolitan area, the cases went way up and then came back down to a baseline of about 20,000 cases. So we never really cleared and got down to a very low baseline, which I would consider to be less than 10,000 per day, maybe just a couple of thousand per day. So we stayed at 20. Then you remember when we tried to, quote, open up the economy again and open up the country, there were several states that did that in a somewhat varied way. Some did not adhere very well to the proposed guidelines. And what you saw, particularly along the southern states, Florida, Georgia, Texas, Southern California, Arizona, we started to see a peak that brought us up to around 70,000 per day. Then it came back down again only to about 30 to 40,000 and was stuck at around 40,000 for several weeks to, if not a month or more. And now as we're getting into the cold weather, we came back up again to the worst that we've ever had, which was over 80,000 per day. So if you look at the chart, which you just showed, we've never really had waves in the sense of up and then down to a good baseline. It's been up and wavering up and down till now we're at the highest baseline we've ever been, which is really quite precarious. So, it's kind of semantics. You want to call it the third wave or an extended first wave. No matter how you look at it, it's not good news.
That's a very sobering, and thank you for settling that. We look at, you for guidance for all of what is going on and the advice that you've given, the mitigation strategies. And it seems like you've been able to really get that message out there and directed it to a number of very segmented audiences. We've seen just how insulated some populations are in this country as a result of this pandemic. How do you decide to, take on some of the media requests when it comes to, shows with celebrities or children's shows? I've seen you on a couple of these and you make all the time for it, but what goes into that decision of targeting these specific groups?
Well, I try, and my colleagues also. I believe that public communication, when you're in the middle of a serious situation as we are now with this historic pandemic, is absolutely essential. And you try to get to various segments of society. So, I think you brought up a good point. I've done things where you appeal to children to try to get them to understand without frightening them the crisis that we're going through. You also want to get to the people who are out in the front lines who are putting themselves at risk. You also want to make sure that the healthcare providers realize how much we appreciate them and the risk that they're taking. But you also have to get to another group that I think is a bit more problematic, the people who, for one reason or other, are getting the misinterpretation that public health measures are in conflict with a healthy society in the sense of economically. It's kind of pitting the economic interest against the health interest. And I try and get the point across as often as I possibly can that we shouldn't look at public health measures as something that's an obstacle to the economy. It's a safe and prudent way to get the economy open again. We're not talking about shutting anything down, because often when people hear you want to implement things like universal wearing of masks, physical distance, avoiding crowds, that we're talking about the extreme of shutting society down. We absolutely are not talking about that. We want public health measures to be the gateway or the roadway to safely and prudently opening up the economy again. So you could have both. You could have good public health measures and you could still leave the economy open. But when you do extremes, when you say either shut down or do anything you want to do, it doesn't work that way. There's got to be a mean in the middle there where you can do both.
And that's a message that you've definitely been driving in. And unfortunately, against your best efforts, you've also met with some pushback, either from the public or even from the president. And so I wonder, as you continue to tirelessly send out these messages, you're also met with having lived through, unfortunately, a very public experience of what many of us fear, which is the toxic work environment. And you've said you've stuck strictly to business on this front, but I wonder, does it undermine your message to have the president constantly say things that are the exact opposite of what you're saying?
Well, I would say it's certainly not helpful, but that's something that I really don't think I should be, wringing my hands about what I do, since there's this limited amount of time in the day, and to just get your energy focused, as I say, like a laser on what the proper and appropriate public health measure is, and hope that people hear you and understand that adhering to public health measures now is going to make it easier and more quickly getting to where we want to go, is to approaching some form of normality. Luckily, despite the fact that we're dealing with a very, very challenging period right now, even more so as we enter the cooler months of the fall and the colder months of the winter, that vaccines are proceeding at a very good pace, and we should be on time to get an answer. And I think it'll be a positive answer by the end of this year, the end of November, the beginning of December, so that we can start distributing vaccine to those who are most in need, particularly healthcare workers and the vulnerable among us in the population. So that will help a lot, but it's not going to be solving the problem by itself. We will not be able to abandon prudent public health measures for quite some time right now. We've got to make sure that's going to be part of what we do without closing the country, without closing the economy. We can do this. I'm absolutely convinced if, as a nation, we pull together and do some fundamental common denominator public health measures, that we can get through this with a lot of help in the future from vaccines and adequate therapies.
I'm glad you brought up the vaccines, because that's definitely something everyone is focused on, especially as we know the deadline is coming to get some of those interim results and first looks at the data. I wonder about the effectiveness. That's something that has been a topic of conversation, and I've heard a broad range of commentary from it will block the virus entirely to it will simply diminish the most severe cases, and if anyone experiences the virus, it will actually just be a sort of a milder version. So based on what you know right now and what you're seeing, do you anticipate that the first sets of vaccines out the door will be more of a less effective blocker of the virus?
Well, that's a great question, and that's the primary endpoint of most of the virus, is to prevent clinical disease, to prevent symptomatic disease, not necessarily to prevent infection. That's a secondary endpoint. But the primary thing you want to do is that if people get infected, prevent them from getting sick. And if you prevent them from getting sick, you will ultimately prevent them from getting seriously ill. So that's what we want to do. The first point, which we call a primary endpoint, is that if the vaccine also allows you to prevent initial infection, that would be great. But what I would settle for, and all of my colleagues would settle for, is the primary endpoint to prevent clinically recognizable disease. And that's what we hope happens. And if we do, that will go a long way to diffusing this very difficult crisis that we're in.
Of course, and going to the point that you've made that the vaccine won't be the end of the story, definitely mitigation tactics will remain in place for some time. Going on to the trials themselves, it seems like the UK is setting up to do a challenge trial, and while we already have some vaccines in late-stage trials here, it does seem that with the number of candidates out there, there's some room for using this strategy. Is the US setting up to do a challenge trial as well?
You know, we really don't think that that's necessary. When you have so many infections, I mean, we're having in this country, as we started the discussion off, with over 80,000 infections per day. Fundamentally, when you do challenge studies, there are a number of reasons, one of the most important of which is that there's not enough disease activity out there for your vaccine trial to give you a definitive answer. And even though challenge studies may have a place under certain circumstances, it's not the same as the actual circumstances with which a person gets naturally infected. So although you can get some good information from a challenge trial, the real world information that you want is out in the field when someone is actually being exposed to natural infection, and to determine if the vaccine prevents against that. So right now, we're not planning any challenge studies because we have so much infection going on. We have 5 or 6 vaccines that will be in trial in the midst of these 80,000 per day infection. I think we're going to get enough information that we need to make a decision as to the safety and the efficacy of a vaccine without resorting to a challenge trial.
Okay, and speaking of that an unfortunate number of cases in this country, we know that with the cases rising, you know, being in contact with people is getting more dangerous. When we look at sort of the political climate we're in, having to deal with the campaigning, we still see rallies happening. And I just wonder, you know, with the recent reports of aides to Vice President Mike Pence being positive, should these rallies be canceled at this point, this close to the election day?
Well, you know, I'm not going to comment on whether this or that rally should be canceled, except to repeat what I've said many, many times, and I'll repeat it here, that we should avoid as best as possible congregate settings where you have people who are crowded together. If that happens, it should be outdoors, and if that happens, it should be with virtually everybody wearing a mask. So, you know, there are 5 things that I talk about all the time: universal wearing of masks, keeping distance, avoiding congregate settings, avoiding as best as possible indoor things where there are crowded people indoors, and wash your hands as often as possible. That goes for any circumstance, no matter where it is and who's doing it.
Speaking of the campaigns, we know that election day is near, and there is either going to be a continuation of this administration or a change. I just wonder what that means for you and your work, what a continuation of the Trump administration means versus what expectations you have of a Biden administration when it comes to dealing with the coronavirus.
Well, from my standpoint, I'm going to be continuing to do exactly the same things that I'm doing right now, putting a lot of effort into getting safe and effective vaccines, as well as better treatments. We have some good treatments. We can do better. We have a number of clinical trials that are going on for early infection to prevent the need for hospitalization. That's not going to change no matter what administration is in. And my message, which is a consistent message, will not change because it really transcends whatever administration. The message is the same: the kind of prudent and careful public health measures that I believe will be able to contain the surges that we're seeing right now. None of that's going to change.
It seems like whatever you do does have some level of insulation from some outside forces. We've unfortunately not seen that with the FDA and CDC. And going global, we've also seen the U.S. sort of miss out in participation with some of these vaccine efforts and other responses. I just wonder, we heard Bill Gates earlier talking about how China is not, in fact, in the driver's seat when it comes to the vaccine. But when it comes to the work that your agency can do, if a country like China does in fact get more attention, does that sway the ability of the U.S. and your agency specifically to do research going forward, to have a commanding voice on the response to the virus?
Not at all. I mean, we the NIH and our biomedical research community has always been, is now, and I hope will always be, the dominating biomedical research force in the world. And just about everybody admits that. That's not changed. Whether China does what China wants to do or Russia does what Russia wants to do, what we do with regard to science, the development of therapeutics, the development of vaccines, is something that the world has always looked upon us for leadership, and it continues to this day.
When you talk to some of your foreign peers, I'm sure you're in constant contact. Is there anything that we could be doing better and should be implementing, or other strategies that we haven't tried yet?
Well, I mean, you're absolutely correct. I am in close contact with my scientific colleagues and my public health colleagues, which long antedated COVID-19. So those relationships stay the same. The part of your question, when you look at what we've done, could we've done anything different? It really depends on what you mean. From a scientific standpoint, I think what is going to turn out, and I hope so, I don't want to get overconfident in it, but I think one of the real successes that we're going to see over the next couple of months is what's happened in the arena of vaccines, as well as, in some extent, newer and better therapeutics. So I think we can look forward to something positive there. Could we have done things better from a public health standpoint? Of course. Whenever you're dealing with a very difficult situation like that, you can always look back and say there were things that we could have done better and that we should have done better. But that's just the nature of the situation we're in. I think anyone who says, no, we've done everything perfectly is really not looking at the reality of the fact that when you have such challenges like that, whether you're in Europe or in Asia or in the United States, we could always look back and say we could have done a better job.
Certainly, and with the changing information, I've said often we are watching the scientific process, under a very public light in a way we never have before, and I think everyone's privy to that now. Looking at some of the things we've learned, I think this is something that still weighs on some people's minds. Or what exactly should we be doing? So, for example, bringing your groceries in, is that something that you should still be wiping down your mail? What do you do, Dr. Fauci?
I get asked that question all the time. Well, we know that this virus overwhelmingly, predominantly is transmitted by the respiratory route, by either droplets that are large enough essentially to travel to get to someone's nose, eyes, mouth, or aerosol a little bit. We don't know exactly what the extent of the aerosol is. We know it does play a role. Exactly how much is still being worked out. We also know that the virus can live on inanimate objects. But if you look at the transmissibility, the epidemiology that we have a lot of experience now, that is very likely a very, very minor aspect of transmissibility. We can't say it's zero. It certainly is real and is finite, but it's minor. So I think we should spend less time worrying about wiping down a grocery bag than we should about just washing our hands frequently. So you ask me what I do when I come from the grocery store, or when someone gives me a takeout bag, which I do a lot now because I don't go into restaurants and sit down. I want to keep them going financially, so I do a lot of takeout. So I do have a bag that I bring into my house. Instead of worrying about the bag, I'll open the bag and then I'll just wash my hands thoroughly, which is what you should do. I think doing that natural public health measure and not worrying about touching things, things that might or might not have anything to do with transmissibility, just focus on washing your hands.
Well, thank you for answering that one. That was a personal one for me. Dr. Anthony Fauci, thank you again for your time. Director of the National Institute of Allergy and Infectious Diseases and the U.S.'s top epidemiologist. Thank you again.
Good to be with you. Thank you for having me.
Hello, everyone. I'm Neela Richardson, Principal and Investment Strategist with Edward Jones, bringing you a Minute Market Update. It goes without saying that COVID-19 pandemic has had a major effect on our overall health, whether it's fear of the virus, concerns of being isolated, or for many, the uncertainty of being unemployed in a labor market that's been changed drastically. The mental toll of the pandemic has been profound. When it comes to mental health, younger generations have actually had a tougher time. In a recent study by Edward Jones and Age Rave, roughly a third of Gen Z and millennials said they had suffered mental health declines since the pandemic began, while only 15% of baby boomers and 8% of the silent generation respondents said the same. At the same time, it has also brought these generations closer together. While almost half of adults with living parents said that the pandemic has caused them to worry about their parents more, they've also said they're talking with them more often. For more information on this study, visit edwardjones.com/new retirement.
Hello, everyone, and welcome back to the Yahoo Finance All Markets Summit Road to Recovery. I'm Andy Serwer, Editor-in-Chief. Just wanted to give you a quick market update. Stocks taking a beating today as worries about the coronavirus continue to hit the markets. The Dow Jones Industrials down about 580 points or 2%. S&P down 1.6%, more than 50 points. NASDAQ down 1% at 120 points down. Stocks lower as new data showed a jump in COVID-19 cases in both the U.S. and in Europe. Restrictions tightening across major countries overseas, raising the specter of a further pullback in business operations and deeper anchor on global economic activity. Airline stocks also taking a hit. We'll be speaking to Ed Bastian of Delta later today. Delta down about 4% right now, as you can see. And obviously, these concerns about the coronavirus not going away, as you heard from our conversations with Bill Gates and Tony Fauci. Stay tuned for much more, though, from our All Markets Summit. And coming up next, an interview with Shantanu Narayan, the CEO of Adobe. Stay tuned.
Shantanu Narayan is a 22-year veteran of Adobe and has been the CEO since 2007. Adobe is one of the world's biggest and most diversified software companies, supporting everyone from students to the world's largest corporations. Under Narayan's leadership, Adobe has posted record revenue, and he has positioned the company to capitalize on the work-from-home revolution in a world transformed by the COVID-19 pandemic.
Hi, I'm Jen Rogers. Thanks so much for watching. And Shantanu Narayan, thanks so much for coming on and joining us.
Thanks for having me, Jen.
So before the pandemic, you talked about how every enterprise realizes they have to be a digital business. And I'm not sure that CEOs and employees realize just how quickly this was going to be proven true. Is the pace of adoption that we have seen in this part of the year recently, the uptick that you've seen, do you think it's going to slow down, or does this trajectory continue?
Jen, my take on what has happened in the pandemic, to your point, is it's certainly been an inflection for adoption of technology. But the tailwinds that we're seeing across all three of our businesses, in fact, what's happening on the creative side, what's happening on the document side, and certainly what's happening on customers engaging with customers, I don't think you're going to be putting the genie back in the bottle. And all of us have seen the benefits associated with engaging digitally. And any company that doesn't have a great web presence, a great mobile app, the ability to do commerce, and the ability to deliver a personalized experience, I think is going to be disadvantaged. So I believe this is going to be fueled for years to come.
So you just talked about the three parts of the business. Adobe posted record quarterly profit of $3.23 billion last month. That's up 14% year over year. Growth was actually spread pretty evenly if you looked at it across the segments. Digital media, creative, both growing some 19% on revenue basis. Document Cloud, though, was up 22%. And I want to actually zoom in on the document business. I think it touches everybody that's working at home, their life a lot with PDF, the electronic signature solutions. Do you see any reason to have a printer anymore?
Well, as you know, Adobe also created PostScript, and we revolutionized the desktop publishing. So I think, while there are a few cases where paper will still be used, when you want these creations that adorn the wall, when my kids do things, without a doubt, to your point, this automation of inefficient manual processes is only going to get accelerated. And we used to always talk about the fact that it was nuts that in this day and age, people somehow thought that a physical signature was more legitimate than an electronic signature. And so, without a doubt, more and more of these processes are going to be completely automated. You're going to get a PDF as verification for the fact that the transaction is complete. And I believe that this will also actually allow not just within an enterprise, between an enterprise and consumers, but cross-country trade also to, just continue to expand and become completely automated.
When we're talking about paper and you're talking about signatures, really the most important piece of paper right now is a voting ballot. Can you see a future where Adobe could be part of the solution, where we would be able to digitally verify and have secure online voting? Or is that something that is always going to need to be printed out?
Well, I think to your point, clearly the voting process itself and when you go into a voting booth has become electronic. If you remember, we used to have to write that out, and now increasingly a lot of that is electronic. But there are some countries, for example, in India, where the voting actually goes on for well north of a month. The entire process of how you understand the voter registration list and manage all of that, PDF has been used, to a very significant extent in those particular cases. And the adoption of forms, as all of us are increasingly filling out forms, I do see a day where you're going to be able to, create this form. You're going to be able to authenticate who you are and validate it, and then just submit it. And I think that will make it fraud-proof. That'll make it faster. And hopefully, I think to your core question, it'll prompt more and more people to vote, because at the end of the day, that is our biggest civic responsibility.
Right now, there's also a lot of focus on truth in social media and in news, whether it's disinformation or deep fakes. Are you worried at all about manipulation of images and content?
Well, Adobe is taking a really critical role at looking at all the content. As you know, our software is used to create the world's content. And a year ago, we actually talked about what we are calling the Content Authenticity Initiative, which is to really say, how do we take everybody in the content chain and work as a combined organization and with leadership to make sure that people can verify that the content that they're consuming is authentic. It is a really critical part. What we're doing, we've partnered, as you may realize, with companies like Twitter and the New York Times. I think you'll see more announcements with platform providers and chip manufacturers. But we cannot do this alone. I think in our software, when you, Jen, create a piece of video, we want you to be able to sign that and say this was created by Jen Rogers. And then the distributor, so in this particular case, if Yahoo Finance is distributing that piece of content, it would be great if the distributors say, this is how you can verify the authenticity of somebody who is standing by it, much like happened with, paper-based publications when people started to create the byline. And then we will use artificial intelligence and machine learning to really understand, once that content has been posted, has anybody changed it? And so I think this will take a few years, but it will require tremendous cooperation. It's an area where we have significant resources, and we're really pleased with how people have taken it. But at the end of the day, it will also depend on the consumer, because when the consumer is consuming content on Yahoo Finance, if the mindset is that we have to make sure that this was actually a piece of content that was signed by who it claims to be, I think that would be the last step in everybody saying, okay, the entire content chain, all the way from authoring, where Adobe plays a role, to distribution, where you play a role, to the consumer, the expectation is that they're going to check on it.
So there's a lot of parties that are responsible along the way. Do you think the government will also be involved in coming up with a solution here?
Well, I think in a lot of these cases, what is happening is that the technology is moving so fast that, trust. I'm sure you think about it from your perspective of the trust of your brand with your consumers is more important than anything else you can do, because that's why people tune in. And so we view that very much the same, which is we will partner with the organizations, whether it's on data and privacy and on understanding it. But I think ultimately we also have to hold ourselves accountable and not just wait for regulation, because the technology is moving so fast, customer expectations are moving so fast. And so in our particular case, what we are doing is actually writing position papers, and whether it's with the IDEA Act in the US or with other places like the EU, we're approaching them to say, hey, here are ways in which I think industry needs to coalesce to further advance what happens in this particular area.
So right now we've had so much going on with the economy given the pandemic, a little bit of an uneven recovery. We are starting to see a little bit more M&A activity recently. You have always been pretty acquisitive, even though the recovery seems uneven. Do you think there's some buying opportunities out here for Adobe?
A couple of thoughts on that, Jen. Firstly, we're never bottom feeders, and so we're not looking, to acquire things just because they're distressed. I mean, that is not. We acquire companies when the technology is great, the people and the culture really fits with us, and we believe that we can scale that particular business. We are very pleased with the portfolio that we have. When you look at all three of our businesses, to your earlier point, there's tremendous growth, but there's a lot of innovative things that are happening. I think the one area where we're all trying to understand is because culture and values are so important to us as we acquire people. I mean, when we acquire a company, the biggest asset that we're acquiring is frankly the people. And so I think we'll all navigate in this pandemic environment. How do we understand culture and how do we get to know the leadership that will be critical, if we should make an acquisition? But we're always on the lookout, and we prefer, small businesses that we can completely scale, that have a really great technology base and a culture and value system that resonates with Adobe.
So culture has really helped companies, I think, stay connected at this time, which has been so critical as everybody has been working separately. But it's really been more than just the pandemic in terms of culture recently with the racial reckoning that's been going on in this country. Many Silicon Valley companies have really been embracing different social justice issues. And then other companies, most recently Coinbase has been out there saying that they want to be apolitical. What is your strategy for Adobe?
Well, since the company was founded, we've had a very simple philosophy, which is if you don't treat people equal and if you don't understand that your customers are diverse and you don't serve them appropriately, you're never doing the right thing. And so from our perspective, we actually have a set of principles that we've written down, and the set of principles helps us decide when is this an issue of equality. And given our platform and given the fact that the company has grown and we're one of the largest software companies in the world, I think it is incumbent on us to use that platform when appropriate to talk about issues that are important to us. The social injustice that you referred to, we were vocal about some of the things that needed to be done, because racial injustice is not something that we can stand by and see. But it's also the same set of principles that allows me to look at it and say, is this something that is my personal opinion, or is this something that the company stands for? And what I think has been significantly different, I've been at the company over 20 years, I've been in my role for 12 years. I think the next generation of employees, the millennials who are also joining the company, they have a point of view where they want to hear from their leadership as to what the company stands for. So I love the set of principles that we have. We've been vocal when it's an issue that's important for us. We spoke out also on some of those immigration issues. But there are other issues where I believe that it's incumbent on each individual to make their decision. And my opinion is just one opinion as opposed to the opinion of the company. And I think that served us well. So you won't see us speak out about every issue, but on issues that are about equality, you certainly will hear Adobe speak up.
So as you noted, you've been at Adobe for a long time, and we do have this millennial generation coming up. Is it harder to be a leader now than it was 20 years ago? Are they asking for more from their bosses? And are all your stakeholders, in a way, asking for more?
First, as it relates to the millennials and this next generation, I love it. We have had a very aggressive college hiring program, and these people are scary smart, and their energy. I mean, if there's something that I miss, it's not being in the room when you have, the summer internship program or the new college graduates, and you're in that room and they're just questioning you about everything that Adobe does. And, that really tells you that they're there to question the status quo, and they're there to push the envelope forward. And so any company that doesn't realize that you are trying to target them as employees, but also as customers, frankly, in terms of how they will look to companies when they make their purchasing decisions or how they innovate. So on that question, on that front, no question. We love the fact that we can have as many millennials in the younger generation, and frankly, all around the world. College hiring is the most ambitious way in which we hire people. To your other question associated with, the various stakeholders that people have to deal with, we've always felt that, employees, customers, but the communities in which we participate are an important part. Well before it became fashionable in Silicon Valley, John Warnock and Chuck Geschke, who started the company, we gave away 1% of net profits, to causes, and we were profitable from year one. And so, a lot of companies give away profits, but they're really not profitable yet. And so we've always believed in giving back to the community. But you're right. I mean, whether it's sustainability, whether it's climate, whether it's social injustice, whether it's, commenting on political things, the expectations of leaders is different right now. But again, I'm so fortunate. I mean, between Ann Lunas, who heads up our, entire marketing organization, and Gloria Chen, who's our Chief Human Resources Officer, and Dana Rao, who's our Chief Legal Officer, we have a group that enables us to have a conversation about, what is it that represents what Adobe stands for. And so I think writing down those principles has helped it not appear like we're shooting off the cuff when it comes to one of these important issues for stakeholders.
It is interesting hearing you talk about the history a little bit, because Adobe has been front and center on issues before. It has a long history. And I think it's fair to say that we're all content creators now. Like, literally everybody is. My kids turning in their digital homework. Here I am talking to you this way, a CEO making a presentation. And Adobe is actually involved in many of those experiences. But in some ways, on the consumer front, you're not as big a household name, maybe as, like Netflix is, which is a verb. Are you okay with that? Would you like to be a household name, or do you think that Adobe's role is to be just in the background of everything?
We certainly, when you think about the content workflow and creativity in particular, Jen, to your question, absolutely, our mission and our belief is that we need to deliver creativity for all. And you're absolutely right in that we probably started at the tip of the pyramid. We delivered the world's best creative products, but the halo effect associated with using those, really made other people who didn't necessarily classify themselves as creative professionals say, hey, Adobe is still the best products in the world and I'm going to do it, whether it's Photoshop or Illustrator. We have embarked on a very aggressive strategy to make sure that our tools are accessible, are affordable. Even when we completely pivoted to the cloud, as you know, it made it so incredibly affordable for somebody to use it. But I'll name a few products. I mean, we just released Photoshop Camera, which allows you to take pictures. We were talking about filters before we went on air, and that's something that you can do, a magical job of. Photoshop Express, we've really embraced mobile, not just as a consumption device, but as a creation device. And so with Spark and a whole bunch of new suite of products, Adobe Fresco to be able to draw. And, we're driven a lot by these hypotheses. So we say, everyone has a story to tell. It's crazy that you somehow believe that you can draw better with a mouse than you can with a stylus. So let's create the world's best drawing products. And we've done that. We've said that Illustrator is coming to the iPad. And Adobe Max is the largest content creativity conference in the world. And you'll be seeing some incredible innovation. And, one last thing that I would say there, an area of particular passion for me is education. And when you think about it, it's crazy that in this day and age that most education projects are still text. And maybe a few pictures and not animation and interactivity and video. And, we want to be one of the companies that helps transforms how people communicate.
So Adobe Max is your marquee annual event. Usually you could have 15,000 people getting together, and of course it's virtual this year. Reed Hastings, Netflix CEO, has said that working remotely is a pure negative. So you have all these creative people that would normally be getting together. You have your finger on the pulse of creativity. Do you think creativity suffers at all as we work remotely?
Two separate answers to that, Jen. I think the first answer to that is, as it relates to people working remotely, focusing on collaboration and focusing on how we can make people more productive when they're working remotely is absolutely a huge area of focus for us. It's actually something we've done with a product called XD, for example. We allow simultaneous editing of things, and that used to happen in the creative profession because a freelancer would maybe talk to an agency or talk to a corporation completely remotely. And so from that point of view, I am a big believer in then providing more creative collaboration tools is something that Adobe can really distinguish themselves on. To your other point of, the whole creation process and co-creation, and whether it's for creatives or whether it's for office workers, what's missing? My belief is that we have seen incredible resilience from our employees, and they've all, moved to working at home. When a project is well defined and it's existing, I think it's much easier for that project for people to work remotely.
Shantanu Narayan, thank you so much for joining us. I hope we can get together one day in a room with a whiteboard and we won't just be virtual.
I really look forward to that. Thanks for having me again, Jen.
Up next, former New York Fed President Bill Dudley on what's needed to put us on a solid road to recovery. And later, how to protect our food supply with Land O'Lakes CEO Beth Ford. We'll be right back.
He served as the president of the Federal Reserve Bank of New York from 2009 to 2018. During the same period, he was vice chairman of the Federal Open Market Committee, a group responsible for crafting the nation's monetary policy. Dudley played a key role in managing the Fed's response to the 2008 financial crisis. He's a vocal defender of the central bank's independence and isn't afraid to clash with President Trump or anyone else who wants to roll back laws designed to keep Wall Street in check.
I'm Brian Chung, and plenty to talk about here, even though this week is a Fed blackout week. That's the terminology that they use whenever the Federal Reserve officials that are currently in their positions don't talk ahead of a policy meeting, because we do get another Federal Open Market Committee meeting next week. But that doesn't stop us from having an engaging conversation still on the Federal Reserve. And as they just mentioned, we do have former New York Fed President Bill Dudley here joining us. President Dudley, how are you?
Great to be here.
So I want to start off things with the markets right now. It does look like the Dow is sinking about 700 points right now. From your view, what's really getting markets all jittery? As we know, the prospects for fiscal policy have really weighed on equities, but what are the biggest risks that you see right now facing markets?
Well, there's two things going on, right? One, the pandemic's worsening, and people then worry about that having consequences for people, pulling back in terms of more social distancing. So that obviously that's a big negative. And the second big negative is obviously it doesn't look like there's going to be fiscal policy stimulus before the election. And I think after the election, it's also going to be extremely difficult to bring Congress together to pass legislation. So I think you have a potential for no fiscal stimulus until, well into next year.
Well, the lack of fiscal stimulus, does that weigh on the Federal Reserve as we head into that November FOMC meeting next Thursday? Do you think that puts an onus on the Federal Reserve to do more, perhaps quantitative easing, whether that's ramping that up or having more targeted purchases on the long end?
Well, they could do more, but the problem is that the efficacy of monetary policy is, rapidly diminishing. I mean, the Fed could do more asset purchases. They could keep rates lower for longer. They could even contemplate doing things like yield curve control or moving to negative interest rates. But would it really make a difference? I think the answer is no. The Fed's done what it can do to basically make financial conditions accommodative and interest rates very low. We're already seeing the interest-sensitive sectors of the economy doing fine. So if the Fed did more, what would be the effect on the economic trajectory? It'd be very, very modest. That's why I think you'll continue to hear from Fed officials the need for more fiscal stimulus. We fell off the fiscal cliff at the end of July. Hasn't had much negative consequence up to now, mainly because the fiscal stimulus was so large and it boosted household savings, and because the reopening of the economy that we saw through the summer into the fall also helped support economic activity. But if the reopening of the economy is stalled and the fiscal stimulus effects from before wear off, I think you definitely are going to see the monthly economic statistics show a distinct weakening trend in coming months.
Now, you mentioned that the Federal Reserve could consider other tools. It's been very clear from what Chairman Powell and other Fed officials have said that they're not out of ammunition by any means. But you mentioned negative interest rates. Do you feel that that's a possibility that could be on the table for the Fed to do if conditions really deteriorate significantly worse?
No, I don't think they're going to do that. There's a FOMC meeting a while ago where they reported that all participants were opposed to moving to negative interest rates. So nobody was even slightly interested in it. I think the assessment of the FOMC, Federal Open Market Committee, is just that the cost of moving to negative interest rates exceeds the benefits. And I think after showing so much reluctance to even contemplate moving to negative interest rates, if they were actually to do so, I don't think it would be reassuring to people. I think people would actually take that as a sign that the outlook was even worse. The last thing you want to do is introduce a new policy that scares people. You want people, when you introduce a new policy, you want people to be more reassured. And I don't think moving to negative interest rates at this juncture would be helpful in terms of supporting economic activity.
So I want to rewind the clock back. For those that aren't aware, you managed the Fed's trading desk at the beginning of the last crisis in 2007. You were then bumped up to head the New York Fed, and in 2009, really in the thick of the crisis. The concern in the spring was that the health crisis was going to evolve into a financial crisis if the Fed didn't do something. I guess in your assessment, I know you weren't at the New York Fed during this particular COVID-19 event, but how close were we to going into a full-blown financial crisis? How do you think the Fed's actions played into what we ultimately had as the outcome?
Well, I think that markets were really close to a period of not working, of dysfunction. The Treasury market was in turmoil in March and April as people were unwinding levered trades, long cash, short futures, and as the dealer community had a lack of capacity to essentially provide balance sheet to people who needed balance sheet at that time. Also saw a lot of stress in the corporate bond market and the municipal bond market as people started to contemplate a much worse economic outcome. I mean, the pandemic came on so quickly, and we went from a fine economy to a horrible economy just within a few weeks, and that put a tremendous amount of stress on markets. I think the Fed appropriately came to the rescue and said, we're going to be the market maker of last resort. We're going to buy treasuries, we're going to buy agency mortgage-backed securities. And then with the CARES Act and the support from the U.S. Treasury, introduced a whole slew of programs to backstop markets, backstop the corporate bond market, the municipal bond market. And I think with that, with the Fed there as the buyer of last resort, that really reassured private sector investors that markets would be okay. And the markets subsequently recovered quite sharply. So the Fed, I think, did a good job during that period of time. And, they were in good position to do that, in part because of what happened during the great financial crisis. A lot of these tools were on the shelf. They'd already been developed before, and so they could be taken off the shelf quite quickly. And because they had been effective last time around, I think it also increased the expectation that they would work in this particular crisis.
So I'm wondering if we could drill down specifically on what happened in the U.S. Treasury markets. That's the most liquid, deepest market in the world, and a weird dynamic where Treasury yields were spiking up in the second week of March, despite the fact that there was a sell-off in equities, not typical risk-off behavior. What exactly happened in your view? There's been talk about maybe a Darrell Duffy-like way to do sort of central clearing of U.S. Treasuries. It seems like there's some acknowledgement from Randy Quarles at the Fed to reform in some way the Treasury market. What do you think the remedy is?
Well, people are still unpacking exactly what happened in the Treasury market in March and April. Initially, it was all about the hedge funds having these levered trades, long cash, short futures. But then as people looked into it with more detail, they realized there was a lot more than that going on. And in fact, the lack of capacity among the dealer community to provide balance sheet, I think, was an important factor. I think what we found is that the Federal Reserve is the only entity that actually has an elastic balance sheet that can grow to supply liquidity to meet the demand. And I think what the Fed's going to be looking at is, can we have something in place, not ex post after the fact, but ex ante, that's available as a place to people to go if they need to finance their treasuries or the agency mortgage-backed securities. If you had that in place, it would do two things. One, people would know that their balance sheet, there was balance sheet available that they could finance these securities, so they'd be less hesitant to dump those securities. And that would be very reassuring to people. So I think, a standing repo facility of some sort, I think is something that the Fed's going to take a very long look at. Now, doing that is not going to be something that happens very quickly because the devil's in the details. If you have a standing repo facility, what rate do you charge? Who's eligible? How does it work? How does the plumbing work? In other words, how do you actually do the transactions? So I don't think that's something that's going to arrive in the next 6 months or a year. But I think the Fed is going to do a very deep dive into what happened in the Treasury market and ask themselves the question, what can we do to make the Treasury market function even in bad times? Function well in bad times.
Well, let's zoom out because I don't know how many viewers we may have lost talking about the standing repo facility. But in regards to the Fed's overall actions, right, lowering interest rates to near zero, quantitative easing, as you mentioned, with the expanding balance sheet, the Federal Reserve, though, has called on fiscal policymakers to really take the leg from here because they can do more targeted support. Do you feel the Fed has been aggressive enough or maybe too aggressive when it comes to calling on the White House, calling on Congress to do some sort of CARES too?
I think they're just saying what's obvious, that monetary policy can only do so much. I mean, monetary policy can reduce the level of interest rates. Monetary policy, as we've seen, can restore market function. And the Fed has done both of those things, but that's sort of it. The Federal Reserve cannot create income, and only Congress can do that through fiscal support. And the coronavirus is about forces that are pushing down business activity, which has a depressant effect on income. And it's also causing a lot of business failures. It's also going to weigh on the economy going forward. And the Fed can't do much about that. So I think the Fed is, properly shown the flashlight on the need for fiscal policy, that monetary policy can only do too much. I think it'd be problematic for the Fed if they didn't say anything, because then the Fed would be somehow implying that they can take care of the entire problem when they can't.
And this brings up a very interesting question about Fed independence, which brings us to the op-ed that you wrote last August that suggested that the insurance cuts at that time, well before COVID, were perhaps enabling President Trump's tariff war with China. There was a lot of pushback from even within the Fed itself to that op-ed. I guess I'm wondering, we're a year out from that. Do you have any regrets about publishing that piece in Bloomberg Opinion, or any sort of, follow-up thoughts given the nature of what we're in right now?
No, I mean, the piece was basically a thought experiment, basically saying that if one thought that your actions were, going to enable or facilitate a bad policy, would you want to actually take those actions? That's what I was actually saying, and it was a thought experiment. I wasn't saying that the Federal Reserve should behave in a way that somehow tries to affect the election outcome. That'd be totally inappropriate. The Fed needs to set monetary policy based on achieving its full mandate objectives. And I believe that then, and I believe that now.
And I guess that brings up, though, right now, because as we kind of talked about the Fed officials kind of pressing on fiscal policymakers to do something, it's not necessarily to the exact content of what you were writing about last August, but it does bring up what is the proper interaction between monetary policy and fiscal policy during times like these? Because yes, there's supposed to be Fed independence, but right now we have Steven Mnuchin and Chairman Powell working together hand in hand to engineer this crisis. Now, obviously, these are different times. So what is the appropriate balance of the interaction between the Fed and fiscal policymakers, even outside of crisis times? We know that there's a congressional liaison office at the Fed. They had a hand in the engineering even of the minutia in Dodd-Frank during 2010. So I guess what's the proper balance between the communication and the level of coordination between fiscal and monetary policymakers?
Well, I think you want to have good communication so you know what the Treasury's thinking and what the Fed's thinking. I think in the current environment, there's not a real conflict. The goals of both the fiscal authorities and the monetary authorities are to try to support the economy and generate a sustainable economic recovery. I think the independence of the Federal Reserve comes into question when the political timetable leads to political pressure to pursue a program of interest rates that are inconsistent with the Fed's objectives in terms of employment and inflation. So if you got into a situation where inflation was rising, yet the political leadership in Washington was trying to put pressure on the Fed to keep rates low, despite the fact that inflation was rising, becoming problematic, that's when the Federal Reserve's independence becomes at risk. But I don't think there's a real issue right now in terms of the Fed's independence. I don't see a conflict. What the Fed wants and what the administration and Congress wants are the same thing, a sustainable economic recovery.
And at the same time, though, the Federal Reserve has gotten a number of credit, a lot of money allocated to it from the original CARES Act. It only used up about 195 of the up to $454 billion to backstop corporate markets, municipal debt markets, what have you. But there's been some criticism that maybe the Federal Reserve hasn't been as willing to take on more credit losses in those programs to more aggressively offer help to the states and local municipalities that really need it, or to the small and medium-sized businesses that are supposed to be targeted under the Main Street lending program. What say you to whether or not the Fed should be taking on more credit risk, or if they have it calibrated just right now?
Well, I think for most of the programs which are backstopping markets, the amount of takedown of the program isn't really that important in terms of judging the effectiveness. I mean, I think the Fed has restored market function in the corporate bond market and the agency mortgage-backed securities market and the municipal bond market, even though they haven't actually purchased that many actual securities. And they don't have to because they're a credible backstop. I think the one area where people are more critical about the Fed is the lack of take-up of the Main Street lending facility. That was a program designed to provide loans to medium-sized businesses that were bigger than what was relevant for the Paycheck Protection Program, but smaller than large corporations that have access to the U.S. capital markets. it's possible, one could make the case that the Fed could make the terms of the Main Street lending program more lenient and therefore get a greater amount of take-up. I think the fundamental problem of the Main Street lending program, though, is actually quite different. If banks have good loans to make, they're just going to make good loans. They're not going to participate out those good loans to the Fed.
So let's expand out to the broad topic of liquidity facilities. The Federal Reserve has 13 of them stood up. Now, what's interesting is that I was talking with a source in the beginning of March about specifically a primary dealer credit facility, which the Fed had launched at that time. In 2009, it was the biggest deal. It was, wow, the Fed is doing this type of lending to primary dealers. Right now, it seems like it's an afterthought. People forget that the PDCF exists because of everything that the Fed's been doing with corporate debt markets, municipal lending, things like that. How has the Fed's function as a lender of last resort? We don't need to get into the Badgett, dictum or anything like that, but how has that changed over the last 11 to 12 years?
I don't think it's changed in a particularly big way. I mean, I think what's happened this time is the Fed arrived before the crisis actually got underway in terms of the financial sector. Last time the Fed arrived sort of grudgingly as the financial crisis was well underway. I mean, the primary dealer credit facility in 2008 was enacted, as Bear Stearns was actually failing. The second thing I think is an important distinction is that the financial sector itself is in much better shape. I mean, the things that were done to require big banks, which now include most of the major securities dealers, to hold more liquidity, more capital, stress testing of capital means that the people have confidence that the banking system is going to make it through this crisis period in reasonably good shape. Last time, it was the loss of trust in the banking system that contributed to the downturn in economic activity. So I think the financial system this time is mostly working well, especially in the banking portion. The non-bank portion has shown a few signs of strain. But then the Federal Reserve has come in and basically provided support there through these backstop market-making facilities.
And you bring up a good point about financial stability. That's a huge part of the reaction function for the Fed now under its new framework, which it released at Jackson Hole virtually in August. So the idea here being that the Fed would tolerate inflation moderately overshooting its 2% target, also prioritizing maximum employment. But that's not unconditional, that the Fed could still raise rates early if it felt like there were financial instability risks that were bubbling up in whatever market you want to look at. What do you see as that meaning? What could that look like if financial stability risks kind of end up coming up and then the Fed says, you know what, we need to lift off a little bit early?
I think the bar is pretty high to doing something like that because monetary policy just isn't a very good tool to try to tap down financial excesses in particular markets. So the Fed could, in theory, decide to tighten monetary policy early because they're worried about markets becoming too exuberant. But I think the bar to doing that would be quite high. I think the Fed would be looking at other actions, for example, the countercyclical capital buffer, where they could raise capital requirement for banks, or just jawboning the market and saying, look, this is an area where we think markets are excessive valuation. The Fed, unlike 10 years ago, the Fed now publishes a semi-annual financial stability report, so it actually has a medium to communicate to people about how they see financial markets. The reality is, though, in the United States, the Fed doesn't really have great tools to tap down market excess.
So I want to ask about the ballooning balance sheet. You manage the market desk at the New York Fed, which executes the U.S. Treasury mortgage-backed securities purchases when the Open Market Committee decides it wants to change the pace or the types of purchases. John Williams, who is currently at the New York Fed, has a lot of work, I'm sure, ahead of him with the amount of purchases that they made at the beginning of this crisis. But did you ever think you'd see a day where the Fed balance sheet would be at $7 trillion? And what's the consequence of that?
Well, I mean, the honest answer is no, I didn't expect it to be $7 trillion. It was certainly from $4 trillion in just a few short months. That was a very rapid increase in the size of the balance sheet. That said, there's no maximum limit to the size of the Fed's balance sheet. And given how monetary policy is executed today, in other words, by setting an interest rate on reserves, the Fed can operate monetary policy totally independent of the size of its balance sheet. So if the Fed needed to go to a $10 trillion balance sheet, they could, and they would still maintain control of their ability to separately execute monetary policy. The big issue, and I think from the Fed's big balance sheet, is the Fed has interest rate risk. Most of their liabilities are these short-term reserves. and they hold long duration assets. So in principle, if short-term interest rates went up very, very sharply, the Fed's net interest margin could be under pressure, and that would mean that the Fed would, probably earnings would be less, and the amount of money that the Fed would pay back to the Treasury would be quite a bit less. And if you took this, to its logical conclusion, very high short-term interest rates that occurred very, very rapidly would actually generate losses on the Fed's balance sheet. But that's not something that the Fed's very worried about today, when they don't even think that they're going to be tightening monetary policy for 3 or 4 years at a minimum.
Well, a lot to chew on right there. We talked about everything. We even squeezed a mention of the PDCF in addition to repo markets in there, so a pretty in-depth conversation. But again, former New York Fed President Bill Dudley joining us here on Yahoo Finance at the All Markets Summit. Thank you so much for stopping by.
Thank you.
And coming up next, the changes to our food supply during COVID with the CEO of Land O'Lakes, that's Beth Ford, and also later, the best way to safely reopen the economy with Walmart's Doug McMillon. We'll be right back at Yahoo Finance's All Market Summit right after this.
The Yahoo Finance All Market Summit is sponsored in part by the International Well Building Institute.
Ford has run Land O'Lakes since 2018. It's one of the largest food and agricultural cooperatives in the U.S. It's fully farmer-owned and will be in business 100 years next year. Ford has helped lead the farming sector through multiple recent challenges, including COVID-19, tariffs, and extreme weather conditions. For the first time in Gallup's 20 years of polling Americans' views of business and industry, farming and agriculture is now number one.
I'm Alexis Christoforous with Yahoo Finance, and joining me today is Beth Ford, President and CEO of Land O'Lakes. Beth, it is so good to see you again. Thanks for joining us on the All Market Summit.
No, thanks for the opportunity. Looking forward to the conversation.
Well, there's a lot to get to, but look, I want to start with this. I don't need to tell you how much people are baking and cooking throughout this pandemic, myself included. And I know you're on track to sell something like a record 300 million pounds of butter. This would be a company record for you. Do you see demand remaining this high? Is it sustainable?
Well, it's certainly elevated. You know, it's really interesting. We're stepping into November, December. That's normally key season for the butter business, right? Because that's normally when we're all baking and cooking and getting together. We've seen this incredible elevated amount of butter being sold and cheese as well. We have a cheese business, et cetera, since the start of this pandemic. And, you know, so do we see it staying elevated? Well, I'm really going to be interested in what that holiday season looks like. Normally there's a surge. We're starting to see our order book is really quite full for October as we step into that filling of retail shelves. I think it'll stay elevated certainly towards the end of the year. And then the question really goes to what is the reopening? Because a lot of dairy products are sold into food service, right? Bulk butter type stuff. And so will there be a shift? How quickly does that open? What is that dynamic? I do expect that we'll continue to see elevated levels through the holiday season, and then we're going to see what the reopening plans look like in next year.
How have you been keeping up with demand? What does this supply chain look like? I remember I went to the market not long ago looking for unsalted butter because I wanted to bake. There was only salted butter out there, and I had to wait a while. So what's it like keeping up with that demand?
It has been really, really amazing. You know, it's not that there's not enough milk to make the butter. Right? Milk production has been strong for dairy producers, but we are operating, literally, we had to reduce the variety of SKUs. You said salted, that's interesting that you couldn't get unsalted, but we also have different types of butters and that we put on the shelf. We had to pull back from those. We had to go to one particular case count for every retailer, like 36 versus 18, right? So that we could maximize production on our lines. Oftentimes in the spring, which is the most productive for cows making milk, it's called flush. You make a bunch of butter and then you put it in your refrigerator for key season being November, December. Well, we've been selling everything. So there was no butter put up because everything was coming off the lines and going into retail stores. And so, you know, how is it? Well, we're maximizing production, we're reducing SKU variety. We're in a good position as we get into to key season, but we're going to see how the year ends.
We know that farmers are the lifeblood of Land O'Lakes, you know, and people may not realize that your company is a $14 billion farm-owned cooperative. Yes. And it's been a tough couple of years for farmers. I mean, they always have to deal with sort of challenging weather. That's always sort of in the backdrop, but they also, of course, now have the pandemic, and then there were trade issues concerning China during the Trump administration. Just give us a feel for what our nation's farmers are feeling right now. How are they doing?
You know, you went through the waterfall, the cascade of issues that have been present for agriculture and for farmers. You know, as you know, farming is an outdoor sport, so it can be too hot, too cold, too wet, too dry. You can be a brilliant farmer, you can still have issues. Well, how are they feeling right now? The pandemic did exacerbate supply chain backup. So I mentioned what happens with food service. Oftentimes, producers, farmers, dairy on the dairy side, ship to food service restaurants, you know, processors who make products for food service. Schools have been shut down. So, you know, you lost basically 15, 20% plus of the market for distribution. You saw backup in meat processing, right? Hogs, cattle. And so what happened was that there was an immediate drop in collapse in commodity prices. As well, there wasn't a lot of international trade because a lot of things were staying here in the United States, especially early in the pandemic. And exports are crucial to profitability for farmers. For instance, on dairy, 1 day out of 7 of production is exported in a variety of products. So this was really causing pressure at the farm gate in terms of pricing. Now, how are they feeling right now? Well, we've made it past this particular, the peak point of the pressure. The administration and the Senate and the House did provide funding for farmers, interim payments to make up for this gap. Many will make it to the other side. We're going to see what happens with this next few challenging months, depending on what happens with the pandemic. I have seen grain pricing, so row crop farmers, so beans and corn, have started to strengthen. Bean price up over 10.20, 10.30. Corn price, I saw a 4 number in front of it. And so that's stronger performance for those crops. Those are core crops. And so that's a positive. That's a positive. I'm seeing a little bit more momentum, a little bit stronger performance. For dairy, the food box program that is providing food for underserved communities and for the food insecure has elevated milk price a bit at farm gate, so we're not seeing the same level of bankruptcies at the dairy farm level. So they're feeling a little bit, it's not stable. Let's not say that, and we're in this stable environment, but there are more positive signs than there have been for the last couple of years, especially. Trade has started to pick up in China. We're seeing a lot of shipments, especially for soybeans, for hogs, et cetera, into China.
Are you looking for any more aid to come from the government? We're still waiting for this next stimulus deal to materialize. And when it does, are you hopeful, or do you have reason to believe that there will be some aid in there for our country's farmers?
Well, the administration and I think the House and Senate reallocated some funding to a funding area that it provides funding or support to farmers. As well, support programs or insurance programs will be critical. So the farmer has to sign up for insurance, and same thing from the dairy for the dairy side. So are we looking for support? Well, we're going to see. I mentioned the food box program. Actually, funding had run out for that food box program, but it looks like they're re-upping for maybe another $1 billion is what we're hearing. Do I expect we're going to see something? Well, we all don't know what's going to happen in that round 4. My government affairs team, and certainly we are connected through our government affairs team into both the administration, the House, and the Senate to get a view and then advocate appropriately for some level of gap payments for farmers as we move through this pandemic.
Something that farmers have had to deal with even pre-pandemic has been access to connectivity and to the internet, and the pandemic has really just exacerbated that need. I know that you are a huge proponent for internet access in rural areas. You've backed legislation regarding this. Where do things stand right now, and what else can the public and private sector do and come together to help aid the farmers?
Thank you for phrasing it that way. This is about coming together. 18 million plus Americans lack access to broadband. The majority of them are in rural communities. 1 in 4 farmers or rural community citizens lack access to broadband. This has exacerbated, or this has highlighted this digital divide that we have. Oftentimes on a farm, the teachers are having to drive out with this paper homework so these kids can do homework because you don't have enough technology on the farm, or you got to run farm equipment. I mean, it's really unacceptable. And this isn't a rural issue. This is an American issue. Food security is a national security issue. We see this front and center, right? We all see this. We're working from home. We're connecting with doctors from home. And there's a shortage of 40,000 doctors in rural America. There's a lack of hospitals, and now we see COVID coming into these areas. So what are we doing? We are advocating. We've started a coalition called the American Connection Project. We've got over 120 other companies, Microsoft, Cargill, Polaris Tractor Supply, any number of company partners who also see this as a need. We must fix this, this lack of access to broadband. It needs to be like a 1930s rural electric initiative going across the country.
I want to switch gears for a moment and talk about the world we're living in right now. And Land O'Lakes is headquartered a short drive from the Minneapolis neighborhood where George Floyd was killed. What has it been like leading an organization that is at the epicenter of what sparked a lot of these protests throughout our country?
It's been painful. It's been difficult. You know, first of all, our responsibility, my responsibility as a leader, is to acknowledge this is just terrible and painful. This should never have happened. This basically we saw somebody lose their life right in front of our eyes. And what I would say is many folks in the community, and you know, the Twin Cities in Minneapolis, St. Paul, they have probably 17 Fortune 500 businesses here. This is not an inactive community of making reinvestment in the community to say we've got to close some of these disparities. There's been a disparate outcome between minorities in these communities and the rest, and we can't have that. So what has it been like? It's been very painful in the community, and then very difficult as a CEO in this business. We had held listening sessions for our team, and you know, I don't have that lived experience of having fear to have my children go out to ride their bike, right? To drive. We've had stories where, you know, where senior executives, minorities pulled over, right, on their way to work. And we don't live that. I don't live that. We have to listen to that. We have to understand what are the systemic issues. How do we make sure our employees feel engaged, feel safe in their workplace, feel part of our community, and then as they leave work, how do we make sure we are committed to making appropriate investments to make sure that they feel safe and engaged and happy in their communities? So it's been painful, a learning session for many of us, and you know, a commitment through the Minnesota Business Partners, and as well as through the Business Roundtable. I sit on some of those committees as well, and I'm sitting on their board to try to address what is a very challenging time, I think, for all of us.
Land O'Lakes is going to be celebrating its 100th birthday. I think it's next year. And this past spring, you removed the image of a Native American woman from your butter packaging. And there have been all sorts of ideas out there as to why you may have done that. You know, shortly thereafter, we saw other changes like Aunt Jemima changing up its products, Uncle Ben's changing up its products. But tell us the reasoning behind why you changed that butter, the imagery on the butter products.
Yeah, I mean, it's interesting because we did that in January, February, right? And then all of these other changes came after, you know, some of these discussions on racial equity and those types of things. Why did we do it? Well, when I took over as CEO, which has been a little over a couple of years, we started looking at a number of things. Yes, we're coming into our 100th anniversary. We are a farmer-owned cooperative. We take a great deal of pride in that. In fact, research tells us, our marketing research, that nobody is more respected than the farmer, right? And so what we recognized is, were we messaging that is special about us, that we're farmer-owned, that we're a cooperative? And when we did our research, what we found from consumers is they didn't know that. Wait a minute, we didn't know that. If you'd have told us that, that would have been more reason to be connected to your products. So we made that decision, and some people view it as you took it away. I view it as we moved forward to message what differentiates us, our products, who we are. We go right from the farm. We know the cows. You know, we own Fiorina. We feed the cows. We have a retail business, and so we're different. And we wanted to message that to consumers, and that's why we made those changes.
I also want to congratulate you on making Fortune's Most Powerful Women's list of 2020. That is awesome. I know that from reading about your background, you grew up in a large family in Sioux City, Iowa. Growing up, who were some of your female role models?
Well, I would say my biggest role model is my mother. I'm fifth in the family of 8. I have 3 sisters, 4 brothers. We were very much a working class family. My dad was a truck driver. We started working very early in our lives because if you wanted your own clothes, you had to work for that. And I got one drawer that was mine in a room I shared with my 3 sisters. But I want to say my mother is my biggest role model. And the reason is, here's a woman who grew up kind of in an orphanage. She was adopted. She became a nurse. She got married young, became a nurse. She had 8 of us. She went back to school, became a psychiatrist, and then she became a minister. She said, I worked on their body and their mind and now on their soul. She's still with us, I'm very fortunate to say. But her resilience, her kindness, her empathy. We didn't have, as we said, 2 nickels to rub together, but I remember so vividly her telling me, we would have to go take a meal to a family in need at Thanksgiving. I'm thinking, well, we don't have tons, but we go there and then she would say to me, I can just see it so vividly, in a home with a couple of kids and they didn't really have a lot. And she said, do you understand your responsibility? You have been given so much. Don't disappoint. Understand this is about somebody else. So my mother is my role model. She's incredibly bright, strong, resilient, capable, and that I think we should all aspire for that.
Well, it's certainly a blessing to have your mom. If you don't mind me asking, what's her first name and how old is she?
Her name is Carol Wasmuth, and she is 83 now, I believe. Yeah. I want to get that right. Maybe I got to do the calculation. What's been funny is that I have all these siblings, but often, we live in all parts of the country. But now what we do is we do a Zoom with all of us. And there for many years, I wouldn't see some of my siblings for a couple of years, right? Because they're in some others. But now it's like we're seeing my mom and all of us, on Zoom on Sundays and catching up, and it's been a blessing.
Yeah, I can relate. I can relate to that for sure. Before we let you go, if you had 5 minutes alone with the next president, you had his ear for 5 minutes, what would you want to tell him?
I would say that we have work to do on where we think about investing to close some of this economic disparity that we see, and to make sure we stabilize operating environments. If I say it in my role as the CEO of Land O'Lakes, I would say I have concern and continued concern for rural vibrancy, for the challenges that I see in these communities that lack investment, lack access to healthcare. Some of the most food insecure are actually in rural America. Lack of housing, lack of, and we need to do better. It leaves us insecure and leaves us as a nation less secure, and we need to focus on that. And oftentimes this is viewed as somebody else's issue. That's a rural issue. This is an American issue, and that's what I would be saying. It's no different than, and I've used this phrase, that rural America is the new inner city, and we should think about that, because what we've done is we've not invested appropriately for this. 19% of American lives in rural America. They comprise 44% of the military. These are people willing to do the hard work for our country, and we must invest in them, in these communities, to make sure we have a vibrant America. So that would be my focus. Technology is an enabler to close this gap. We should be excited about the ways that we can think about that, including technology as an enabler for data and analytics, for sustainable production, so that farmers and farming can be part of the solution for climate change and for other bigger problems, in society.
No, thanks for shedding a light on rural America. Beth Ford, CEO and President of Land O'Lakes, is always a pleasure, and thanks so much for spending time with us.
You bet. Good to see you.
Still ahead on the Yahoo Finance All Market Summit, the secret to success in today's retail world with the CEO of Walmart, Doug McMillon, and then Best Buy CEO Corie Berry. We'll be right back.
CEO of Walmart. He started at the company as a teenager nearly 30 years ago, unloading trucks for an hourly wage. McMillon is leading Walmart through some of the biggest changes in consumer spending habits in generations. As the U.S. biggest employer, he's championed many socioeconomic issues, including wage hikes, expanded educational and healthcare benefits, and tackling climate change.
Welcome back to the Yahoo Finance All Markets Summit. I'm Brian Sozzi, joined, of course, by Walmart CEO Doug McMillon. Doug, real quick, though, see the market's under pressure here. The Dow is down about 730 points. The S&P 500, NASDAQ, under a lot of pressure this morning on coronavirus fears. Doug, always good to speak with you here. Listen, I've been going to your stores consistently throughout the pandemic, like a lot of other people across this country. What are some of the biggest changes you have implemented to the store since March?
Hey, Brian, nice to be with you. There's been a lot of change as we've gone through this year. As you know, our first priority is to keep our associates safe. Our second priority is to keep the supply chain moving and drive in stock. As you know, we've been challenged in a number of categories, and that continues to be the case in some instances. Our third objective has been to try and help others with our stores being open and the company having cash flow. We've made decisions to support people that lease space in our stores, to hire more people, things like that. Fourth, make sure we manage this business well through the crisis. And then fifth, with the bandwidth that's available after that, make progress on our strategy and move forward with what our goals were when we started the year.
Talk to us on managing the business. How do you turn a company Walmart size on a dime inside an environment a retailer has never seen before?
Yeah, it's been impressive. I have really appreciated how all of our associates have responded, our leadership team included. They made decisions so quickly and continue to when new information is made available. Things to make it safer to shop in our stores, things to improve the safety of our e-commerce fulfillment centers. Just time after time, cycle times have really picked up. What might have taken us weeks and months to do before, we're doing in hours and days, and it's been amazing to see.
Are the product out of stocks? Are they over? It's not just cleaning materials, it's food. I'm in these stores, and it's not just Walmart, it's grocery stores. The demand has been so strong. What is driving that, and when does it stop?
Things are getting better, but we still have a ways to go to recover, and I think it's going to be a bit choppy for months to come as we all deal with the volatility and as things change. And as you know, there are virus counts changing locally that cause different behavior locally. So what you see is unique to the location that you're in. But our team's really focused on in-stock. The number of receipts that we have versus that we've sold in the last few weeks and months has been greater. So we're seeing in-stock levels improve. But as we went through the year, you could see people kind of moving together. Families were at home more. They were watching the news. They were making choices about what they needed to solve for. So we saw that initial stock-up phase that was paper goods and dry grocery and things to keep you safe and keep you fed. That moved to educate my children, help me entertain the family while we're at home. Then we saw, as the spring and summer went through, bicycles, things related to the outdoors like your backyard and the lawn, all those things happened. And today what we're seeing is there's been some leveling out, but with the case count coming back up, there are some areas where we're starting to see stock up behavior again locally.
Talk to us about that a little more, Doug. Do you think there will be a lot of these products will come back in stock for the holiday season? How will those supply chain pressures impact the holidays?
Well, our team's had some time to react now, and our suppliers have too. So, if you go back to what we were seeing in May, for example, we started to think about what holiday was going to look like and what we needed to adjust for holiday way back then. So we made a number of changes. One of the kind of big set of changes is related to how we're going to handle the sales around Thanksgiving, Black Friday, and that event. We're basically at Walmart trying to spread out those sales over more time and to drive them more to e-commerce and to conduct those sales in a way that's safer for everybody. So spread out the store volume, try to reduce the pressure that we feel in terms of crowds in stores, and take more care of them through e-commerce and by spreading out the volume in stores.
Wells Fargo out with an interesting forecast for the holidays this morning. Doug, 9% projection sales increase they came out with, but we have no stimulus. How is the lack of stimulus putting estimates like that at risk because of the lower incomes you guys focus on?
Well, behavior patterns have changed, and people aren't spending money as much to travel and take vacations and do some of the other things that they would have been doing. So some of that is impacting retail and the categories that we sell. I think the lack of stimulus is showing up more so with those that have been unemployed, small businesses, people that really need help. I think it's important that we all understand in some ways we're having a shared experience because we're all in a pandemic together, but in other ways we're having a very different experience. If you have been let go and you haven't had income, you really do need some help. And so what we've been saying, both through the voice we have at Walmart and that of Business Roundtable, is to say to Congress and the administration, we need you to help those people that need help. There are some industries, the airline industry, for example, lodging, that need targeted specific assistance, and it's important that happen. But this country is so driven by small business that small business in particular and families that are disadvantaged need help in a way that some of the rest of us don't. And we'd like to see that happen as soon as possible.
I'm glad you mentioned the Business Roundtable, Doug. You chair the Business Roundtable, and I'm hearing from a lot of CEOs, there's been a pause in business over the past month, and they're pinning the blame on the lack of stimulus. Have you seen a pause in business?
Well, as I mentioned before, not everyone's having the same experience, so don't think of customers as being in one group. Generally speaking, a lot of the trends that we had seen when we released our last quarterly results are continuing. But the way that some families are feeling this is in a different category.
What about, I follow you on Instagram, and I have for some time. What are you telling employees? You have, just following your account, you've been going to the stores, talking with employees. What have you told them about their interactions with consumers? I can imagine they've been scared to get up and close and personal with consumers.
I think the steps that they are taking and that we've taken as a company have helped. Social distancing, wearing facial coverings, using plexiglass, washing hands, all those things. It's a combination of things that have to be done to keep people safe. And our associates have done a great job in that respect. And when I'm visiting stores and clubs and distribution centers during this period of time, I'm basically doing maybe just two things. One is thank you. They're being so courageous, so dedicated, really do have a heart to serve other people. Those that needed to take leave because they may have a pre-existing condition or need to take care of their family, the company has leave policies that enable people to do that. So quite a few of our folks have gone out on leave, but the vast majority of them are coming to work and making it happen. We've also hired quite a few people during the course of the year. Globally, the last number we shared publicly is that we've hired over 500,000 people, vast majority of those being in the United States, to help offset the demand pressure that we're feeling and take the place of those Walmart associates that have gone out on leave. So the first thing I'm doing is saying thank you. And then the second thing is asking, what do you need? What more can we do to help keep you safe, help keep customers safe, and serve them effectively? And the number one answer I'm getting back right now is help us with in-stock. We need more inventory, back to your original question. But as it relates to safety, people feel like we've done everything we can think of to do at this moment. Now, we'll keep learning, and if there's something more we can do to help keep people safe, we'll do it.
Since day one that you took over, almost 7 years ago, I can't believe time has flown, Doug, you have been a champion of the workers. You have moved aggressively to raise wages. And that most recent wage increase, I believe, kicked in to $15 an hour in October. Are you looking at any other bonuses for workers this holiday season? Just, they are doing more work, and I'm sure they are worried about their safety.
Yeah, it's important that our associates are rewarded for the hard work that they do. And basically, Brian, I think you and I may have talked about this before, we're trying to create a ladder of opportunity. And that starting wage rate is just one component of an overall system. We want people to be rewarded as they move up in responsibility level. 2/3 of our management associates come from our hourly ranks. We put in place academies to help people with education. We've put $1 a day college program in to help people get college hours if they want to advance their degrees. And our compensation rate starts around the country at $11 at the lowest rate in some parts of the country. There are other parts that start at $15. But our strategy is not to spend all of our money, think of only the starting wage rate. Our strategy is to build a system where people can come through it all the way up to my job.
Switching gears here, in amidst the pandemic, as if it wasn't hard enough to manage through that, you also have made a play for TikTok along with Oracle. What's the latest on that?
Yeah, we've had an ongoing conversation with ByteDance for a while now, and basically what we would love to do is to play a role in the e-commerce, fulfillment, payment, and to some degree advertising aspects of that relationship. So the national security concerns in the US and in China, those will be resolved by government officials and Oracle, not Walmart. We're focused on the front end and how users might be able to interact with TikTok, and when they see something they want to buy, do it in a simple, fun, seamless way and have a good back-end experience because of our fulfillment capabilities. So that's an interesting relationship that could end up impacting more than just the United States.
No, it's pretty cool. When would that new form of marketplace, when would that go live? Is that within the year? Can you build that quickly?
Well, there are forms of social commerce that are happening already around the world. You can see that maybe most prominently in China, but whether it's TikTok or Facebook, Instagram, in some ways Google, the digital front ends that exist, in our case, we have one with our app, in addition to the ways that we interact through others, will become kind of seamless for people as they want to buy merchandise and have that experience. So I think you can start to see some of the signs of that today with marketplaces that are being built and with what we're building. But I think it'll progress. It'll become more pronounced across various channels and become more pronounced geographically as it grows.
So has it been worth it to go through all this? It seems though Walmart's been in the headlines, it's been dragged through the mud a little bit with regards to TikTok, but just listening to you, it sounds like that is okay because the longer run opportunity is still pretty big.
Yeah, I think there's been criticism of the deal, and it's been, complicated in some ways because the governments are involved. But I don't have any concern about the way that we've been treated. Our focus here, as I described earlier, is really simple. We want to play an e-commerce role and help users, and hopefully something can be worked out.
Let's switch gears here again. Some social issues. What has been Walmart's role throughout the social unrest we've seen in recent months?
Well, as a company, as you probably know from following us so closely, we've been working on diversity, equity, inclusion forever. And when George Floyd was murdered, it served as a moment for everybody, I think. And inside the company, the conversations that we're having escalated, and we started trying to figure out, okay, what more can we do? Clearly, there are inequities here, and too many of our systems are generating those inequities. The numbers speak for themselves. If Black and African Americans could participate in our economy at the same level that others do, it'd be a boost to GDP growth. What has to happen underneath all of this? Not just policing reform and things related to criminal justice, but the financial system, the education system, healthcare. What has to change in those complex systems, and what are the underlying roots that we can get at that will create more equity on the other side? And at Walmart, what we've done is create 4 different teams that are led by African American officers focused on those systems that I just mentioned. And in parallel, Business Roundtable, the CEOs decided to do the same thing. So we had a group of CEOs, Mary Barra, Craig Arnold, Jamie Dimon, and many others that got involved in understanding what these systems look like, learning from experts, and coming back with changes that we can make inside of our companies or policies that we can recommend to government that would create more equity on the other side. In addition to that, Walmart did set up a $100 million Center for Racial Equity that'll help support some of this change. But the core systems work reminds us of the environmental sustainability work that we've done. If you can find ways with our purchase orders, think about sourcing from diverse suppliers, or where we put our cash at night so that Black-owned banks can loan money more so than they could before. Just different policy choices like that when you add them all up, the systems result in more equity and more opportunity for everybody. That's ultimately what we're trying to create.
I'm sure you're watching election. It's coming up hot and heavy very quickly here. How would a change in the White House impact Walmart's bottom line over the next 4 years?
We've been through a lot of these. Walmart's been around since 1962. We've worked with all the administrations, and that's what we would continue to do. We want to serve the country. We want to help the country get stronger. So whatever we're asked to do, that's what we'll do. We hope to contribute to bringing the country together as it relates to things like inclusion, but we hope to help solve other problems too if we're asked. So that's our attitude. How can we serve the country?
Do you think the country needs a reset?
I think the country needs to come together and solve problems. Regardless of the administration or who's in Congress, when you look at the outcomes of what's been happening, there are opportunities for us to invest in infrastructure, to create more equity, to invest in new technologies, to create future jobs focused on the future, not industries from the past. That transition to a digital age, to a forward-looking country needs to happen. So, what we want to see is people work together to create opportunity for people. Americans need jobs. They want to know that their children are going to have a better future than the life they've had. And we should work together to make that happen.
But do higher corporate taxes, would that change how you invest in your business?
We've had different tax rates. I think the first thing that goes through my mind when I think about corporate tax is that we need to think about where we set the rate on a global basis and make sure that the U.S. is competitive. Given all the debt that we've taken on with the pandemic, we do need to develop a plan to address debt levels. And so I think we need to work together with whoever's in the White House and in Congress to figure out what combination of things need to change, taxes being one of them, that would result in a better overall outcome and a longer-term approach and view.
Fair enough. And Doug, we've talked many times in the past. Like I just mentioned, can't believe you're coming up on your 7-year anniversary of being the CEO of Walmart. It feels like yesterday. How has the pandemic changed you as a leader?
I bet it's changed just about everybody in some way. And when I think about what I've learned, the two words that come to the top of the list for me are courage and speed. And what I've seen from our associates and our leadership team related to those two things has been super impressive. And so I think I've learned even more to let people move quickly, think big, and not let bureaucracy slow us down. And don't sweat some of the small stuff. Just get on with the things that are most important. And I think we've moved faster as an organization as a result, and that's changed me as a leader.
Well, let's zoom out. Just from your perch atop the business roundtable, how do you think the pandemic will change American business?
American business was already focused on multi-stakeholder capitalism, and I think the pandemic has only reinforced how we all feel about that. This argument over, what's the role of a company? Is it to just make profit, or is it to serve not only financial shareholders, but also serve communities, take steps to protect the planet, make sure that your associates are well compensated and taken care of in other ways, serve the customer more effectively. We feel like that the multi-stakeholder approach is the smart way to approach business, and clearly when you look at it through the long term rather than the short term. So I think what the pandemic has done is reinforced, if you take BRT, for example, the statement that we made on corporate purpose last year, reinforced our commitment to that, our belief in that. And hopefully through the pandemic, what Americans are seeing is that companies are actually walking that talk. We are doing things that help all of the stakeholders in this equation. We're being systemic thinkers, not just focused on one set of stakeholders.
And Doug, real quickly before I let you go, I just want to go back to the holidays. Will this be a good holiday season?
I think it will. I think people want to celebrate the holiday. I think hopefully families will take steps to do that in a safe manner. But we all need some love and joy, and this time of year brings those things to being top of mind. And I think we'll find a way to celebrate it, and I think it'll end up being a good year. It'll be unique, but I think it'll be a good year.
Unique indeed. Walmart CEO Doug McMillon, always good to speak with you. Stay safe, and really appreciate what you're doing out there.
Thanks, Brian. Be well.
All right, coming up next on the Yahoo Finance All Market Summit, I'll be speaking with the CEO of Best Buy, Corie Berry, and then we'll hear from CEO of Delta Airlines, Ed Bastian. We'll be right back, live from the NASDAQ.
Welcome back to the Yahoo Finance All Market Summit Road to Recovery. I'm Andy Serwer. Just checking in on the markets. Stocks falling sharply right now as coronaviruses continue to surge here in the United States and Europe. Failed stimulus deal is adding the pressure to the markets. The Democrats in the White House are blaming each other for the standstill. An agreement may not be reached before Election Day. Dow Jones Industrials down nearly 750 points, or about 2.5%. NASDAQ down about 200 points, 1.65%. S&P down 2%, over 70 points. Airline and travel stocks taking a hit. Delta shares down 5.5% at this hour. Hilton down 6%. Booking Holdings down nearly 5%. We'll speak to all those CEOs at the top of the hour here at the Yahoo Finance All Market Summit. And now over to Brian Sozzi with his conversation with Corie Berry, CEO of Best Buy.
Corie Berry has been the CEO of Best Buy since 2019. The COVID-19 pandemic destroyed brick and mortar retailers. But under Berry's leadership, Best Buy hasn't just survived, it has thrived. Its online sales tripled over the summer as customers hunkered down from COVID and bought everything from chest freezers to home theaters. But arguably, Corie Berry's biggest victory yet is beating back the threat from Amazon.
Let's welcome in Best Buy CEO Corie Berry. Corie, good to see you.
It's great to see you too, Brian. Thanks for having me.
Well, I'm one of those guys. I've been doing a lot of shopping at your stores pretty much every weekend. Don't pull up the cameras because it's kind of creepy. I'm constantly going there. But really, now we had some time to reflect back a bit on the pandemic and the year. When was that first moment that you realized, you know what, this is going to be a strange year and not like anything I've ever managed through before?
I think we all hit it around the same time. There was that moment as we headed into March where you started to see the proliferation of the virus and you started to feel the concern. And certainly we felt the concern both from our customers and our employees. And it was about the third week in March when we said, we really need to think about how we're going to manage this company without a playbook, without any direction that's ever been set before. And we started to think about what do we need to prioritize in order to lead through this really differently.
In some respects, though, you do have a little bit of a playbook. You've been at the company for 20 years. You've worked 15 positions at the company. You know the stores really very, very, very well. How has that experience helped?
Well, the good news is it's not just about my experience. It's about this experience of our team. And we have a really deep bench of experience on our team, as well as augmented with some, fresh outside perspectives. And I think that combination, people who really understand operationally deeply how this company runs, augmented with bringing in some experts around technology, some experts around data and analytics who could help drive the change quickly, was an incredibly powerful tool, because as long as you could set the parameters, then you could trust exceptional leaders across the organization to make fast decisions and then change on a dime. And I think that's really where the magic comes from.
How did you develop that playbook?
Yeah, every day on the fly. It actually started with, we set 3 guiding principles. And this isn't a change of strategy. It's just, what are the guiding principles we're going to use to make every decision? The first was, keep our customers and our employees safe. Prioritize safety. The second was to protect the employee experience as much as we could for as long as possible. And the third was to come out of this not just a vital company, but a vibrant one. And setting those 3 principles was really important on the front side, because every decision we made starting there was tacked back. And so when we chose in the third week in March to close down all of our stores and move to curbside, that wasn't because it was mandated. That's because given how little we knew at that point about the spread of the virus, given how little we knew about how to keep people safe, it seemed like the very best possible outcome from a safety of customers and employees perspective. And we felt pretty strongly we could continue to run the business in an effective manner that way.
How has the pandemic changed at Best Buy? And I see it from 2 sides. As a customer, I go in the store, it's a different experience. But I also imagine within corporate and thinking, I've covered retail for a long time, and retailers always want to get everything perfect, but this is not a perfect environment.
I mean, this is the definition of agility. We talk a lot about agility when we're talking about software or when we're talking about, development of technology. Agility is not as often practiced as a retailer because, to your point, when you're pushing out a standard operating procedure to 1,000 stores, you want that to be perfect. And instead, what the company has learned is give as much direction as possible, the parameters, and then allow the stores to iterate on those parameters. And so one of the most effective things that we had was a constant feedback loop. We would create the best possible playbook we could quickly, and we get a lot of feedback, and we would iterate and move on to the next stage in the playbook.
What about the store experience? How has that changed?
I think there are two big changes to the store experience. The first is empirically, how do I make things as safe as possible? Meaning, what steps do I need to take around cleaning or capacity or social distancing or masks? Like empirically, how do I create the safest experience? And then the second point around safety is how much value is there in the experience? If I'm offering something that's incredibly valuable to people because of the way they're living, to your point, someone needs their fridge repaired, there is a high level of value. We also have learned to use our workforce much more flexibly. And this is where I give our teams a ton of credit. They're able to move much more rapidly between departments in the store, or to help someone with their curbside pickup, or to help someone who needs a return or needs something repaired.
How have you been able to get employees to buy in? I remember going to Best Buy at the height of the pandemic. I needed a whole bunch of office work from home equipment. And Best Buy employees, they were there. They were some of the first people I came in interaction with. How have you made them feel safe?
I'm going to start with our purpose. And I think it's really important. Our purpose is to enrich lives through technology. And I believe fundamentally, this is more than a tagline. And I believe our employees believe that too. And all of a sudden with the pandemic, it became true in spades overnight. The only way we can connect with loved ones is using technology. The only way we can work, we can learn, we can entertain, cook, all of those things are being done on the back of technology. And our employees believe in our purpose. The thing that someone asked me, what has made me most proud throughout this time period? And the truth is that our employees are proud. Every general manager that I talk to, I get the chance to FaceTime with them and they walk me through their stores. And every general manager I talk to will talk about how proud they are of both how their employees have showed up and what we have done to help customers solve real needs. And I think it's that combination of our purpose with their personal purpose around helping customers. It's just inspirational.
You did have to make a tough call, I imagine, for you as someone who came up through the stores in many respects to furlough 51,000 workers. Are they back now? What percentage have come back to work?
Yeah, so as of our Q2 announcement, which was midway through August, we had brought 2/3 of our employees back. And then we announced, as we've been doing our holiday hiring every year, you hire up for holiday, and we are definitely hiring up for holiday. We were able to offer every single additional furloughed employee at least seasonal hours and seasonal work should they want that. So at this point, nicely, we've at least been able to offer everyone, at least through holiday, some level of hours and work.
Talk to us about the holiday season. It's shaping up to be a bizarro holiday season, to say the very least. What efforts are you putting into to keep people safe, but also to encourage shopping? I mean, the country's in rough shape.
Yeah, so I'm going to start with where you landed, which is encouraging shopping. And I think that's less about, does it have to be in the store? And that's much more about, we want to be there for the customers. In whatever channel, form, style they want, we want to be there for them. And so everything that we're doing, we are leading with the customer experience and putting the customer in charge. They define safety for themselves, which means they get to be in charge of how they want to shop. So in order to serve that customer need, there are kind of three big focus areas. The first, and you've already seen it, and you've covered it ad nauseum, is the idea of the holiday starting sooner, lasting longer, seeing more promotional cadence throughout a longer period of time. Now, part of that is so that you can actually spread out those peaks and provide a safer experience over time. So many of the Black Friday deals, you saw some of them already went out last week. You're going to see the ads come out toward the end of the month so everyone has full visibility to what's in there. And I think what we're trying to avoid is the kind of natural response of lines at stores on Black Friday. That just can't happen. And so instead, we're definitely using all the channels and all the tools to help get people what they need, but do it in a little bit more protracted way, which then the second major implication is around fulfillment. People want to get the stuff, and whatever way they want. 40% of what we sold online in Q2 was picked up in store. And so offering this combination of whether you want it on your couch, whether you want it curbside, or whether you want it at the counter of the store, we can do all those things for you. And you're the one who gets to define. And then finally, you started with it, is the idea of creating a safe shopping experience. And that's been a priority from day one. And we will continue to make it a priority that we have maximum capacities for our stores. We have cleaning protocols. Masks are required. Social distancing is still very possible given the size of our stores. And so we're trying to make sure the customer feels like they're in control, and then making sure whatever they choose, we deliver it as safely as possible.
I did want to go quickly a little bit around the horn with you. It's not often you do. I know you don't do a lot of these, so I'm glad you have done it. 5G. Our parent company Verizon has taken a leadership position in 5G nationwide rollout. How will 5G Apple iPhones change Best Buy next year?
I think it's less about one particular piece of technology in 5G, and I think it's more about what 5G will open up across different types of technology over time. Phones are definitely interesting because your latency is so short if you have 5G capability. But ultimately, it's going to be about computing on the go and gaming on the go and the ability to just do more because you have that massive amount of bandwidth. And so I think this bodes well over time that there will be more and more devices that will leverage 5G capabilities, whether it's in your home, but frankly, also on the go.
How has the pandemic changed you as a leader?
I think for me, it has underscored a couple things. The first is my own philosophy about the role of a CEO is to create the conditions for other amazing leaders to be successful and to move as quickly as we've moved, to make the decisions. It's not just about me sitting alone in my office, chucking out decisions. It's about using and leveraging and unleashing the leaders around me. And that philosophy has actually only held more true during the time of the pandemic. I think the second big piece here for me is that it's a very personal time for people. This isn't just about go do your work and it's separate from your personal life. I think everyone's work and personal lives are very combined. And so I think making sure that we have what we call inclusive leadership behaviors at Best Buy, and they are empathy, courage, vulnerability, and grace. And those leadership behaviors, not something you always hear a corporation talk about, but I think at a time where our personal lives and professional lives are so intertwined, not being afraid to exhibit those behaviors is crucial for our teams right now.
50% of your board is female. I don't pretty much see that anywhere else out there in corporate America. How did you make that happen? And are you looking to even increase that percentage moving forward?
Yeah, I am fortunate to have followed our prior CEO, Hubert Joly, who had a very strong point of view about board diversity. And when you ask, how did you make it happen? We decided we wanted to make it happen. And there are plenty of qualified candidates out there. And, when you prioritize, here's the qualities we need, and we would like to increase the diversity of the board. That's a very powerful combination. And so you're absolutely right. Right now, actually, just a little bit over 50% of our board is female, and just over a quarter are people of color. And I think that makes the conversations that many of us have been having around issues of inclusion and diversity, issues of social justice, it creates an amazing platform to have those conversations, not just as a leadership team, but actually with your board.
What does it mean for Best Buy's future that in many respects, you all are the last man standing in the electronic space? Yeah, we have the discounters, we have a Target, we have a Walmart, we have a Costco, we have a BJ's, but there are no other retailers of your size out there doing what you're doing. What does that mean to your future?
Yeah. So let me say first out loud, we do get the luxury of competing against the world's foremost retailers. And there are definitely many who carry consumer electronics products. But I do think our differentiation is our ability to show you everything that might be possible. So I'll take computing as a category. Everything from the opening price point laptops to the $1,500 perfectly spec'd gaming computer, and everything in between with a knowledgeable associate who can help you put a full solution for your life together. And I think the way that all of us are living right now, all of a sudden you really start to see this idea that our lives truly can be, and actually have to be right now, enriched by technology. It's a very unique end-to-end position where we're able to help you, whether it's just that point solution you want to buy online, or you do want to come in and put together that home office, we can help you across that spectrum. And I think that is our uniqueness as we go forward.
Before I let you go, your biggest goal for 2021, the reality is COVID-19 is unlikely to go anywhere anytime soon.
The customer is in control, and the customer is going to remain in control for the foreseeable future. To your point, likely COVID's not going away anytime soon. And so my biggest goal for the future is to continue to push the envelope in how we meet the needs of the customers. And we do that in a way that's safe for our employees and safe for our customers, but gets them the gear they need in order to find maybe that moment of joy in their life.
Well, I will thank you because I've spent a ton of money in your stores outfitting my work from home life. So thank you. Please keep all that stock moving forward. I suspect I will be needing a next level of stuff moving forward. Corie Berry, Best Buy CEO, good to see you.
Good to see you as well. Thank you.
Still ahead on the Yahoo Finance All Markets Summit, we're breaking down the future of the travel and leisure business with the CEO of Delta Airlines, Ed Bastian, and then the CEO of Hilton, Chris Nassetta. We'll be right back.
Hello, everyone. I'm Neela Richardson, Principal and Investment Strategist with Edward Jones, bringing you a Minute Market Update. Even in isolation and times of incredibly volatile markets, families and those closest to us still remain an important and constant force in our lives. So much so that we've seen Americans willingly have more difficult conversations. According to a recent study by Edward Jones and AgeWave, the threat of COVID-19 has prompted nearly 30 million Americans to have end-of-life discussions about wills, medical care, and funeral wishes with family or close friends for the first time. However, we've also observed instances where Americans are sacrificing their own financial security to help their loved ones. Roughly 24 million Americans have provided financial support to their adult children during the pandemic. While we are seeing generational generosity play out, investors still need to exercise caution when it comes to planning for their futures. Looking ahead, it will be important for investors to understand what means most to them without losing sight of their financial goals. For more information on the study, visit edwardjones.com/new-retirement.
has been CEO of Delta Airlines since May of 2016. With a fleet of 830 aircraft, Delta is one of the world's biggest airlines. But the COVID-19 pandemic has crushed the travel and tourism industry. Delta, like many of the world's airlines, has grounded much of its fleet and sent other planes into early retirement. The challenge for Bastian? Leading over 75,000 employees worldwide and millions of passengers through the greatest challenges for the airline industry in history.
I'm Adam Shapiro, and it's a pleasure to welcome Ed Bastian right now to the All Market Summit. Ed, thank you for joining us.
Great to be with you, Adam.
I want to read something that you said in January of this year, and it was about the strong performance Delta had going into the year, closing out 2019 with record net income over $6 billion, with $1.6 billion in profit sharing returned to what was then Delta's 90,000 employees. You said that 2019 was truly astounding. As we enter 2020, demand for travel is healthy and our brand preference is growing, positioning Delta to deliver another year of strong results. I don't have to tell you what's happened in the last 8 months. And as we jump into this, I am curious personally, as the leader of a very large company and one that is known worldwide, personally, what has this been like to watch everything literally fall off a cliff, no fault of yours or the airlines?
Well, in the travel industry, we're accustomed to managing crises, whether it was 9/11, going through the recessions, the Gulf War back in the early 90s, but we've never seen anything that comes close to the challenges of managing through the pandemic. We went from the highest of highs, as you mentioned, last year to month of April, where we were only at about 5% of our revenue from the prior month period. So it's been a challenge. We don't have time, Adam, in this environment to look back and wonder what happened. We have to be very focused every single day on what we can do to protect our people, to protect our customers, to protect our future, and to continue to see the slow and steady progress back, which we are making.
Let's talk about progress back, because we just had Dr. Anthony Fauci on the All Market Summit within the last couple of hours, and he said that the COVID pandemic, we're still in phase one, or the first wave here in the United States. And when I speak to different analysts that look at the travel, hospitality, and leisure industry, they point out that recovery in these industries is dependent upon us not going into a stall with the COVID cases. So what trends are you seeing now, and what concerns you about what we're witnessing in real time with the new cases?
Well, there's no question that the recovery is quite choppy, and some weeks are better than other weeks. But over the last 6 months, we've seen a steady 1% to 2% progression a week of customer demand coming back to travel. Obviously, we're doing everything we can to keep travel safe, protect our customers, protect our people, to ensure our aircraft and our facilities are immaculate as best we can with the filtration systems, blocking middle seats, doing everything we can to ensure customers are wearing masks. And the travel that we went from the early days of the pandemic to the travel that customers were making was really essential, something that they needed to do, to now where customers are finding opportunities to go out and see their family, friends in a safe way. But there's opportunities out there. We're about 1/3 of the way back. That's a 3x improvement from just the second quarter, but we're going to need another 3x improvement as an industry to get anywhere close to 2019 levels. So all in, it's a couple-year journey. Domestic is going to come back faster than international. Leisure is going to come back faster than business. But we're staying focused every single day to continue to see small signs, but encouraging signs of light at the end of the tunnel.
I want to talk about those encouraging signs and also the safety measures that are in place that bring back confidence for people who might be hesitant to fly right now. And there's the IATA, the International Air Transport Association report that showed of roughly 1.3 billion people who traveled from the first of the year through today, only 44 cases of COVID can actually be attributed to contagion, perhaps from air travel. What do you do when there's a drastic data point like that to convince people that this is safe to fly?
Well, we are continuing to engage with the experts. And as you mentioned, IATA put out the international lack of known transmission. At Delta, we haven't had a single case of documented transmission aboard our aircraft, despite the fact that we're carrying 1 million people a week. We're working with experts such as the Harvard School of Public Health, which is coming out with their analysis this week to indicate the safety and the really extraordinary low transmission risk aboard airplanes because of the filtration systems, because of masks, because of our cleaning procedures, and at Delta especially because of the block seats, the middle seat, and capping load factors. It is a safe way to travel. Travel as a whole has to be a personal decision. We don't expect anyone that's going to be vulnerable at risk to travel, but if you either need or want to travel, air travel is incredibly safe.
When I say drastic, I mean it's dramatic that only 44 people out of 1.3 billion can be, considered having caught COVID on an airplane. But you brought up the middle seat. Southwest Airlines recently announced they're going to start selling the middle seat. You're going to keep it blocked into next year. And yet there's another study from the US government, actually, that shows that it's not necessary to block the middle seat. So why will Delta continue to block it?
Well, we will continue to watch that and make those decisions as we get into the next year. We believe it's safe to sit in the middle seat. That's not a question. It's really a question of consumer confidence, sitting in the middle seat. And I think when you speak to consumers, if they have an option not to sit in a middle seat and to have the middle seat open, that's their clear preference. We saw that in our results in the third quarter. Our revenue performance on a like-for-like basis was the best in the industry. Even with 40% of our seats not being sold, we had more average passenger revenue at Delta than the main competitors that we go up against. So it's going to be something we watch and study. We are looking at probably sometime in the spring to make the determination as to when the right time is to start to sell those middle seats, but they're going to be blocked through the winter.
There's a metric that reporters like myself use and that the airlines use, the core cash burn, and Delta in the last quarter actually had it down, I think, to 24 million, and it's actually going lower as we're talking right now. But I want to quote one of my favorite analysts from Raymond James, Savi Saith, because she always points out cash burn's important, but liquidity is the key here. And she said, I think the answer for most of these airlines, unless we get some kind of new strain or something that gets turned things really bad, is that they have the liquidity to survive. So in Delta's case, you finished the quarter with 21.6 billion in liquidity. Where will you be at the end of the year with liquidity? And how much longer, given the slow trajectory of recovery in passenger revenue, does that liquidity take you out?
Well, as you mentioned, we closed the third quarter at $21 billion. We're looking at a cash burn in the fourth quarter of somewhere between $10 and $12 million a day. So call it $1 billion general level for the fourth quarter. We have some debt maturities that we're going to pay off in the fourth quarter, and we expect to end the year somewhere between $16 and $17 billion in cash. From a liquidity perspective, we're in good shape. We need to get that cash burn eliminated. We expect to get it done by the spring. And when you think about it, Adam, to go from burning what we were at Delta almost $100 million a day to eliminating it entirely by the spring would mean that we did that in a span of 12 months, which was 12 months since the start of the pandemic. That's a pretty good recovery.
Just before the pandemic, I was fortunate because I actually had a chance to go overseas. I went down to Buenos Aires, and it was part of this seamless travel concept that Delta, Savi Saith again at Raymond James points out, was in the lead compared to other airlines. That's all taken a back seat, the partnerships with the international carriers. But is that something that you discuss with your C-suite about at some point we're going to be traveling internationally again and getting back on that strategy? Or is there going to be a new strategy for Delta and all the other carriers after the pandemic?
Oh, we are absolutely committed to our partnerships around the world. And while each one of those carriers are in a little different state of the pandemic, I'd argue in the U.S. we're in the best shape of any of the international countries with respect to air travel, given the support that we've received from the federal government. We know international travel will come back. It may take a couple of years, before people start traveling at scale internationally, but it's going to come back. Those carriers are taking this opportunity while travel is low to make improvements in their business, whether it's in technology, in any other resilient and improvement measures that can improve the resilience of their business going forward. But it's going to come back. We're, as a rule, we're probably more distant internationally today than ever before. And there's a real longing for people to get back together and to bring the world closer together, not just in the U.S., but the world. We have quarantine measures, we have restrictions, we have a lot of reasons why we can't travel. But once travel is deemed appropriate, we're going to be ready to go, and our partners will be ready alongside us.
I'm curious because in our previous discussions, I know your priority is the Delta family and the shareholders. But would this involve in the future perhaps investment, the way that Delta had invested in LATAM, with other international carriers on the other side of this pandemic?
I don't think so, Adam. I think we've got the partner network that we want. LATAM, as you mentioned, in South America, Aeromexico, Virgin Atlantic, Air France, KLM, Korean, China Eastern. We've got a great list of companies that are not just partners, we're investors in, and I think that provides us the foundation we need as we get back.
Delta did not take advantage of the totality of monies it could have borrowed from the U.S. government through the CARES Act and the Paycheck Support System, the PSP. But I know that you and the other CEOs from the airlines are pushing the government, saying, look, the PSP2, as it's called, is necessary for the industry. What do you think are the chances that the next stimulus bill, whatever it looks like from Congress, will include the $20 billion that they've proposed to help the airlines?
It gets to a bigger question of what's the future of a stimulus program in general. I think there has been bipartisan support for another round of stimulus for the airlines, given the important place that we sit and serve in our national recovery. Right now, it doesn't look like a stimulus will happen prior to the election. Whether it happens during a post-election potential lame duck session, I don't know. Whether it's going to be next year, I don't know. But at whatever point a stimulus program is approved, I'm optimistic that the airlines will be a piece of that.
Ed, I want to shift gears as we wind down as to what Delta is going to look like in the future. And it's not related to the pandemic. It's an issue that you've made front and center for the company. It's the memo from August where you talk about racial issues, and you pointed out in that memo that people of color currently represent 43% of Delta's current employees. And then you went through the data which shows the percentage that people of color represent in different work units. And you said, this is not a picture of equity, nor is it reflective of the world we serve. You then took responsibility. Quote, I take ownership of that performance. You outlined some of the steps that you and Delta are going to take over the next couple of years. I think 2025 are some of the goalposts you've set. Can you tell us a bit of what those steps look like for people of color, but also for people who might worry they could get left behind?
Well, this is about raising the bar for everyone, Adam. It's not about lowering the bar or making the bar achievable only for some. To create an environment where we want to be seen Delta as a great company in our community, a great airline for our customers, and a great employer for our employees. It means we have to create a just an equitable set of opportunities for all of those employees. It's clear looking at the data that there's certain groups, our African American community, have been not afforded, at least on paper, the same level of opportunities as other groups. And we're leaning in hard to understand why and what opportunities we can do to create a better future for our African American colleagues. 20% of our employees are Black, and only about 6 to 7% of our leadership is Black, for example, at the top levels. So there's a lot in those statements, and it's going to take years. But this is the perfect time to address it. This is the time when the business has stopped, the world has stopped. We have opportunities to learn how we're going to get better, how we're going to be more resilient, and we need to be a more fair and just company right alongside that. So there's a lot of work going on. We're going to be transparent. We're going to be accountable. We're going to make certain the world sees how we do.
And Ed, final thought from you as we wrap up. I know a lot of people are rooting for the airlines, not only to travel, but because we have friends and family who work for the different carriers. But what's the most important thing you would want, not just the investors who are watching right now, but the flying public to know as we head toward the new year, 2021?
Well, the importance that we place around protecting health and safety of our people and our customers is paramount, and it's never been more important. Customers have become comfortable. Most customers that fly aboard our planes don't even think about their flight safety. We are that good. Of course, we think about it every moment of the day. And we want customers not to worry about their public health aboard our planes, just as they don't worry about their flight health aboard our planes. And so we are doing everything we can, re-examining every step of our protocols to ensure that people are safe in all aspects of their journey. And at Delta, we're going to be ready to come back when they are.
Ed Bastian is the CEO at Delta Airlines. We appreciate you being here. I remember the first time I met you, Ed, was aboard a brand new Delta airplane over a year ago. I'm looking forward to the day we can get on another airplane together and talk in person. All the best to you.
Me too, Adam. Thank you.
Want to let you know there's more of the All Market Summit Road to Recovery coming up. Still ahead, more on the future of travel and hospitality. The business obviously in peril right now, but we're going to talk about the future with the CEO of Hilton, Chris Nassetta, and Glenn Fogel, the CEO of Booking Holdings, home to brands like Priceline and Kayak. So stay with us as we continue our broadcast live from NASDAQ.
The Yahoo Finance All Market Summit is sponsored in part by the International Well Building Institute.
Niceta has been with Hilton since 2007. He leads a team who manages over 6,000 properties with close to 1 million hotel rooms in 188 countries. There are 18 brands under the Hilton name, including Embassy Suites, DoubleTree, Hampton, and the storied Waldorf Astoria. Niceta's leadership comes at a time of unprecedented challenges for travel and tourism as the COVID-19 pandemic has devastated the industry.
Hi, I'm Jen Rogers. Thanks for watching. And Chris Niceta, thanks so much for joining us. I have to just start on kind of a personal level. I have not been in a hotel since last January. Are you traveling right now? And if so, what are hotels like?
I am. First of all, Jen, thanks for having me on. Great to be with you guys. I am traveling. In fact, I've been traveling not like I would have before. Pre-COVID, I probably spent 80% of my time on the road, as you would guess. I'm in the business of traveling all over the world. During COVID, the initial stages, very little travel, but some. And now I've been getting out maybe once a week, mostly domestic. I had my first international trip this week, which was liberating. It felt really good. I was in Mexico to meet with some of our partners down there and meet with our team and do some town halls and look at some of the things that we have under development. And it was great. Of course, like everybody, doing it thoughtfully and safely and using PPE and the like. The experience, I think, I would like to give everybody confidence that when you stay with us, it's really safe. I mean, when we got into the pandemic, very early into it in March, I said to our team, at this point, a lot of the world is closed and people aren't going to be traveling, but soon enough they're going to, and we're going to have first responders, we're going to have others that need to travel, and what we need to do is give them the confidence, as we have for 101 years at Hilton, that when they stay with us, they're in a safe and secure environment. So we went out in March and started working with the Mayo Clinic and Lysol Dettol to try and come up with what we thought was the absolute best standard in hygiene and cleanliness for our hotels, the public spaces, the rooms, and the like. We ended up bringing that Hilton Clean Stay, and we implemented that on a global basis to all 6,300 hotels in 120 countries around the world in the following 60 or 90 days. And so everywhere you go now in the world where you stay with us, and almost all of our hotels are open, we've implemented Hilton Clean Stay to basically hospital grade cleaning and hygiene standards, where you literally, when you check into the room, you break a seal.
I think a lot of people have been surprised at how quickly some of the leisure travel piece has come back. Business, obviously, still having a tough time. What does the road back look like for business travel? Like what is it going to take to get people back on the road?
It's interestingly, the pattern, while this is a different kind of crisis and an economic decline caused by a pandemic versus other declines, the pattern of how we're recovering is pretty similar, and that has been always that leisure is more resilient, and that business travel probably second, and then group and meetings business last because it's longer lead business. That is the case more dramatically so this time as compared to prior cycles, but reasonably similar. I think what's going on leisure. Is sort of backed up by the research we did as we've launched our latest marketing campaigns, and that is that people want to travel, right? If you talk to people, I think it's like 95% of people say they miss travel, and 95 or 96% of people say some of their best memories, if not their best memories, involve travel. And so they want to get out, and so they are. And the fact of the matter is, they have more time in the sense that in many cases, their kids, either during the summer, were not in school. Now they're not back in school. Many offices haven't opened, and people are working, virtually. Kids are going to school virtually. And so people have a lot more flexibility with their time. So you put more flexibility with their time together with a burning desire to get out and travel and a burning desire to create new memories. And that's brought you a whole bunch of leisure business. The rest of the business, will take some time, but it is coming back. I mean, what's interesting is as we, come out of the summer season into the fall season, that's generally when you see a huge pickup in the business travel segment of the business and a big pickup in the group travel segment. And while we're not seeing the group will be on a much greater lag, people, are going to take some time, and I think it'll be largely post-vaccine before you're going to see people congregating that way. Business travel has started to come back. I mean, businesses are realizing they got to get their teams out. They have to meet with their partners. Their sales teams have to talk to people to generate incremental sales and the like. So while it's slow, there's no question in the fall season we've started to see some of the business travel come back. Still predominantly at this point, the demand is made up more of leisure. But, you didn't ask the question, but, I'll say it anyway. I'm a big believer that when you wake up in 2 or 3 years, not unlike other crises we've been through, the demand patterns will look a heck of a lot like they did a year ago. In 2 or 3 years, it'll just take some time to get there. And this has been a big health crisis. It's created a lot of fear, and it's going to take time to sort of work through that. It's going to obviously take more progress on testing and vaccines and therapeutics and the like, and just more data and information. Which reality is that's what's happening. I mean, why is leisure up? Why are people willing to go out? Why is business travel starting to pick up? Because we have made, while we're not through the pandemic by any stretch, we've made progress. I mean, people do feel like vaccines are coming. Certainly the therapies and the ability to treat the disease, we've made huge advances. And there's a lot more data where people can assess their risk depending on, their own individual circumstances. So if they're young, and they don't have pre-existing conditions, and are in very good health, at this point, I think there's enough data in where people are saying, okay, if I'm responsible, I actually can start to have some, greater level of mobility. And I think, that we will continue, I think, to see people more and more look at the data, make their own individual assessment. And then ultimately, I think, if and when, and I think it's more a when than an if, you get to, point of having vaccines that are, hopefully multiple vaccines that have a reasonable level of effectiveness, I think you'll see a step change. Meaning, I think there is a huge amount, and certainly our research suggests it, and I think common sense suggests it. There's a huge amount of pent-up demand. People love traveling; they want to get out. And by the way, even business travel, people like business travel. It's a break from the monotony in some cases of their work, and they need to be effective. Not everybody, but many people in their jobs, it's really hard to be effective without, some face-to-face interaction. So there's a huge amount of pent-up travel demand building. And I think the deeper, the further we get through the crisis, the more of that will be released, as people judge it. And I think vaccines, ultimately help create a step change in mobility.
How important is in the travel and leisure ecosystem are airlines to your business? I know you can only really control your business, but I'm curious because I was actually looking at going to California the other day, and I covered this, and I could not believe how many flights have been cut. So if I even wanted to go on a business trip, how difficult it would be.
Well, at the moment, what's interesting, and but not surprising, given that the bulk of the demand thus far in the recovery has been leisure, as we already talked about. And it's not just been, it's been a lot more drive to, so the majority of the business at the, through the summer and so far into the fall, has tilted towards drive to business. But if you go, back a year ago and look at, through the past, decades, and I think if you fast forward, as I said, a couple of years when demand patterns normalize, the majority of the business for us, people are coming by planes. And so, the short answer to the story is, airline business is critical and important infrastructure for our industry.
Do you think that we need more stimulus coming from the government for the travel and leisure industries?
Yeah, well, yes. Okay, let me unpack that a little bit. I think it's pretty clear to me and most that we need additional stimulus to the economy. Period. Okay. Now, we need it in the travel and tourism space because we've been one of the hardest hit segments of all segments. I mean, obviously, mobility strikes at the heart of our business. When you shut the whole world down and you have no mobility, you have no revenues in the travel and tourism business. And so we have been, while we have some mobility now and things have recovered a bit, as we've described, we have a long, long way to go. And we have been dramatically impacted as an industry. And so we need it broadly, we need it specifically for our industry, and the places that we need it, I think, do, largely sync up, maybe with an exception, meaning, and what's being worked on in terms of figuring out continuation of unemployment insurance so that we're taking care of frontline team members that are most in harm's way. We need to continue to do that. Small business, creating a bridge so that a liquidity crisis doesn't turn into solvency crisis for a huge number of small businesses. Our business of all the ownership of all these hotels all around the country and around the world, for that matter, is not all small business, but it is the majority of it is small business, and they're dying, and so they need a bridge for liquidity. The other thing that is ultimately needed as we get to the other side of the health crisis, and is very specific, those first two things I think are broader, unemployment insurance, continuation, bridge of liquidity for small business. That, what is needed ultimately for our business too is a stimulus that gives people the right incentives to want to start traveling again when we get a little further in the health crisis and people feel like they can do it safely. That's probably, rationally on the other side of more vaccine development and sort of approvals and the ability to actually distribute it. But in the end, in my opinion, we're gonna have to figure out a way to try and use stimulus to sort of jumpstart the industry and give people incentives coming out of this pandemic where they've had fear when they are safe to get back on the road again. I mean, you think about it, we are one of the largest businesses in the country, travel and tourism. We're one of the largest businesses in the world. We're one of the biggest employers. I mean, in the world, we're roughly 10% of jobs are in our industry, roughly 10% of global GDP is in our industry. And we've been incredibly hard hit, and there have been a lot of jobs lost. Still, millions of jobs. I think the latest number I saw was 8 or 10 million jobs have still been impacted. And so we certainly have to do take care of those people while the economy is recovering and give small businesses a bridge to get to the other side. But ultimately, if we don't create some form of stimulus, you're going to have a lot of people unemployed for a lot longer.
Chris, we're going to have to leave it there, but I just want to ask you one more question, just real quick. As you said, 95% of travelers in your survey are missing travel right now. I am missing the breakfast buffet. I want to know what you miss the most.
You're missing the breakfast buffet. My wife hates the breakfast buffet, but a lot of people do love the breakfast buffet. You trust me, there is a way to do it safely, and ultimately you will be able to enjoy your breakfast buffet once again. I think it may take a little time, but I'm reasonably confident that as we get into 2021, maybe the second or third quarter of 2021, you'll be able to enjoy the breakfast buffet once again. At this point, just to make sure that we are being super careful on hygiene and cleanliness, given where we are with the pandemic, we've sort of modified food and beverage a bit to address those issues. But we have developed some ways where we think we can give you what you want and do it safely. And hopefully next year you'll be back at in the buffet line, filling your plate up.
Yeah, if you need me to talk to your wife, no problem. I can sort that out and tell her all the.
I know. I don't know what it is. She's, somehow she doesn't like it, but she does like mini bars.
Who doesn't? All right, Chris, it's great to get a chance to talk with you. Good luck on the future, and stay in touch.
Up next, the CEO of Booking Holdings, Glenn Fogel, and then one of the most influential investors in the world today, Ray Dalio will be here. Stay with us.
Vogel has been the CEO of Booking Holdings since 2017. He's held various top management positions with Booking Holdings for the past 20 years. Vogel runs a world leader in travel services with brands like Booking.com, Priceline, Kayak, OpenTable, and RentalCars.com. 844 million room nights were booked across Booking Holdings in 2019. But this year, the company faced the biggest challenge yet, the COVID-19 pandemic.
Welcome back to Yahoo Finance's All Markets Summit. I'm Sabine Marcellus. Glenn Fogel, it's great to have you on.
Well, thank you so much for having me.
So the coronavirus pandemic has plunged the U.S. into an economic crisis. Airline passenger volume has dropped nearly 70% compared to last year. In the second quarter, at your company, Booking Holdings, you saw bookings drop 91%, revenue fall 84%, but you have taken steps to mitigate those losses, such as raising $4 billion in debt from investors and laying off roughly 4,000 employees globally. Now, have those measures helped, or are you still in crisis mode?
Well, first of all, it's tragic what's happening right now. I mean, forget about the financial thing. Let's just talk about how sad it is. The number of people who have died, the number of people who are very ill, and that's just tragic to begin with. Then you get into the financial health, and certainly many companies are hurting, and ours is hurting definitely because of what's happened with this pandemic. Travel's hitting it the most. Now, the actions we've taken have certainly helped and will help us get through this. But we all need a lot more than just us cutting costs. We need, obviously, a vaccine first. That's what we all need, so people feel safe to travel. Also, therapeutic. So if you got sick, that you felt you'd get better. That's important. So once people feel safe, then we need government. We need money from governments to help prime the pump in travel and help bring back this great industry.
And as you were talking there about the personal aspect, obviously, of the pandemic, before we dig into all the financials, so I know that you actually, as your company was dealing with this massive financial shock from the coronavirus shutdown in mid-March, you actually got infected with the coronavirus. So you were dealing with 101-degree fever and a headache. Tell us about that experience.
Yeah, it was at the very early part of the infection in the U.S. This is in March, and I live in the New York area where it was the hot spot that started off the infections in the U.S. And I was concerned, but fortunately, it was a very, very mild thing for me and my family, my entire family, my wife, my children. We all became infected, but fortunately, it was relatively mild for us, and I was feeling better in just a couple of days. And now we've given plasma. Hopefully that's helping people. We don't know, but hopefully it is. But I'll tell you, it's a scary thing. And when I see people without masks, when I see people not being socially distant, I'm saying, why are you doing that? What's the downside? How bad is it if you wear a mask, right? Just even if you don't believe that it's helpful, there's no downside. There's only potential upside. So if we all did this, maybe we'd be like in places like Japan, where they do it and the infection rate is very, very low. Maybe in Thailand, where they wear masks and the infection rate is very, very low. Think about it. Something as simple as wearing masks, maintaining social distance, how many people would be alive right now?
Absolutely. Those are very important steps people need to take to not just protect themselves, but to protect others. Now, President Trump says that we're rounding the corner when it comes to the pandemic. What do you think that means for the travel industry?
Well, I can't really answer for what the president meant by that, but I will say we do read the news about how more and more progress is being made on the vaccines, which, as I mentioned, is without doubt the most important thing in recovery for travel will be the feeling that you can travel safely. So as soon as that comes around, I believe we will get recovery. That being said, it's going to take a long time. Even after a vaccine has said that it's safe to use and it's effective, it's going to take time to get that distributed for people to take it. So we always say the recovery for travel is not going to be in quarters, it's going to be in years. But I'll tell you, part of the length of this recovery is going to be determined by governments and how fast and how willing are they willing to step up and help the people who have been so terribly hurt. The literally millions and millions of people who've lost their jobs. And these are people at the entry level of the economic ladder who are just coming in. These are the people who really need that help. And I urge all of the governments around the world, but particularly my government, the United States, to please get together, come up with the way to provide help to this industry.
Now, what kind of concrete steps would you like the White House and Congress to come up with to help the travel industry? They obviously did the Paycheck Protection Program for small businesses as a part of the CARES Act. Did that help the travel industry, or is a lot more money needed? And if so, how much?
Well, I think a lot more is needed. Of course, you still see, look what we just saw recently, how many people are being let go by the airlines right now. And yes, you furlough someone, maybe you bring them back down the road. But the fact is, the longer it waits, the harder it is to bring people back. Maybe they're not available. It takes longer to restart the industry. That's important in the short run. But in the long run, what it is when it is safe to travel, when people feel it's safe, that's where the government can really help by offering up tax credits or incentives to get people traveling. We're dealing with that right now in Japan, for example, where the government in Japan is providing money to help stimulate travel. Thailand, same thing, doing that in other parts of the world. So a targeted program that makes it cheaper for people to travel, give them that incentive, that tax break to go travel, that'll get them going.
Right, definitely. Tax break as a part of the steps that will definitely help. But given that there's an election, it's about a week away, it's unlikely that we're going to get more government help. So let's talk about what's been working for the travel industry, some of the positive trends. For example, alternative accommodation bookings. I saw that has actually increased significantly at your company. So tell me about that.
No, that is an interesting phenomenon. So we all know over time, more and more people have been looking at using what we call an alternative accommodation, a home, for example, rather than a hotel. And that trend had been happening more and more and more. But this pandemic has just done a step functional change. In the second quarter, more than 40% of our new bookings were going to that alternative accommodations. That's about twice what it was the year earlier. Clearly, people said they want to go to a place where there aren't other people they have to worry about. Instead of getting into a crowded lobby or a crowded elevator, you're going to a home and you don't have to worry about anybody else. Safety, again, very important. In addition, people were very hyper-local because no one's getting on a plane. So you're going on a holiday somewhere you can drive to. So it's very close. Those are some of the trends we saw, and I expect this to continue for some time.
And let's get into some of the safety measures, because we're seeing a trend where people are traveling closer to home. They may prefer to stay at a stranger's house versus spending the night at a hotel. How has that impacted hotels that you also obviously work with?
Well, obviously, it certainly hurts in terms of demand. When you increase supply that much, all of a sudden where people, let's say before there was any of this alternative accommodations, where would you go? You have to go to a hotel. You don't have a lot of choice. Now there's a lot more choice. So the hotels have to step it up and make it so that it is safe to go to a hotel and people feel that it's safe. So you'll see the hotels are advertising how they're doing different types of cleanliness and things to make sure that there's no infection there. And it's putting out space in the lobby so nobody gets too close. And plastic shields in front of the lobby, all sorts of things to make it safer. And what we're doing is we're helping the hotels by having them give us all the information, all the steps they're taking to make that hotel stay safe. And we're putting it on the website in the description of those hotels so people know, this hotel is doing all these great things to be safe. I feel safer going there. It's good for everybody.
And what about people's homes? How are you handling that? Can it get kind of sticky points there when you're telling someone maybe they should clean up their homes for safety issues with the pandemic?
You know, it's interesting because before we started seeing the data, right when the pandemic really started, I wasn't sure which way it was going to go. Would people say, well, I'd rather go to a hotel, even though there are lots of people, because I feel safer that they're going to do industrial strength cleaning? Or I feel better about the home because fewer people, but how well are they really cleaning and when was the last person in there or not? It turns out people are willing to say, you know, I think they're doing a good job cleaning at the home, and that's why those numbers have gone up. But that being said, if 40% of our new bookings are homes, that means 60% of our new bookings are still hotels. So people still like going to hotels. In fact, more people go to hotels than homes with us right now. So that's, there's obviously room for both. It's really why our site offers both. You make the choice.
Right. No, for sure. It's up to the customer and the consumers. But also when we're seeing when it comes to ongoing travel restrictions abroad for Americans who would like to travel internationally, I noticed on the Kayak website, you're actually advertising more road trips and car rentals versus flights. So how has that impacted the business there? And when do you think enthusiasm for air travel will return?
Well, we definitely did that because people wanted to travel by car, be safe and all that. And we're always trying to adjust the company to be what people really want. That's what we did because it was the thing that people wanted. That being said is, how do we get people back into planes? We get people back into planes by making sure it's safe to get on a plane. People will get on, people want to travel and they want to travel to the places they love to go before on a plane, but they don't want to do it if they think there's any chance that they're going to get sick. So that's why we really need that effort by all of the players, from the pharmaceuticals who are working so well and so hard on the vaccine, to the airlines that's put together all their different protocols to maintain as much safety as is possible. What's really interesting is that air in the plane, it's really safe because the amount of filtration that is done there. A lot of people don't know that, but you're pretty safe with that air in the plane, but it's perception. And people just don't think, hey, I don't want to get on a plane and have a lot of other people in this long tube. It's unfortunate for the industry, but that's how human beings are.
For sure. And with all the uncertainty still out there, it's hard to plan ahead, even if it is a road trip, even if you are traveling locally. So how have you been handling when it comes to customers wanting refunds once they change their mind, or they could possibly see that it's an area where there's a spike in coronavirus cases, they no longer want to go there? How do you deal with that from a business standpoint?
Yeah, no, we definitely noticed that, and we've been talking about that even in our earnings for the second quarter, where what we call the booking window shrunk dramatically as people were wanting to wait before they decided to make a choice because they don't want to have that long time between booking and then going. But even more so is so many of our properties offer you a free cancellation. So you book with us, you book at booking.com, and you don't have to worry about whether or not you're going to cancel or not because it's not going to cost you any money. You can wait until the very end to decide whether to go or not. But I will say that it is one of those areas, though, that does cause concern for people. They're just not sure about the new rules that are going to come down because it's not just whether or not they should travel or not. It's whether the governments want you to travel or not. And there are issues where you're afraid I'll go on a trip and all of a sudden the rules will change and I'll have to come back and have 14 days of quarantine or whatever. So it's very complicated. We're trying to put all that information out on the site. We're working with the European governments to put that information in place that everybody can see it. It's really one of those issues that's keeping people from traveling is the fear that their other parts of their lives will be impacted by new rules such as quarantines and such.
Absolutely. And also leadership and CEOs also being impacted by this. So I know that you've been, Glenn, through other crises like 9/11 and the 2008 financial crisis. What is the biggest mistake a CEO can make in dealing with a future that's so uncertain?
Well, I think one of the mistakes that a lot of people make is not looking beyond the current crisis. And yes, you have to deal with the current crisis immediately. And for example, we have to let people go now. And it's really sad letting people go. But we can't not be thinking about how are we going to develop new products, new services for the future, because travel will come back and we need to be prepared so when it comes back that we are positioned to take advantage of that return in demand. So for example, we talk about this thing called the connected trip, making it so much easier for anybody to travel and everything all in one place connected instead of having to deal with lots of different services. Well, we're working on that right now. I don't want people to stop working on that right now. I want people to continue to work just as hard now as they were last year so that when we complete the system, it's ready to rock and people, when they come back, they can use it right away. I can't just concentrate only on today. I've always got to be looking forward.
Absolutely. That's definitely the way to do it. Look at the present, but also plan for the future. Glenn Fogel, CEO of Booking Holdings, it was great to have you on. Thanks so much.
Well, thank you very much for having me.
Still ahead, influential investor and head of the world's largest hedge fund, Ray Dalio, will join us. And then the next generation of private equity with David and Ellie Rubenstein. Stay with us.
Welcome back to the Yahoo Finance All Markets Summit. Road to Recovery, I'm Andy Serwer, checking in on the markets. Stocks taking a beating at this hour. The Dow Jones Industrials down nearly 900 points or 2.98%. NASDAQ down 2.37% or 273 points. The S&P down 85 points or 2.47%. Airline stocks getting hit the most, the hardest. We just heard from Delta CEO Ed Bastian. Also, bank stocks not doing well either. We also heard from the Hilton CEO just recently. Bank stocks also flashing red lights as well. Rising coronavirus cases in the United States and Europe causing the carnage, plus the fact there is no stimulus package in sight right now coming out of Washington, D.C., the Democrats and Republicans continuing to blame each other. All right, right now we're going to go back to the programming and we'll bring in an interview with Ray Dalio of Bridgewater.
Ray Dalio is one of the most influential investors in the world today. He started his company Bridgewater out of his 2-bedroom apartment in New York City in 1975 and has grown it into the world's largest hedge fund. Dalio is the author of the New York Times #1 bestseller, Principles, Life and Work, in which he shares a blueprint for success, personal and professional. Dalio is an active philanthropist and conservationist with a special interest in ocean exploration and conservation.
I'm pleased to bring in our next guest, Ray Dalio, the founder of Bridgewater Associates, the world's largest and most profitable hedge fund firm. Ray is also a well-known philanthropist and an author of multiple books. Ray, it's great to have you with us.
So nice to be here.
So I mentioned at the top that you're an author of multiple books, and I know that you're writing one now called The Changing World Order, and you've been talking about 3 forces at play that were here pre-pandemic. Would love for you to share your worldview with our viewers and listeners.
I do research, and so this is a study that I've been doing, and then I decided to share it with people because I think it's so important. A number of years ago, first with 2008, we got into a monetary situation, of course, where we're printing money, creating a lot of debt, and monetizing it. And then populism emerged around the world. And President Trump, who was more of a populist, emerged. And it affected tax policy, it affected markets in a lot of different ways. And that led me to realize that there are 3 big things that are going on in the world that are dominant. And then COVID came along. Those 3 forces are, first, the long-term debt and monetary cycle, which I mean the creating a lot of debt, monetizing it, and the implications of that, which reverberate through the system in terms of all the markets and everything. The second is this conflict, this polarization, this wealth gap, and how we're at each other's throats. And I looked at the wealth gap, and I looked at a lot of measures of conflict going back in time, and I found that they were in the 1930 to 45 period. The printing of money, as I described, and debt monetization was also in the 1930 to 45 period. And the third big influence is the rise of China, so the rise of a great power, challenging an existing great power, the United States. And that has enormous implications. As an investor, I think what are the relative appeals of the markets, but it has a lot of implications. It's not just a trade war. So the markets and everything were reverberating the trade war, the technology war, the geopolitical war in Taiwan and the South China Seas, and then also the capital war. We're seeing that emerge. So those 3 factors required me to then go back in history. And I wanted to study the rises and declines of reserve currency empires. So I needed to go back far enough that I would have a few. So I had to go back 500 years so I could see the rise and decline of the Dutch Empire and its reserve currency, the rise and decline of the British Empire and its reserve currency, the rise and beginning of decline for the United States in its reserve currency, and China. And so those are the forces, and that's what I did, which you're referring to. And that, by the way, that's available for anybody to read on LinkedIn.
So to recap, it's the high levels of debt, extremely low interest rates, the large wealth gaps and political divisions, and the rising world power, which was China versus this kind of overextended power being the US. And I just heard you say, Ray, in that thesis there, that you said this was the most analogous to the 1930, 1945 time period. Of course, if we go back in history, we understand what happened. And that sounds really concerning.
Well, it is really concerning. And it's even more concerning when I went back to find the 500 years and the times that repeated over and over again. And what I found was there's a cycle. There's a big cycle. You know, you start a new world order. In 1945, we began a world order after the war. They decided how the world would be divided. They created the dollar as the world's reserve currency and so on. And then because there's so much fighting and then you've established a power that is a dominant power, you have a period of peace and prosperity. And then that gets extrapolated and it leads to more debt. Fear of bad times diminishes. Opportunities of borrowing and getting in debt, particularly if you have a reserve currency, because the world wants to save in that reserve currency. And that gets the country deeper and deeper in debt. And so you have those debt increases and you have bubbles, but you have prosperity. And bubbles are really fun. They're really enjoyable. They're great. But then you get to the point that there is a limitation to that. And those limitations become apparent when the central bank can't easily produce money and credit. That starts when you hit zero interest rates, because then you can't do it the same. Okay, then you go to that's monetary policy one is interest rate monetary policy. When that doesn't work anymore, you go to the next type of monetary policy, which is printing money and buying financial assets. But that purchases of financial assets and other things widen the wealth gap, because those who have financial assets do better than those who don't have financial assets, and you have a wider and wider wealth gap. And when you have that wider wealth gap, and then you have another downturn in an economy, that's a formula for a lot of conflict. And so that's what we see. So what does a central bank then do? If it taxes, it takes money out of the economy. That's not good. It's a problem. Mm-hmm. And if it cuts expenses, that's a problem. So the central bank always, through history, this goes back literally thousands of years, the central bank or the entity that controls money then prints more money. Because think of it, we got all those checks in the mail, and we needed to get all those checks in the mail, but you can't take it away from anybody. So where does it come from and what are the implications? So that happens for logical reasons. And it often happens at the same time as there's a rising power externally as a competitor, which is a challenge in that environment. So yes, it's one of those times. And I think people are not aware of it. Because I learned from my experiences that many things that happened in my lifetime that surprised me never happened in my lifetime before, but they happened many times before and in history. And that if I would go back in history, I could see that. The first time that happened was in 1971. I was clerking on the floor of the New York Stock Exchange. And Richard Nixon gets in front of the camera and says, "We're not going to give you the gold," and devalues the dollar. And I walked on the floor of the stock exchange. I figured there was a big crisis. And I walked on the floor of the stock exchange, and the stock market was up 4%, which was the most in a couple of decades. And I said, wow, that's surprising. And then I found out that Roosevelt did the exact same thing on March 5th, 1933. And what was done in those two times is the same thing that was done on April 9th of this year when the federal government and the Federal Reserve decided to produce a lot more money and credit. So yes, you need these perspectives, and I want to pass that along, which is why I'm passing along that research on the LinkedIn piece.
Yeah, and it's always interesting, especially when you mentioned a mistake that 1971 on the floor of the stock exchange, what you thought was happening or going to happen and it didn't. So you looked back in history and did this deep study. A couple of things I'd like to kind of double click on here, Ray. Monetary policy, you were just talking about monetary policy 1, monetary policy 2. And, when you think about what's happened, first you had the low interest rates, you couldn't go any lower, so then you had to purchase the financial assets. You mentioned it benefits the wealthier because they own the stocks. So I guess, are we exacerbating wealth inequality here? And do we need a rethink of monetary policy that's more targeted, that actually can help stimulate those who really need it?
Well, that's what monetary policy 3 is. So monetary policy 1 is interest rate based. Monetary policy 2 is the classic quantitative easing. Federal Reserve buys, or central banks buy, financial assets. Monetary policy 3, which is now what we are seeing and what is needed, is the production of that debt through government borrowing and the government direction of those checks to those who need it most. That's what we just saw. And that being then monetized by the central banks. And so we're in a new era, of monetary policy 3, as I call it. Monetary policy 3 will mean that the free market will play a much less role in determining those capital market flows, that the government, as we come into the future, will be thinking, how do I get that money to those who need it the most? So it'll be a highly political decision, much more political than it was in the past, and that the central bank then will monetize those political decisions. So monetary policy 3 means there's that type of cooperation. So those are the two dimensions of the big change environment. You're going to see much more government influence and direction of where money goes, which will have a big impact on not only the economy, but of markets. You have to watch what they're going to spend their money on, and they have to watch where they're going to get their money from, what taxes and so on means. The government will play a bigger role. And it also means that there'll be much more debt that is monetized. And that has implications for the value of financial assets. It has implications for the value of the currencies and so on.
Let's unpack that further, the monetization of the debt and what the implications could be. I mean, you're talking about, of course, when we think about the US, we have the world's reserve currency. That sounds like that status is very much, I guess, is it under threat here? Is that what you're essentially saying?
Yes. If you look at those arcs, there are many characteristics of those, but when you get to the end of the arc, if money is hard, when it was connected to gold or it was gold, they always broke that link. And if it was soft, they would always print more money. And you can't raise living standards by printing more money. You can redistribute it. Certainly the money that is being received by those in the form of checks and they go out and spend it helps their living standards. But what it does is it diminishes the value of that cash, and it diminishes the value of bonds, because bonds are a promise to receive a lot of currency. And it shifts wealth to financial assets. It always sends stocks higher, like my 1971 lesson. It always sends gold higher. And it also always shifts the impact of currency. So when we're looking at this, we're going to also see, I think, the rise of the increased importance of China's renminbi as a currency. It's got a long way to go before it's going to be a reserve currency. But I think that one of the important things to see is that you're going to see favorable capital flows for China, And if you do a comparison of their markets, where their interest rates are, where their capital markets, who's doing IPOs, nearly half of the IPOs, depending, we'll find out, but something like 45% of the IPOs there will be done in China's markets, Shanghai and Hong Kong this year, new offerings. That'll drive and more you're going to see the internationalization of the renminbi. You're going to see capital flows move in those directions. And those kind of analogous movements have repeated through history.
And then I guess tying it back to, the investors who are watching, a lot of retail investors, a lot of folks who are my generation as well, how should they be thinking about this? It sounds like, the kind of, I guess the outperformance that we've seen in the US stock market for so long, they need to kind of think beyond the US. Is that what I'm also hearing?
Well, I think first, the most important thing is to realize first, cash is a risky asset. I think so many people think if I go to cash, I'm going to be safe because it's much less volatile. But please realize in this environment of producing a lot more cash, the real returns go down. It's a seductive risky asset because, let's say, relative to inflation, you might get taxed 2% a year. And as you're taxed 2% a year, that's a huge amount of money over time, but it's a subtle tax. So first, watch that. Think about, currency issue or the value of money issue. Then in terms of that, yes, you want to diversify to storeholds of wealth. And the second big thing is diversify well. Diversify well into diversify of asset classes, but diversify of countries, diversify currencies. So think about diversification. If you diversify well, you lower your risk without lowering your expected returns, if you know how to do that well. But I would say, what are the three main things? I don't know. Diversify, I would say. So I would say those would be kind of the main headlines that I'd like to pass.
Mm-hmm. And of course, we're heading into an election and it's just a matter of days. And you have to wonder some of the themes that we've talked about here, whether it's the wealth gaps, the political gaps, the populist on the left and the right. How do you think about the election and I guess the scenarios, the probabilities, and how that might play into some of these bigger themes that we have talked about earlier?
Well, first of all, I think what is the most important thing for the United States? And I think the most important thing of the United States is to do the fundamental things right. We'll talk about that in a second. And also to come together. I'm most concerned about one side trying to beat the other side and doing damage, because history has shown that when you get those gaps, those wealth gaps and the values gaps and anger, you do get demonstrations, you do get violence, and you can move to the point that the respect for the system is not good. I have a principle, which is when the causes that people are behind are more important to them than the system is in jeopardy. So the bring it together and making sure that we can do that, I think, is of paramount importance. Then what are the fundamentals? The fundamentals, there's so many important fundamentals, but let me go through the important ones. Are you going to earn more than you spend so that you're going to build, we as a country, are we going to earn more than we spend so that we build our balance sheets? That's important for every individual, for every company, for every organization, and for every government. You can judge the health, the financial health, by those things. Then you have to go to the fundamentals that produce those things. And they start with educating your children well, broad-based, I think, broad-based, good public education, and civility. When I say education, I don't just mean, do you know how to read and write and all of those things? That's very important, of course. but also to behave civilly with each other, because societies that row in the same direction with a common mission, like an American dream, work better. And so I believe it starts with education and the basics, basically. Not what I was lucky to have. I went to a public school. I had parents who cared for me, loved me, and taught me some values. And so much. Those things are the most important fundamentals. Save more than, those things. If we can do that, that will be the most important thing, because wherever we are in relation to China or any place is going to be dependent on how we are with ourselves to do those fundamental things correctly.
Ray Dalio, founder of Bridgewater Associates, thank you so much.
Still ahead, the next generation of private equity and the next big thing for investors with David and Ellie Rubenstein, and then Glenn and James Hutchins. Stay with us.
Carlyle Group in 1987 and built it to become one of the world's largest and most successful private equity firms. It operates close to 400 investment vehicles across 32 locations around the world with over $200 billion in assets under management. Rubenstein is an active philanthropist and one of the original signatories of the Giving Pledge. David's daughter, Ellie Rubenstein, is also in the private equity business and is the CEO and co-founder of Mana Tree. One of its missions? To invest in companies that produce healthy and sustainable food. Her company is mostly women-led, and in April of 2020 announced it had raised $141 million for its first fund.
Welcome back to Yahoo Finance's All Market Summit Road to Recovery. I'm Shauna Smith, and I am joined by David Rubenstein, co-founder of the Carlyle Group, and his daughter, Ellie Rubenstein, co-founder and CEO of Mana Tree. And David and Ellie, thanks so much for taking the time to join us this afternoon. We're very excited to have the unique privilege of interviewing you both here together today on Yahoo Finance.
Thank you for inviting us.
Thank you for having us.
Ellie, I'm going to start with you first, because when we spoke a couple of days ago ahead of this interview, I was asking you about your relationship with your dad. And the first thing you said to me was, I've worshiped my dad since I was a little girl. I've always mimicked him. What did you learn about investing just by being around your dad and leveraging that knowledge with your own investment career?
Well, I'm sitting in my childhood home. I just drove here 20 minutes ago. It's the first time I've been here, I guess, since my father has become the quarantine king. And I had memories of going to Fresh Fields, which was a company that Carlyle actually bought. And I remember the most exciting thing about my dad's job was when they bought a grocery store, we got to go into it the day before. So for me, it was always about learning and understanding and going with him and seeing the innovation. And in that case, what I remember was that was one of the first grocery stores that actually had a sushi chef in it. So you could get sushi, like the takeaway sushi. So what I would say is, I think that people that are children of famous people, instead of looking at it, how did they make their money? Try to figure out what it is that makes them tick, and then take it and make it your own. And then that's what I've done in my own case. I've always been very focused on health and nutrition and improving human health.
Yeah, Ellie, you certainly did find what makes yourself tick, and I think that's something that's very clear. We'll talk about that a little bit more in just a second. But David, I want to ask you first, just Ellie has certainly learned a lot from you. We just heard that, but I also have a feeling that you've learned a lot from Ellie as well. I'm curious just how Ellie has influenced your way of thinking about potential investments over the years.
Well, she's convinced me that healthy food is probably going to make me live longer, that I should exercise more, that I should, probably invest more in her fund, that I should realize that healthy food is the wave of the future. And I think I've learned a lot. So it's a symbiotic relationship. I mean, she may have learned some things from me, but I think I'm now learning much more from her.
There certainly is so much to learn, especially when it comes to the health and importance here of food. And Ellie, I just want to ask you just about the COVID-19 pandemic, because that certainly brought health and well-being here to the forefront. And you're on a mission, like you were saying before, just to make food options healthier, to make them more accessible, to make the supply chain more transparent. The coronavirus has really exposed the vulnerabilities, I think, of food supply chains. How are you working to address these issues, especially in light of what we're seeing today during the pandemic?
It's a very interesting question, and I think most people don't truly recognize the connection of nutrition and link to health. So let's set the stage by this. Unfortunately, in the US, only half of the population is actually considered healthy. That is a staggering statistic. And if you think about that, over half of the population in the US is actually considered in the diabetes or pre-diabetes phase. It gets more diring when you think about according to Dr. Darius Mozaffarian, who's one of our mentors and advisors, only 12% of the US is metabolically healthy. And these were things that existed before COVID. So what COVID has done is shine light on the link of nutrition to poor health. And so our firm is trying to change the way that private equity dollars actually can improve health. So yes, we can have good returns, but how can we have good returns and get people healthy? And so if you look at, for example, diabetes, in the US alone, in 1 year, healthcare costs are actually $160 billion. And that is trying to solve diabetes. And what we're trying to say is, why not invest in companies that are at scale, that are healthy for you, that are essentially vertically integrated so that the supply chain disruption is not as big as what you might have seen in other industries. And that way we can actually improve the health of the environment and the health of the food and also the health of the companies to make sure that we can keep feeding people healthy during a pandemic.
Let me just add to that one of the reasons that there is a reasonably high fatality rate, or there was, for people that get COVID, were that the fatalities were often occurring in people who were overweight or had medical issues that could have been prevented. So if obviously some things are genetic and inherited, but if you can do a better job of exercising, eating healthier food, you're probably going to live longer and probably you'll be able to resist COVID much better.
Dad, does that mean you're going to start exercising, eating healthy food?
Well, it's impossible, but and my big problem is that somebody is sneaking into my house every night and moving my scale and either putting a new scale in or making it have 10 pounds more than it did the day before, at least the 10 pounds more than I think it should be. So I've got to find out why that scale keeps moving.
Well, we certainly have a lot of time here to figure that out, because it seems like, at least at this point in the pandemic, we certainly have many more months of these stay-at-home type of behaviors here ahead. And with that in mind, David, I'm curious, just as we try to, I guess, pinpoint or really realize how many changes we have seen because of the pandemic, and then also the extent of those changes, just in terms of how dramatic some of these long-lasting changes will be. How are you viewing that, just in terms of some of the short-term versus the more permanent changes, and then, of course, what that means for future investments?
Whenever you go through a complicated part of history, people always say the world's going to change, and sometimes it doesn't really change. On the other hand, there's a curse in China that is along the lines of, may you be condemned to live in a time of transition. Well, we're obviously living in a time of transition right now, because people used to go to work in their offices or their factory plants, whatever they are doing, now are not. They're like me, they're sitting at home. And it's an interesting phenomenon how quickly the world has changed. Think about this. The Industrial Revolution took about 100 years. The Internet Revolution, maybe 20 years. The smartphone revolution, maybe 5 to 7 years. Now, in less than 1 year, we have basically said we're going to do things on the equivalent of what we're doing now, Zoom or the Zoom equivalent. And it's amazing how many people have adapted to it in less than a year. And many people that I know do not want to go back to work in their offices, certainly not full time. So the world's going to change. People are going to travel a little bit less, I think. People are going to, eventually they'll travel again the way they were going to do, I suppose. But right now they're going to travel less, and that will probably happen for a while. They're also going to go out less in many ways. They're going to probably use hotels less than they were before. They're going to spend less time commuting to their offices than they were before. And they're probably going to buy different things than they bought before. And they're going to learn more technology than they knew before. So the world's going to change in many ways, and it's happened relatively quickly.
I just want to add to this. I wish people could see the scene of our house, but we used to say our investment thesis is how can we get better food faster, better, and cheaper, in the same way that Jeff Bezos uses that for Amazon. I think what my father has figured out during quarantine is he can get things faster, better, and cheaper by making our house be a warehouse for purchasing of all of his books. So the scene of our dining room is thousands of books that he's signing. And then his commute time is now 10 seconds instead of traveling around the world to meet investors. So I think that one of the advantages of when you get to observe people that come before you in the industry is if you can see that they are able to innovate while things happen. We've always said that the best leaders are agile. So it's amazing to see this. I wish we could turn the camera right now to show people what my father has figured out.
So human interaction has obviously been the hallmark of how people get things done throughout the history. So it's not likely that all of a sudden people say, I don't want to have human interaction I think they will want to have human interaction, but they're going to come back to it slowly. And I don't think people will feel they need to travel around the world for a half-hour meeting. They can do it on a Zoom conference kind of call. So the world will change in ways we can't predict. But I do think that that you're going to see people adapting to this way of life for quite some time. And now, 10 years from now, who knows? But I do think that over the next couple of years, you're not going to see people rushing back to work the way they did before.
So Ellie, just you at Managed Tree Partners, how are you then adjusting your leadership behavior right now, just in terms of what you think your company is going to look like 12, 18, 24 months from now? Because certainly what we've seen play out over the last 9 months, like you and your father were just talking about, there certainly are a number of changes that are already underway, but I think a lot of it is still unknown at this point.
You know, at our firm, we're very enthusiastic about what we see. We used to say that maybe it would take 5 to 7 years to get a food exit in this industry. We're seeing faster exits happen in the span of 1 to 3 years. We actually now feel like food can be a top 5 asset class in somebody's portfolio. And what makes us excited about it is if you look at consumer purchases today, 77% of purchases in the US are done with personal health in mind. And related to food, 69% of all foods purchased, the number one criteria is actually the nutritional content. So I think another thing my father used to question when we started our firm is, we're based in Vail, Colorado. And he'd say, why Vail? And we would say, well, we're the healthiest county per capita in the US. And as COVID has shined light on what really matters, which is your health, it is important to live and work in a place where you can have outdoor access, where you can be healthy and focus on your own immunity. And that's a lesson my father has always, said, he wanted for his kids, how to be healthy and happy. So that's why we're based in Vail. And that's why we are singularly focusing on getting more dollars into the industry, focused on human health. It's never been more important. And I think it's not just food. COVID has done that in many industries. So, another quote that I always love to tell people, when you need to convince your parents to come alongside what you believe in, you try to find people that can actually prove the point. So Mike Milken said something to my father, which is a very interesting point related to investing. Food is where the internet is 15 years ago. And so if you think about how fast that change happened, that's what we're now seeing within food, is that it's so fast. And, maybe my dad could tell a story about, he never understood it at first. He said, I don't understand. Humans have been eating for thousands of years. So what changed? And I think what changed is now people realize there's an efficiency to food. If you can eat and make yourselves healthy and make money while understanding that concept, it's a very unique thing to deploy capital into.
Now, think about it. Humans came out of caves as Homo sapiens roughly 400,000 years ago. And for 99% of that time, humans wanted to eat food for energy and sustenance to stay alive. It was really only in probably the last 50 years or so that humans realized that eating certain things would be healthier for you. And over the last 5 years, there has been a much more of an obsession that the healthier things you eat, the better you're likely to be, and the longer you're likely to live. And this is now not just in the United States, but it's all over the world. And so it's not just wealthy countries that realize if you eat healthy things, you're going to be better off. It's people all over the world who want to eat healthier things. So it's a global change in the way people keep alive by eating food.
And David, going off of that, just talking about so much change that has been underway, I'm curious just about investors' priorities from your perspective, because we can see that investors' priorities are changing clearly with what you guys were just talking about, the interest that Managed Tree has generated here over the last couple of years. David, how do you think investors have evolved from when you started Carlyle over 30 years ago?
In those days, I would say most people in the private equity world, let me speak to that, were mostly interested in the highest rate of return they could legally get from people like us. And so they were not as worried about ESG factors, not as worried about whether you're shipping jobs offshore, things like that. It was basically, what kind of return can you get me? How long will it take you to get it? And everything you're doing is legal, right? Now people say, I want to make sure I have an investment that I can be proud of. I have to go to my board and say, here's the ESG factors. I do believe, many investors say, that if you comply with ESG factors, you're likely to get a higher rate of return. For some period of time, people thought that ESG would mean you're going to get a lower rate of return. Increasingly, the zeitgeist of the era is that if you comply well with ESG factors, good corporate governance, good concern about the environment, good social practices, you are going to get a higher rate of return. And that's particularly true in diversity as well. Increasingly, investors say, I want to give money to people that have diverse people in their organizations because those people are going to reflect society much better than just old white males. And I think they're right. So the investor base has changed. And it's also changed. It's not just a U.S. investor base, but people all over the world are increasingly saying, I want to observe these kind of factors in my investments. And I'm more interested in doing something that's good for the world than just getting the extra 1 or 2 basis points I might get from an investment that's not doing something good for the world.
You know, what's interesting about what my father just said is when you are, you know, the daughter of somebody who really invented the industry, you take a hard look at the industry. And what Manatree is trying to do is make sure that we're reinventing private equity for the next 30 years. And so with that, that means not just ESG, we call it ESG plus H. And how do you combine all of the good stuff for the environment with also health? And also, what is also unique is that if you look at our firm, while I'm a woman, 6 out of 10 of us are women. And even within our investor base, 20% are women and another 25% are next generation. So that means 45% of our investors are usually not the typical investor that maybe Carlyle would be looking at. So we call it not only diversity of investors, diversity of our own team. And of course, we look for that in our portfolio companies, but it's really also diversity of ideas. And we don't believe that you need to have a private equity background to join this area. What we're looking for is the innovative minds that want to redo the industry. So Manatree is really trying to say, well, let's use food as a currency. But I would point out to people that you can't have the conversations on, you know, ESG and health or impact unless you have the rate of return. And, you know, in my father's case, he always says, you really think that you can get, you know, the true IRR that you need to prove this out. And that's exactly what we were looking for, is we want to do both. So we tried to have the seriousness of an institutionalized firm that something like Carlyle would, combined with healthy food.
Let me just add that when Ellie was getting the firm started, you always want to help your children. I think all parents want to do that, but you don't want to smother them. And so that if they do something, it's not because of you, it's that they did it on their own, and they should have that feeling. So you don't want to do too much, but you don't want to do too little. So I did say to Ellie, I'll help introduce her to a couple people. And when I introduced her a couple people who were my age, they didn't understand what she was talking about, but they said, well, I have a daughter, I have a son, they might understand it better. So the next generation understood exactly what healthy food was all about, and they tended to be much more supportive than their parents were.
And what's interesting about that is it became a global phenomenon. So like I said, I'm in my childhood home and I came across my Purdue capstone. And this is the, as my father would call it, the War and Peace 500-page report that I presented to him when I was in school about why we should position ourselves as a single family office investing in food. And what we came to learn is this was my focus. This was not the rest of my family. So how about we actually go separate our firm out? And I wanted to go find investors that believed in this. And so as I ran around the world in 2019, raising our fund, we actually thought we would be a $25 million fund starting. But it turns out that investors around the world are going through the same multi-generation transfer where children at my age are coming to their parents and say, Dad, let's make sure we have values in the way we're investing. And this is my area. And so I think what we've tried to do within our firm is give other families or institutions that work with families a model to say, here's how you can work with next generation to include their values, which are not irrelevant. So our firm, I think, has been a model for that. We have investors in 18 countries and 19 states. And more importantly, I think we've also shown people that you don't need to work in a family office to feel like you're contributing to family legacy. Find something you're really passionate about, become an expert, become knowledgeable, and then you can help guide your family like I have with my father in food. And that's probably the most important way to give back to your family, is show them you have a skill set that's useful, and then you earn respect of your parents.
You know, recently I did a book on leadership, and one of the qualities I've noticed in leaders around the world was that they had a passion for what they're doing. If you hate what you're doing, you're never going to be great at it. And so I tell young people all the time, particularly when I make a commencement speech or speak to students, find your passion. And your passion is something that your parents didn't want, that's fine. But you can't live your parents' life. You have to live your life. And what you have to do is find something you're passionate about. If you're passionate about it, you'll be really successful at it. I didn't really like some of the things I did before I started Carlyle. I wasn't a great lawyer. I didn't like it. And it was obvious to my clients I wasn't a great lawyer. Now I have something I'm passionate about. I'm fortunate my daughter has found something she's passionate about.
And one more thing I'd add, I think what's so unique is that, many people know my father for his philanthropy, but I don't think anyone ever said thank you for building Carlisle. And it is really one of the best asset classes, private equity. And so while my father and I have different views about where to put the money in private equity, me being food, I think we both really believe that private equity is the best asset class to outperform the market today. So it has been, really for me, the honor of the lifetime to sit, next to the guy that writes the book, How to Lead. Because what we're trying to figure out is how do you lead people to live healthier and happier lives? And for me, it'll probably take the next 30 years until I'm my father's age, and figuring out how do you get 1 billion people healthy and how can you use private equity to actually get and deploy capital into this asset class.
Well, I wish we had more time because there's certainly so much more to talk about, especially when it comes to how to lead in some of those conversations, David, that you did have with so many prominent people in that book. And I wish we also had time to turn the camera around so we could really see what that living room looks like and all the books that are stacked up there. But David and Ellie Rubenstein, it was great to have you together. Thanks so much for taking the time to join Yahoo Finance today.
Thank you very much.
Coming up here on Yahoo Finance, North Island Chairman Glenn Hutchins. He'll share his investment outlook for 2021 and beyond. And we'll also talk to a former White House Chief Economic Advisor, Gary Cohn. He'll join us at the NASDAQ with his thoughts on the economic recovery and the 2020 presidential election. You won't want to miss it.
Glenn Hutchins co-founded Silver Lake in 1999, and it has become one of the world's largest private equity firms investing in technology companies. It has invested in some of the biggest names in Silicon Valley, including Airbnb and Twitter. Hutchins serves on several boards and is a part owner of the Boston Celtics. He now runs North Island with his son, James. It invests mainly in financial companies and the crypto space.
Hello, everyone. I'm Andy Serwer, editor-in-chief of Yahoo Finance, and I'm joined by Glenn Hutchins, chairman of North Island. He was a co-founder of Silver Lake and part owner of the Boston Celtics, and his son, James, who runs North Island Ventures. Gentlemen, great to see you. Thanks for joining us.
Hello, Andy.
Hi, Andy. Thank you.
So, James, I have to start with you. I'm going to ask you, tell us how you guys work together and what's that like a little bit.
You know, it's actually been one of the most amazing experiences of my life. Growing up, my dad was just my dad. He was my little league coach. He was the guy that I sat and watched sports with. I kind of knew off to the side that he was this respected member of the private equity community, but he didn't bring that home. So it's been really nice to kind of see him in a work setting. And, you know, he's just a font of wisdom. He pulls on 30 years of experience investing just to help me and my partner, Travis, be better investors. And it's been really amazing experience so far.
Well, Glenn, that must make you feel pretty good. Some nice words there from your son. And
I think we can just stop right there, Andy.
Okay, we're done.
We're done.
It's all downhill from here. Is that what you're suggesting?
Exactly.
No.
Exactly.
Anyway, that's must be nice to hear. Talk a little bit more specifically about how you work together and what James is doing right now. We're pretty familiar, I guess, with your career, but tell us what James is up to.
Yeah, so first thing I would say, Andy, is this is not a family business. This is one of the early movers in the crypto venture capital space. James and his partner, Travis, both bring a very top shelf investing experience. James was head of research at Cohn, which is the world's largest tech hedge fund, I think. Travis had been the head of investments for Digital Currency Group, which is one of the leading cryptocurrency companies where I sit on the board, and I'm a shareholder. And so the first thing this is that these are two of the best investors kind of in the space, independent of, in my view, kind of our family relationship. That's kind of point one. I think the second thing is that people need to understand is that James and Travis are the managing partners, and I'm just in the general partner. They're the ones really doing all the work and making the investments, doing the due diligence, working with the companies. And my role has largely been to do two things. One is to help them think about investments and particularly portfolio construction. And the second is to help turn these companies that we're investing in these projects that we're investing in into companies. The cryptocurrency world is at the time period in which you're going from building products to forming business models around products. That's at the stage of its development. And unlike other investors in this space that have focused primarily on the coins and the tokens like Bitcoin or Ethereum or other things like that, we're overwhelmingly focused on building companies. And so that's my second contribution.
Hey, James, I'm curious about the back and forth between you guys when it comes to crypto. And, you know, I know your dad knows a lot about crypto. I mean, he was explaining to me years ago. So at first, maybe the learnings came from him. But at this point, are you telling him stuff about crypto that he doesn't know?
Well, I mean, I'd say, you know, we both collaborate. You know, he brings this 30 years of investing in finance and technology. And I would say, you know, I'm taking what he taught me about crypto and kind of expanding it. So we've taken his view of how this is the next great kind of payments technology. And we're thinking about how can you build new types of businesses, new types of online communities around that. So at the end of the day, we're kind of standing on his shoulders at all times, really.
So I came at this, Andy, as out of fintech. And when you and I probably first talked about this many years ago, my view was this was the place that we could transform the cost and convenience of payments, which is a still undisrupted part of the financial services economy, particularly credit cards, but also remittances, foreign exchange transactions, those sorts of things. What James has done together with Travis is really extend my understanding, first of all, that this technology can address anything of value, not just the conventional payments world. And second, that it actually points in the direction of a brand new computing paradigm, which is really transformative.
Len, let me shift gears a little bit and pick your brain about the recovery, the U.S. recovery right now. Where do you think we are at this point?
Well, so second quarter was down a third. Third quarter was up a third, which means you're still about 17% short of where you started, right? Because you need to go back up 50% to get back to get the third back that you lost. So we're starting out down about 17%. And so the way I put it is the depression is over, and now the recession is setting in. We're not in a period of recovery. You shouldn't confuse the bounce back as one of recovery, in my view. And the long-term consequences of the damage done to the economy by the fundamental mismanagement of the pandemic are what we're dealing with right now. So I would say we've gone from, the good news is we're no longer in depression-like circumstances. The bad news is we're in pretty severe recession-like circumstances.
And what about a stimulus here, Glenn? And why has Congress struggled so mightily to get this done?
Well, stimulus is absolutely vital, Andy. I mean, there's a piece of analysis up on the Brookings website right now that demonstrates we need about $2 trillion of stimulus to get back to trend growth. And it almost certainly needs to be heavily tilted toward unemployment insurance, because that's what's clearly has had the most amount of impact given the nature of this problem, which was a sudden shock to employment. The political experts can explain to you why we're not getting anything done. Look, from my perspective, it's some combination of the Senate Republicans decided to focus on a Supreme Court nomination rather than stimulus. They clearly prioritized that. So valuable time was wasted there. And according to the new most recent analyses, they actually you need 13 Republicans to team with the 47 Democrats to get something done. And there's such an ideological opposition to spending more money that they're actually having trouble getting consensus around those 13 Republicans to get things done. But that's just what I read in the newspapers. It's really too bad because the economy vitally needs it. If we had the OECD average, the 38 most wealthy countries in the world, performance with respect to management of the pandemic, we would have had about, there's another Brookings report on this, we would have had about 100,000 less people die and nearly 9 million fewer people unemployed. So we're in a, you saw the China economy starting to grow again. We're in a very bad place with respect to how we manage the pandemic, and the economic consequences of that are manifest, and they're going to be long-term, and they need to be addressed.
James, over to you. I want to ask you about crypto and the time of COVID. How has the pricing and the markets gone during this time? I mean, and it speaks to this larger issue of what is crypto and the world of crypto writ large correlated to? But why don't you take the first part of that first?
Sure. So like everything at the beginning of the pandemic in March, there was this risk off period where there was some large drawdowns and sell downs, both in the Bitcoin and Ethereum markets. However, as people started to realize that, cryptocurrencies are this global permissionless financial system where anyone can kind of access these markets, anyone can send money around the world, there was actually been a huge rebound. And actually, for the last 3 or 4 months, we've seen an enormous explosion in decentralized financial applications built on Ethereum. And so we've actually seen a huge boom time during the COVID crisis that people have started to understand the power of digitally native finance in a time of kind of lockdowns and everyone stuck inside.
And what do you think crypto, when will it sort of become a mass thing in terms of financial services? So right now you keep saying it's sort of on the edges of things, and JP Morgan kind of says this, yep, we love crypto too, but we're not really, that's not mainstream for us. Talk to us about the future evolution of this world, if you will.
Sure, happy to. So we're starting to reach kind of mainstream adoption in the stable coin space. So stable coins are dollar-denominated crypto assets that live on these networks like Ethereum. And they allow anybody to kind of access the US dollar market. And this year, we're going to see about $800 billion of transactional value in stablecoins, which is about 0.5% of kind of annual global transaction volumes. So I would say we're getting pretty close to kind of real usage at a large scale in stablecoins. And then the other place that we see kind of the beginnings of mass adoption is in crypto collectibles or video games. And so taking a step back, crypto networks are the first place where you can have provable digital ownership of items. For the first time, I can prove that I own a trading card, I own a piece of a video game, and companies like Flow are starting to build video games with large brands like the NBA, in this game called NBA Top Shot, where you can buy, sell, and trade NBA trading cards. And I think that might be the first place where we see kind of real mass adoption of kind of crypto.
And the trading card isn't a conventional trading card like you think of it.
No.
It's a unique video clip of your player doing something important as a trading card.
It's all new stuff. Hey, Glenn, how much of an existential threat is crypto to legacy financial services companies, ultimately?
Well, I think that the important thing about crypto is that it works inside the regulatory framework of various countries. So there will always be a role for regulated deposit-taking institutions that operate inside the AML, KYC, deposit insurance, all that kind of heavy capital invested type of framework. I think the primary place where crypto is addressable is all the other products and services that don't relate directly to deposit taking and lending. The technology associated with the infrastructure and the payment system, the custody system, the clearing, all the kind of stuff which turns out to be the high profit margin business for a lot of these banks, but aren't at the center of their regulated kind of mission. I think that's the kind of most important piece of it. But I think later on, what we will see is this new form of computing, which is decentralized, will eliminate the need for large hierarchical institutions like big banks to be the owners of the truth about who owns what. And as a consequence of which, that takes a massive amount of cost out of the system and revolutionizes the cost basis of finance. And that'll challenge the business model of some of the largest institutions. That could take time, but don't forget, in technology, we always overestimate what can happen in a year and underestimate what can happen in a decade.
Right, sure enough. Hey, let me switch over to politics, Glenn. I remember you telling me early on in this campaign season that the candidate should be Joe Biden for the Democrats until proven otherwise. And I think that the way you actually framed that, it actually came to pass. In other words, there was no proving otherwise, and we have Joe Biden. How do you feel about him as a candidate right now? And what do you think his chances are to win very soon?
So, Andy, one of my rules of investing is only fools predict interest rates, stock prices, and elections. So I'm not going to do that. But I will tell you from a business person's perspective, I think the main point here is that the centrists consistently have won in the Democratic Party in 18 and 20. And the kind of policies that Joe Biden is putting forward is those that he will adopt, that he ran on in the primaries and that he says he will adopt as president, have been reviewed by places like Goldman Sachs and Moody's and Penn Wharton and all those, and all are ones that will promote economic growth. So I think from the business community's perspective, there should be nothing to be concerned about with respect to a Biden presidency, if it comes to pass.
If it comes to pass, one of his proposals is an increase in taxes for corporations and Americans making more than $400K. That doesn't concern you?
Well, no, it's a return to tax policy very similar to what happened during the Obama and Clinton administrations, in which there was booming economic growth, terrific stock market performance. The reason why the analyses of those plans turn out to be positive is that money turns around and gets reinvested in a variety of initiatives that are growth promoting. And you have to remember that the Trump tax cut was largely used for stock buybacks. It did not have generated a significant increase either in investment or in employment. And so as a result of which it didn't generate any economic growth. The economic growth for the 4 quarters preceding the Trump tax cut is identical to the economic growth of the 4 quarters following it.
Right.
And so we need to have an economic policy that promotes growth and also that protects the balance sheet of the American government.
Yeah. Back in May, you told me that many retail stores were likely to go away permanently after the pandemic. Still feel that way?
Look, I think there's a whole host of economic arrangements largely around the bricks and mortar economy that are going to have a very tough time. Well, you've seen the number of retail bankruptcies there's been, right? And the weakest of those, Penny, Sears, et cetera, are kind of laboring mightily. But also, I think commercial real estate will be significantly resorted, right? Plus other fundamental changes in commuting and all the infrastructure around that. So I think that as we said earlier, the pandemic will accelerate a bunch of changes that are already in place, plus promote some new ones like the Zoom economy. But I think the weak willed beast at the back of that herd is probably the physical retail companies that were already entering the crisis.
James, does it matter for crypto if there is a Biden presidency or Trump's second term?
No, I mean, we're very early in the life of crypto, and it's about just enabling developers to keep building. And I don't think politics really factor into how crypto will do in the next couple of years.
Let me ask you both about LL Cool J, who is on our program. And I understand that you guys have maybe both a personal and business relationship with him, or I guess I should say business and personal relationship with him. James, why don't I start with you?
Sure. So I call him Todd. So I met LL Cool J as Todd in his business capacity, and he was beginning to start Rock the Bells, and I had done a lot of research in the digital media space, and we really hit it off. He's a really exceptional person, and I helped him think through his business model and Rock the Bells, and it was a really special experience. Todd was an incredibly gracious host to me in LA, and I'm really excited about what he's building.
Glenn, what's your take on this?
Well, look, I think it's great. Todd, as James said, is a really great human being. He, in addition to being kind of one of the people who created and really invented rap, he has been very successful as an actor, in addition to being a performer, and then a business person in the business space. He owns the franchise for NCIS, I think it's Los Angeles, as well as Lip Sync Battle, as well as having his own Sirius XM channel. So he's a real entrepreneur and a polymath. I had the good fortune to meet him when we gave him an award at Hutchins Center for African American Research at Harvard. We got to know each other. I introduced him to the venture capitalist, Jeff Yang, who kind of with whom he created Rock the Bells, and then they hired James to write the business plan with them. So and we're all investors in it. So it's great. So we wish Todd nothing but the best.
I still can't get used to calling him Todd, but I'll let you guys keep doing that.
Yeah.
Hey, last question here for both of you. Glenn, I'll start with you. What advice do you have for a father and son looking to work together?
I'll actually ask James, what is your advice?
Oh, man. It's just all about, leveraging the foundation that you have as a father and son. Don't try to be anything that you're not, and just go from there. I think that's the power of the business relationship that my dad and I have, is that we don't try to be anything other than father and son. And I think that really makes us special and unique.
And I think the other thing I would say, Andy, is, and I think we recommend this to a lot of parents who are thinking about this, fathers and mothers, is it's very important for the kids to go out into the real world and prove themselves first. For two reasons. One is because they gain enormous experience and credibility. And the second is because then it's an addition to their self-confidence that they know they were tested in the real world first before we did this thing together.
We're going to leave it at that. Glenn Hutchins and James Hutchins, thank you both so much for your time, and best of luck to you.
Thank you, Andy.
Thank you, Andy.
Straight ahead on Yahoo Finance's All Markets Summit Road to Recovery, former Hewlett-Packard CEO and former Republican presidential candidate Corie Fiorina tells us why she's decided to vote for Joe Biden. That's next.
Hello, everyone. I'm Mila Richardson, Principal and Investment Strategist with Edward Jones, bringing you a Minute Market Update. The pandemic has impacted numerous areas of our lives, but Americans are especially feeling the financial burden greater. According to a new study from Edward Jones and AgeWave, the financial security of 1/4 of Americans has been significantly compromised. In particular, the downturn has affected younger generations. Nearly 1/3 of Gen Z and millennials characterize the impact as very or extremely negative, while only 16% of boomers and 6% of the silent generation say they are affected to that degree. The pandemic has also significantly impacted retirement plans for millions. These findings show that 20 million Americans have stopped making regular retirement savings contributions during the pandemic. Even as the economy begins to bounce back slowly, the loss of financial stability will affect many for years to come. For more information on the new nature of retirement, visit edwardjones.com/new retirement.
Fiorina has long been a pioneer for women in business. She was the first woman ever to run a Fortune 50 company, Hewlett-Packard. Forbes and Fortune have repeatedly named her the most powerful woman in business. Fiorina is a fighter. She's battled cancer, entered politics, and went head-to-head with Donald Trump in the Republican Party presidential primaries in 2016.
Hello, everybody. I'm Rick Newman with Yahoo Finance. Carly Fiorina, former CEO of Hewlett-Packard and 2016 Republican presidential candidate. Thank you for joining us.
Thank you for having me, Rick, and good afternoon.
Do you wish you were running for president again this year?
No, definitely not.
Well, would you tell us a little bit what you learned from that experience, especially given that one of your competitors, Donald Trump, obviously ended up being the president?
Well, you know, I got into politics because I'm a problem solver, and I think we have a lot of problems in this country that our political system hasn't addressed in quite a long time. And I actually think that's why Donald Trump won. I think people across the board thought, you know what, the system just isn't really working. We keep arguing about the same issues, and so it's time to try an outsider. I think we're still at a point where the political class fails us a lot. Witness that we do not have another stimulus package when we clearly desperately need one. But I also think that one of the reasons Joe Biden won the primary, and one of the reasons I endorsed him quite some time ago, is because he is seen as someone who has been willing to reach his hand across the aisle and work in a bipartisan fashion. And in the end, the only way you solve problems in business or in politics is by actually working with other people, some of whom you may not agree with all the time, to get something done and make some progress.
Do you still consider yourself a Republican?
It's a great question. The honest answer is I don't know, because I do not see myself in the current Republican Party. What I will tell you is what I believe, and what I've always believed. I believe that everyone has enormous potential, usually more than each of us realize, and that in this country, everyone should have an equal opportunity to fulfill their potential. I think people closest to the problem usually know best how to solve it, and so we need to give them the resources and the opportunity to solve the problems that impact them. And finally, I believe that power concentrated is power abused, always. Whether that power is concentrated in Washington, D.C., or whether that power is concentrated in a corporate headquarters. And so we need to disperse power and money and decision-making.
So let's talk about Joe Biden's plan. Some CEOs are uncomfortable with some of his ideas. You know what those are. He would raise the corporate tax rate a little bit. He wants to raise it about half the way back to where it was before President Trump cut it. He probably would do more to regulate the financial industry. He has talked about this minimum tax, or alternative minimum tax, you might call it, on corporations if their tax they pay to the IRS falls below a certain level. I mean, these do not sound like business-friendly ideas. So tell us your take on those ideas and what you think CEOs and other business people, what they think about this Biden plan.
Well, first, I would say that not all taxation is bad taxation. That may sound ridiculous, but as long as a level of taxation is reasonable, we've demonstrated, as your previous guest pointed out, that economic growth is possible. So for me, the issue is the level of taxation reasonable, and for what purpose are we taxing? And I think what Joe Biden has proposed is certainly a reasonable level of taxation on corporations and on those individuals making over $400,000 a year. And the purposes for which he proposes to use that money, I think, frankly, are reasonable as well. So, for example, getting this pandemic under control is clearly impacting economic growth. Having the right kind of stimulus, particularly for our small businesses and working families and resources for schools and communities, is clearly an economic issue. Having such unequal access to education is an economic issue now. Having such unequal access to healthcare and infrastructure is an economic issue now. One of the things that the pandemic has revealed is the fact that we actually all are connected. And for those who are really struggling, and the pandemic has revealed how many people and businesses truly are, that has an impact on economic growth. And so for all of those reasons, based on what Biden has put forward so far, I am satisfied that it is a reasonable plan, both in terms of how to tax as well as in terms of how to spend.
So how would you prioritize the things that need to be done? I mean, you just ticked off a long list of things. Biden has way more on his website. He's been talking about way more. Some of them are social programs. Some of them are economic programs. If you had to list three things, let's say you were a presidential candidate again, and what do you think are the three most important things we need to do? And let's agree, getting control of the coronavirus is number one. But beyond that, what do you think are three top priorities?
Well, first, I would say unifying the country. I know that sounds maybe too high in the sky, but the truth is this level of division and partisanship and rancor is not good for our nation, and it's not good for our economy. Witness the lack of a stimulus package in the last several months, which everyone agrees is necessary. So unifying the country is hugely important, I think, and it's one of the reasons why Joe Biden leads in the polls and won the primary, because people see that. Secondly, I think we do have to deal with the level of inequity, and I don't just mean economic inequity between families, for example. Our frontline workers, our critical workers are in many cases not able to make a reasonable living. We have to deal with that. It does have an economic consequence. But I also mean, for example, the disparity between how big businesses are surviving and thriving and how small businesses are surviving and thriving. Small business never has enough political clout in Washington. That's become very clear in the last 9 months in particular. 100,000 small businesses are probably gone forever already in this pandemic. That's hugely important. And so dealing with some of these structural inequities over the long haul, I think, is critically important. And then finally, of course, not throttling business. And that's why the level of taxation is important. It's why the level of regulation is important, not throttling business, so that when the pandemic is under control, a big if, I think, unless Joe Biden is in the White House, we need to make sure that those animal spirits are running.
Just so the audience knows, you have not, you're not working with the Biden campaign. You've just endorsed him on your own, correct?
That is correct. I am not working with the campaign. I actually haven't been in touch with the campaign.
So, we hear from lots of business owners and business operators at Yahoo Finance, and it seems there are many who do not like Donald Trump personally, but they do think that his deregulatory agenda has been good for business in general, and that his tax policy has been good for business in general, and they're kind of reluctant to change, even though they know he's trouble in a lot of other ways. Is that your read on the business community? I mean, do you feel like the business community is just fed up with Donald Trump and ready for something else? Do you feel like the business community is split, or are they all in for Joe Biden?
Well, it's hard for me to speak for the entirety of the business community, so I won't try. But what I will ask you and the audience to reflect on is how many businesses are willing to associate themselves or their brands with Donald Trump. And it's not very many. You don't see a lot of business CEOs going to the White House. You don't see a lot of brands associating with this president in any way. And I think that's telling. The other thing that I would say is, yes, I agree that generally speaking, fewer regulations are better than too many. Generally speaking, less taxation is better than more. But even in a time period when Donald Trump was lowering taxes and getting rid of regulations, economic growth in this country prior to COVID was not the best in history. It's not that 2.3 or so % is bad, but it certainly isn't the best we've ever done. And so I don't think that our economy has been performing at full throttle during Donald Trump's tenure. And I think part of the reason for that is because we have these longer-term structural issues that we just have not been willing to deal with so far.
want to ask you about how different sectors and different companies have responded and reacted in the coronavirus pandemic. Obviously, lots of pressure on companies and workers. And it may be hard to generalize in this regard, but do you like the way you see the business community responding to this? And it's very difficult if your cash flow is down by 40% or more to keep workers on board. But do you like the way the corporate world is responding, or do you see things that trouble you? And if it's a mix of both, what do you like and what don't you like?
Well, first, let me say, and it relates both to companies and how I see them behaving as well as to politics. Leadership matters, and character counts. It always does. But it particularly does in a crisis. And so what I've seen, look, I know how much companies contribute to better communities and a better nation every day, and they frequently don't get the credit they deserve for it. But what I've been really pleased by is I think companies have really demonstrated, not everyone, but most of them have really demonstrated leadership and character. And they've done so by declaring right from the beginning, the safety and health of our employees really matter to us. And they're the most important things. And the safety and the health of our customers really matters to us, even when it hurts our bottom line. And I think there are a lot of employees who really appreciate that and will remember it. And I think there are a lot of customers who will do the same as well. I do think that, in general, the business community plays such a vital role in the quality of our nation, not just the growth of our nation. And so I would, as I always do, continue to encourage companies to make positive contributions, not just to the health and safety of their employees and their customers as they are, but also to the health and the safety and the unity of the communities in which their people live and work. This is a time actually now when I think business has gained credibility through this pandemic. And so I think business can continue to step up and play a really positive role in knitting the nation back together and helping to address some of these longstanding issues. You know, the thing that distinguishes our country from so many others is the strength of our civil society. Alex de Tocqueville commented on that a long time ago, and it's still true. And businesses, of course, are the big players in civil society.
Carly, I asked you a few moments ago if you still consider yourself a Republican, and you said you're not sure. Where is the home among the political parties at this point for what you might call the traditional, sort of the pro-business Republican who favors limited government, but not, but also favors immigration and, civil rights and things like that. Where do those people reside at the moment? Or are they homeless?
Well, that's a really good question. And I think a lot of people who believe, as you just suggested, and I certainly do right now, are in the Biden camp. And you've seen long lists of those people come out. I think that question can't totally be answered until after this election. If Trump wins this election, he will win this election with an even more fervent base of people than he went into. I mean, it's very clear that Trump's political strategy has been to re-energize his base and to bring more like-minded people to his base. And so if that's the future of the Republican Party, I don't know. I think there are a lot of us who are going to consider another option. On the other hand, if Trump were to lose, then I think there is perhaps an interesting conversation in the Republican Party by people who did not support Trump or his policies or his personality or character or leadership, is what I would call it, and who will begin a conversation about the future of the Republican Party after Trump.
Well, I'm wondering, I mean, people are having these conversations now. I mean, it seems quite plausible Trump could lose, although like everybody, I don't know if the polls are right, and I think we all are learned not to get ahead of ourselves from 2016. I mean, what's the chatter you hear? I mean, you're a prominent Republican by virtue of having run for president and been on the stage in 2016. Are people saying we need to somehow, if Trump loses, we need to somehow excommunicate the Trump wing and reclaim the Republican Party? Or is it more like start a new party or try to go back to some kind of big tent or what?
Well, you know, the conversations, honestly, are kind of all over the map. And every single one of the alternatives that you just laid out is being discussed by various people in the party. I also think, however, that conversation hasn't really happened to the extent it needs to, because in the Trump Republican Party, it's all about loyalty to Trump. That is the definition of a loyal Republican now, is loyalty to Trump. And in fact, one of the things that I have said publicly and said to many of my colleagues is we are not asked as citizens of this country to pledge allegiance to a party. And we're certainly not asked to pledge allegiance to a president, any president. We're asked instead as citizens to pledge allegiance to a flag, one nation under God, indivisible, with liberty and justice for all, and to pledge loyalty to a constitution. And so I say all that to say this. One of the things that I think we would be well advised to get rid of a little bit is this feeling that we either have to be always loyal to one team or another. George Washington, many, many years ago, 1789 to be exact, said the trouble with political parties is they will come to care only about winning. And I think we've seen that. And so I just start from the point of view that becoming a loyal party member is not necessarily our highest order objective as citizens or as business people in this country.
If Trump loses, maybe he will do the Republicans a favor and try to create his own party and sort of go off and do his own thing. There are rumors that he's going to create his own TV network. We'll see. But you said at the beginning of our session here, you said before you got into politics or when you got into politics. So you did get into politics. Are you still in politics? Are there things you want to run for or some role you want to have in the political world?
Well, you know, the answer to that is I don't know. And the honest answer is I didn't have a plan to get into politics. I didn't have a plan to run for president. But I do want always to make a positive contribution. And I am not afraid to take advantage of opportunities when they present themselves. And I thought there was an opportunity in 2016 for someone outside of the political world who understood how to solve problems. Many voters agreed with me. That's why I think, as I said, that Donald Trump was elected president in the end. So we'll see. We'll see what the future holds. But in the meantime, we have an election in, thank goodness, only 8 more days now. And I am fully occupied and fully satisfied, I must say, with the work that I do lifting up leaders, helping leaders become more effective, whether that's in the corporate world where I do a great deal of work or in the nonprofit world. Because as I said earlier, I think civil society, whether it's for-profit or not for-profit, has to play a bigger role going forward. We can't just leave it to politicians and say, my job is to make money or serve the homeless. It's the politician's job to take care of everything else. I don't think that's worked very well.
So in the last minute we have left, is there any advice you would give Joe Biden? If it were one single thing, whether it's his manner of presenting or the way he delivers his message or who he's trying to deliver his message to, anything you would suggest he do better?
No, I would tell him to be who he is. He has said that he wants to be an American president, and that's what we need. So don't be the leader of the Democrat Party. Don't listen to your political operatives. Don't listen to all the folks telling you about what your policies need to be. Be who you are. And who he is, I think, is a collaborator. Who he is a decent, humble man of character who's willing to listen to anybody and work with anyone, and who's focused, I think, pretty singularly on unifying the nation. Who he is, I think, is actually what we need right now.
Carly Fiorina, thank you so much. Carly Fiorina, former CEO of Hewlett Packard.
Thanks for having me.
And Republican presidential candidate back in 2016. Thank you very much.
Thank you.
Coming up next, former White House Chief Economic Advisor Gary Cohn joins us to discuss the health of the U.S. economy and which candidate he thinks is best suited to bring business back. Stand by.
The Yahoo Finance All Markets Summit is sponsored in part by the International Well Building Institute.
And welcome back to the Yahoo Finance All Markets Summit. I'm Adam Shapiro. Joining us now, Gary Cohn. He served as the 11th director of the National Economic Council from January 2017 until April 2018. That was under President Trump. Before that, before he went to Washington, D.C., Gary Cohn rose through the ranks at Goldman Sachs and served as president and chief operating officer of the company from 2006 to 2016. Before I jump into everything I want to talk about with you, I've got to acknowledge the fact that as we go towards the closing bell, Dow is off almost 700 points, S&P 500 is off almost 70 points. Is this just more pandemic volatility? Is this the election? What do you think about those numbers?
So, Adam, first of all, thanks very much for having me here today. I'm happy to be here with you. I think it's a combination of a lot of issues, and I think you touched on a couple of them. Number one, we've clearly seen the COVID virus numbers come back up as predicted. I think we're starting to see the fall to winter spikes that people predicted starting to come back into real numbers, and we saw some of those numbers come back over the weekend. Number two, fiscal stimulus. Last week we thought, or we were being told, that we were making enormous progress with fiscal stimulus, that Secretary Mnuchin and Speaker Pelosi were very, very close. We were on the verge. I think now, 8 days away from an election, no one thinks we're going to have fiscal stimulus till after an election. I think that's a 100% probability we won't. The market's been fairly volatile as we go into the election here, and we're starting to see a little bit more volatility around the election. We're starting to see a little bit more movement in polls, and you take all three of those together, there are three unknowns, and we know that the market does not like unpredictability. So we've just thrown more unpredictability at the market, and we've seen a little bit of a retracement here. I don't think this is a major retracement. We're sort of back to where we were a couple weeks ago. We're still in a fairly positive uptrend, and business is still pretty good. We've got some pretty important earnings numbers coming out in the next few days in the tech sector, and so far earnings for the quarter have been pretty good.
So let me ask you this, and we're in an election. You have had experience in Washington. I want to go back 2018, and this is something you said after your service in the Trump administration. Quote, "I'm proud of my service in the Trump administration, and I continue to support the president and his economic agenda." And in this era where people are split, we should point out you were a Democrat in the Trump administration. So
and I still am a Democrat.
And you still are a Democrat. So what was that like? And what do people get wrong or misunderstand about President Trump?
Well, I don't know if people get things wrong or not. We're now, when I said that was 2018.
Right.
We're now almost at the end of the 4-year term. And I've said this, what you see is what you get with President Trump. And it doesn't matter if you're in private or you're in public. So the president that I dealt with one-on-one with in personal sessions with him, talking to him about the economy, talking to him about the economic agenda, is very much the president you get in a public format. That said, he very much cares about the economy, and he's very much driven by the economy. He's driven by GDP numbers. He's driven by employment numbers. He's driven by wage growth. Yes, he talks about the stock market a lot because he views that as a big public barometer, but below that, he does care about the fundamentals of the strength of the economy and job and wage growth.
So what you've hit upon is important, because if you're a Fox News viewer, you might think that the president absolutely gets it. If you're a MSNBC viewer, you might think he's clueless. You were in the office, you were in the room where it happened. Does he get it?
So absolutely yes. And the reason I can say this is, remember, in the White House, we get the economic data a little bit before it comes out to the public. And one of my jobs, and my team's jobs, was to brief the president on what the economic data was saying. And so if it was unemployment data or GDP data, Kevin Hassett, myself, we would brief the president on that data. He was very interested in that data, very curious on the data. What was the data saying? So when he would talk about manufacturing jobs being created in the job report, when he was talking about Black unemployment, Hispanic unemployment in the jobs report, he would dig into those numbers and he would want to know beneath the surface of what the core unemployment rate was or what the core wage growth was, what was really going on beneath the surface.
I want to ask you about those numbers, but got to ask you, as a Democrat and your friends who are Democrats, does it annoy them when you say things like that? Because it paints the president in an economic understanding way that they would not get in their echo chambers.
I don't know if that annoys my Democratic friends. I think on the economy, most of my Democratic friends would probably agree with me. And most of my friends are Democrats. So I think on the economy, we tend to see eye to eye. And so I think that side of the equation, there's a lot of meetings of the minds. The president was trying to drive an economic agenda that was pro-growth, pro-jobs, pro-business. And that was our objective. So if you look at the actions in the first year and a half or so that when I was there in the White House, they're still there, we were driving an agenda that was trying to grow the economy. So if you look at the tax reform bill, it was pro-jobs, pro-growth, pro-business, pro-the economy. If you look at deregulation, when we tried to deregulate the small and medium-sized banks, that was pro-growth, pro-the economy, pro-jobs. Those all had the same intended consequences to them.
Let's talk about the historic 2017 Tax Cuts and Jobs Act. And I want to save time to talk about stimulus, because you're very big right now on that we need stimulus. So I'll make sure we get there. But let's go back to the rearview mirror. You just brought up jobs as part of the effort there. Different data says that, and this is something Democrats like to point out, that under President Obama, the last 3 years of his administration created 1.6 million more jobs than the first 3 years of President Trump's administration. And then if you look at GDP numbers, GDP under President Obama was in 2014, 2.4%, 2015, 2.6%, 16 was a bad year, 1.5%. But then under President Trump, 17 was 2.3, 18 was 2.9, last year was 2.3. Not really that much of a difference.
Well, remember, okay, so let's talk about, and I don't want to cherry pick with you, but you sort of almost have to go into this, and I'm trying to be very sincere and very honest in here. The year that we had in there is, so 17 is the year we changed the tax plan.
Yeah, that's an Obama legacy year.
Right,
so.
well, I'm not saying it's Obama's legacy, I'm just being realistic. That was the old tax plan. So 18 is the full year where we get the tax plan. So when you start looking at 18 and 19, you get real years of seeing what the stimulus of the tax plan looks like. And I think 20, everyone probably is going to agree, is a tough year to throw into the comparison, what's going on with the virus. So if you look at sort of the 3% GDP growth, the 3% wage growth, the 3% unemployment numbers, you start looking at the 333, those are pretty good numbers in there. And you started seeing disposable income go up, you started to see the economy grow up. I think we achieved what we were trying to achieve.
Your critics would point out, and this is pre-pandemic though, the deficits, it came at a great cost. Deficits under President Trump started to go up and were projected to be 1.3 trillion a year till 2030. Now I realize Congress controls spending.
Exactly.
Never met a Republican or a Democrat who didn't like to spend more money.
Exactly.
But we wouldn't have 1.3 trillion a year if we had kept the old tax code. So have we mortgaged the future?
How do you know that? I don't want to pick a fight with you. How do you know that? Because you just said
I'm using CBO.
Both sides like to spend money. So we never left the baseline spending in place. We actually added a lot of spending programs in there. So we never left the spending side of the equation in place. When people talk about the deficit side, let's talk about the deficit side on the revenue side. So the place where I'm willing to defend, because this is the only side of the equation that I can defend, is did we or did we not collect equal or more tax revenue? We collected equal or more tax revenue. So then the question becomes, did we spend more money or did we not spend more money? We did spend more money.
And this is the last on the Tax Reform Act. When critics point out, and I think it was just Washington Post the other day, and Larry Summers as well, point out that of 20% of corporations with $100 million or more in profit don't pay any tax, and that the average tax, the real tax actually paid, now that it's dropped to 21%, is around 12%. The point being, what good is a tax if people don't pay it? We didn't eliminate all the loopholes if it's a 12% rate in real world.
We eliminated a bunch of the loopholes. But look, again, let's compare to what it was prior. There were many corporations paying no tax under the prior tax law as well. We eliminated a lot of the loopholes. I'm not going to sit here and say we eliminated all the loopholes. We eliminated many of the loopholes. We tried to get rid of as many as we could. We still have a huge offshoring issue. You can create these IP boxes offshore and put your intellectual property and then license it back to your US subsidiary. We were doing a lot of work on that. We went as far as we thought we could go and get a tax bill passed.
Now we have Joe Biden, who's proposing raising the corporate tax to 28%, even if the real payment is 12 right now. You told me in June when you were on our program that you'd be okay with that. Why?
And I still am okay with that.
Why? Because isn't that counter to what you're saying?
No, look, I think you have to get the corporate tax rate to a level that makes sense in a global competitive landscape. Remember, on the federal tax rates, whether it's corporate, and when you're really talking about corporate, you're talking about how do you compete against every other nation in the world? Because international corporations can decide where they're domiciled. They can decide where their corporate headquarters is. They can invert to another country. How do we make ourselves attractive as a home, a place where companies want to be domiciled, where they want to have their corporate headquarters, where they want to pay their taxes? The United States needs to be that place. There's a rate where it gets too high where they don't want to be that. 21% to me was the lower end of where we needed to be.
You wanted to be in the mid-20s.
I wanted to, yeah, honestly, I was happy in the mid-20s. So to me, 28% is probably a good number to land on to end up being attractive to corporations to be in the United States. But again, we have to talk about this in its entirety. It's not just the tax rate, it's what are you taxing? So look, even in this last CARES Act, which I'm a big supporter of stimulus, so I don't want anyone to be misconstrued, we took out a lot of the expenses. We brought back a lot of the expenses that we'd eliminated in the last tax act because we wanted people to spend money on travel and entertainment. So in our tax bill, we eliminated the expensing of a lot of those things. They brought them back in. So to get the CARES Act done, they said, okay, we're going to allow companies to now expense travel and entertainment, which is probably a good thing because we want people out there spending money in restaurants. We want them spending money on airplanes. We want them spending money entertaining. But again, so you can't just look at the tax rate. You have to look at the tax rate times what number.
So in the next stimulus that we get, there's going to be stimulus, as you pointed out. What do you want to see?
Well, we hope there's going to be stimulus.
Well, President Trump wants there to be stimulus. He's said $2 trillion plus. Whether Republicans in the Senate will go there, but what should it look like? We're in New York City right now, and you've talked about this. The restaurants, it's 50 to 60% of restaurants here are going to go out of business, and that's not unique to New York. That's San Francisco, Chicago, major cities, small cities across the country. What do you want to see in the next stimulus?
So the first thing I care about is jobs. And really, when you talk about jobs, you're talking about small businesses. As we know, unfortunately, the way the last economic shutdown worked is that the large businesses were all able to stay open, and they were deemed essential, and they were able to keep their employees. And so when you're talking about jobs, you're talking about small businesses in America, you're talking about the restaurants, you're talking about the dry cleaners, you're talking about the hair salons, you're talking about the bakeries, you're talking about the delis, you're talking about all the businesses that you see on Main Street America all over. So the first place I think we have to go is we have to go into the small businesses and we have to go into job creation. It's some combination of PPP, it's some type of economic stimulus for small and medium-sized businesses. And for those that can't even stay in small and medium-sized businesses, we're gonna have to help with unemployment benefits in this country.
When you talk about job creation, how do you put people to work in an industry that, for instance, restaurants are only allowed to have 25% capacity? Or even, we had on Ed Bastian from Delta Airlines. Yeah. He's cut his workforce, he's had to, and it's a lot of early retirements from 90,000 there down to 74,000. How do you do job creation in that kind of environment?
So I think we all recognize that the travel, leisure, hospitality industries, entertainment industry, they're the industries that are really suffering. They're all based on travel, they're all based on densification, they're on people meeting, people being together. That is the toughest industry to come back. And I think it's going to be a long, slow slog to get back.
Should we give these people universal basic income? I mean, if it's going to be that long a period?
So it's going to be a long period of income. What I think is we have to start thinking outside the box. We know we're going to be a long recovery period for this. So we've been talking about things like infrastructure in this country for a long time. Why don't we take a big chunk of this federal stimulus money and really turn it into something that we desperately need in this country? We not only need to modernize our existing infrastructure, we need to think about what a real, true infrastructure for the next century looks like.
How does that help, though? I hear what you're saying, but how does that help a waiter or somebody who's worked in those kinds of service industries?
We're going to take them and we're going to give them new job opportunities in a new industry, in a new place where they can get a new job. And we're going to move people from the waiter industry or from the restaurant industry or from being a chef or from being in a hair industry into a new industry. We're going to move enough people out where there'll be less competition in those areas, where you'll start migrating people into different industries. So we'll move people into new opportunities. So if you think of a country like the United States that still does not have a modernized air traffic control system, right? We're still a land-based air traffic control system, which seems a little bit out of date. We're one of the few major countries in the world that doesn't have a GPS-based system. I think we're one of the few major countries in the world that doesn't have high-speed rail system. Why wouldn't we take some of this major fiscal stimulus and start building it? Those are tens of millions of jobs, high-paying jobs.
How much are you talking, $1 trillion? They were talking about $1 trillion when you were in Washington, and it never materialized.
We were definitely talking about $1 trillion. If you're talking about these big fiscal stimulus plans, instead of just giving people money, which I'm supportive of right now, why don't we give people money and employ them in something that's going to make the country more efficient and more competitive for the next century?
When you say give people money, are you saying universal basic income, or are you saying through the
I'm saying unemployment benefits. We've got to allow people to live, to get through this crisis. So what I'm saying is I acknowledge that right now, as the economies are shutting down, economies are slowing down, restaurants are going to be less busy since we're dining outside and it's cold and wet in a large part of the country.
Retail stores as well.
And a large part of the country is getting colder and colder, and it's tough to eat outside. Restaurants are going to have to lay off people. Airlines are going to have to lay off people. Let's take the stimulus money and let's spend it in a way where we can employ people. People get up and go to work in a way that's socially distanced, it's safe, but we can build a better infrastructure in this country.
Let me ask you about cities like New York, San Francisco, Chicago, the state and local tax deduction. Not an original idea, by the way. Dan Rostenkowski wanted to get rid of it in the 1980s. But the federal government made a decision 30 plus years ago, we're going to allow those deductions for places that are higher tax, and then reversed it when you were one of the co-authors of this legislation. Would that help to restore that, a city like New York or Chicago or San Francisco recover from this pandemic?
It may. Look, I'm not saying it, but it may be a temporary issue. What you have to do when you look at a place like a New York, like a Chicago, like a San Francisco, these are densified cities. And there, as we all know, there's been a move towards a more urban area where there's more space, where you don't have to get in elevators, where you don't have to get in mass transit, where you don't have to be densified. We're trying to de-densify. Right now, these cities have to think about making themselves more competitive, more attractive. Raising taxes is not going to make themselves more attractive. You have to attract people back, especially in an environment where we've now learned that a lot of the people that needed to live in these cities because they needed to be close to their office or needed to be close to their place of employment, they're now working remotely and working successfully remotely. So the attraction of being close is no longer as compelling as it was.
So in New York, forget raising taxes. How do you get people to come back if you just keep the tax structure as it is now, because it's a high-tax city, high-tax state?
It is a high, in many respects, I would think of ways of giving tax holidays and lowering taxes. So take your local restaurants. Take not your national chains, but take your local restaurants and say, guess what? If you're going to a local restaurant, we're going to waive sales tax for local restaurants. Make the local restaurant have a competitive advantage. And yes, look, the city and the state will lose money on that, but if they can put more people to work there, they're not paying unemployment benefits. So you have to think of both sides of the equation. Right now, the government is paying unemployment benefits. If I can get people back to work, I'm not paying unemployment benefits. So you know what? I'll forego the tax, but I won't be paying the expenditure of unemployment benefits.
Are you talking to potential candidates in, say, New York or Chicago or in San Francisco, whether at the city level, at the state level, about this kind of future tax regimen?
So I'm talking to I would say a bunch of the consultants that are talking about some of these plans. I wouldn't say I'm talking directly to candidates, but I'm talking to people that sort of fashion these plans for people.
Lastly, it's a presidential election. You have dodged the question in the past. Who are you voting for?
It's a presidential election, and I am gonna actually go to the polls next Tuesday and vote.
But you won't say publicly whether you would vote for President Trump or President.
I'm going to the polls and vote. I actually think who you vote for is a private question.
All right. Gary Cohn, we appreciate your being here. Thank you very much.
Thanks for having me.
We're going to have more from the All Markets Summit right after this.
Pompey joined Goldman Sachs in 2006. Among her many roles, she's the global head of corporate engagement and president of the Goldman Sachs Foundation. The foundation is a global philanthropic organization aimed at improving people's lives through entrepreneurship and education.
Welcome back to the All Markets Summit. I'm Julie Hyman, and indeed, I'm going to be joined by Asahi Pompey, who is the Global Head of Corporate Engagement at Goldman Sachs and the President of the Goldman Sachs Foundation. And we have this conversation as we are about to witness the closing bell for the markets and what has been a pretty sharp down day for the major averages, although they have backed off a little bit of some of the earlier declines, but the Dow still finishing down by about 2.3%. We want to talk about the backdrop here for small businesses during this pandemic and economic downturn that we have seen. And Asahi and the folks over at Goldman Sachs have conducted some research of small businesses and specifically small businesses that are Black owned. And the results are sobering. We all know we've been having this conversation now for months, if not years, about lack of access to credit, for example, on the part of Black business owners. But still, these numbers put some parameters around that. So the research they conducted found the rejection rate for Black business owners applying for capital was 3 times higher than white business owners. So a 27% rejection rate for those Black business owners. Asahi, thank you so much for being here. So the 10,000 Small Businesses Initiative at the Goldman Sachs Foundation, as well as the 10,000 Women Initiative, has tried to focus on closing some of these gaps. But how do you even begin to address that divide? What are some of the specific steps that you think that you all are taking, but you think still need to be taken?
Yeah, Julie, you're exactly right. This data is very, very sobering. As you know, we've been working with small businesses for over a decade now, and we now have a network of 9,700 small businesses. These are growth-oriented employer firms, real job creators. And over the last several months, as we tapped into this data, it's really laid bare the pandemic within the pandemic, which is racial disparities that's bearing out in the small business sector. As you said, Black business owners having 3 times the rejection rate as their white counterparts. And in terms of solutions, as you asked, we think a number of things are really needed. The first is greater access to capital. There is a misallocation of capital, and we've got to change that. If you ask a Black business owner, what do they need? 66% of the Black businesses that participated in 10,000 small businesses said their number one concern was greater access to capital. Now, when you juxtapose that with white businesses, 33% of white businesses said that capital was their number one concern, in fact. Some of them ranked mentorship, sponsorship, labor concerns as higher on the list than access to capital. So we've got to start by fixing this misallocation of capital.
And so how do you go about doing that? I mean, I know part of what you all do is give tools both in the form of capital, but also in education to these business owners. But one would think you have to address the other side of the equation as well. That is that access to capital, the people who hold the purse strings, and getting them to try to eliminate some of that systemic bias that looks like it's at work there.
Yeah, and one of the key strategies that we've employed is really funding CDFIs. And year to date, we've made a $750 million commitment to fund CDFIs. And these are the last mile lenders to communities that frequently don't have any banking relationship. We have a fabulous Black woman entrepreneur in Detroit, Carla Walker Miller, and she likes to say, the worst time to meet a banker is when you need money. And what she means by that is if you don't have that established relationship with a banker in an organization, it becomes very, very difficult for a Black business owner to get funding. She said she feels like the no is teed up before she walks in the door. And so really, I think funding CDFIs is one of them. The other thing that we have to do is really fund Black founders, Latino founders, women founders. And we launched last year our Launch with Goldman Sachs effort, which is a $500 million for-profit balance sheet investment in diverse portfolio managers and diverse companies. So those are some of the ways in which we have to really move the needle.
And since you all are making those investments yourselves and sort of seeding investments in these companies, can you talk a little bit to their success rate, right? Because I think for a long time, perhaps, there was this misapprehension that the money wasn't flowing into these communities because there weren't as many opportunities there, or it wasn't as good an investment. And I think that conversation finally has started to change. What is your data showing on that front?
You're right. That conversation is starting to evolve. Dana White, one of our business owners who owns a hair salon, says, look, they put me in a box. I want to scale my business. I want to grow my business. I want to become a national chain. And so the discourse around me and who I am has to really change in order for me to get the capital. So I think that's one of the key things, is really changing the discussion and changing the frame as to how we're seeing small businesses. The other one is, Black business owners tend to be over-mentored and undercapitalized. And so increasing their capital is another one. Advocacy, I think, is particularly important. And what I mean by that is business owners have to be able to have relationships with policymakers and congressional officials, because very often, they're creating the policies that impact small businesses. And so we've been working through our 10,000 Small Businesses Voices platform to really muscle up our small businesses to be able to meet with congressional officials and tell them, here's what's happening on the ground. Here's what I'm seeing. Here's what needs to change in order for me to be able to retool and really make my business pandemic-proof, future-proof, and tech-enabled.
Since you brought up the pandemic, I do want to bring that into the conversation. Of course, that is the big event looming over many of these small businesses, some of which were having trouble getting access to credit even before all of this, right? How has the pandemic changed your thinking or your approach when it comes to these small businesses? Do you think that these small business owners have a bigger voice now than they did before the pandemic? Or do you think that it's sort of been overwhelmed because so many small businesses are struggling right now?
I think they do have a bigger voice now. I think people are more willing to listen to what their concerns are. What we've seen is that it was hard being a small business pre-pandemic, and being a small business in a pandemic is even tougher. As we speak to Black businesses in particular, what they tell us is that they have less cash reserve. They've seen bigger dips in their number of their employees. They're really concerned about reopening. And so those are some of the concerns that are being laid out. I would really describe this pandemic in terms of seasons, right? So the first season was really the season of emergency, getting emergency funding. Roughly 90% of our 10,000 small businesses participants said they, in fact, received PPP grants. Well, we moved from that emergency season really into the season of pivot, where businesses were cautiously reopening. We had a distillery, a vodka distillery in Utah that was now making hand sanitizers. And so businesses were really trying to adapt to stay alive. Now we've really moved into that third season. And that third season is the new normal. Businesses are saying, 90% of them, of our businesses, in fact, say, the changes that I'm making today are for the long term. Right? So we had a brick and mortar bakery business that's now making DIY cookie decorating kits. She's now also moved to wholesale bakery. And so that's a lot of what we're seeing is this new normal, making shifts for the long term.
What is there another season coming out of this? Hopefully at some point, Asahi, what are you thinking about sort of what the next phase is for some of these businesses?
Here I am bullish on small businesses. I've seen them up close. I spend my day job meeting with entrepreneurs, and they are passionate about their business. When the economy turns down, entrepreneurs turn up. And some recently released data, Julie, shows that year over year, we've actually seen a 12% increase in businesses filing new business registrations. And some might say, is it crazy to be starting a new business in the midst of a pandemic? But entrepreneurs are seeing opportunities, and they're looking to seize those opportunities. Some of them may be that they were laid off from their job. It was an idea that they always had, and now is the time. The time is ripe to launch that business. Or it could be an entrepreneur whose business failed, and now they're launching a new business. So we're seeing some uptick in terms of new business registrations.
Asahi, one of the big initiatives that you mentioned that we've been talking about is the 10,000 small businesses, but another is 10,000 women. And you had a goal of reaching 10,000 women in 5 years with your business education program. You far surpassed that number, by the way. Talk to us about the status of that program, because we've been talking about people of color who we know have been disproportionately affected by this pandemic. Of course, the other group has been women who have been leaving the job force at a higher rate than men. So what's going on with that program, and where do you see it right now amidst the pandemic?
Yeah, our 10,000 Women program is focused on women entrepreneurs in developing countries. In fact, Julie, the last trip I took pre-pandemic was in March. I went to South Africa and I met at the South African, at the Johannesburg Stock Exchange with 300 of our graduates of 10,000 women from across South Africa who had gathered in Johannesburg. And what we're seeing in that particular program is a couple of things. One is we decided to launch the program online, translated into Spanish and Portuguese. And I have to take you behind the scenes. When we did that, I said, if we build it, will women entrepreneurs come? We know that they are, on the front lines. They're frontline workers in their home. They're frontline workers at their jobs, and they have multiple responsibility. And the response to that online course has really been incredible. It's now one of Coursera's top courses. We've had over 70,000 women in 100 countries register for that course. And what that tells me is that women entrepreneurs around the world are really doubling down. They're trying to find ways to keep their businesses alive. They've invested in it. They've been creating jobs through it, and they're not giving up on it, and we're not giving up on them. And so we're finding ways to stay connected with them and to build that education throughout the pandemic.
So, Asaya, we've been talking about some of your big initiatives and how you've been thinking about them during this pandemic. I want to take a step back also and talk about where you kind of sit inside Goldman Sachs and how Goldman Sachs thinks about philanthropy and the interplay between the foundation and the business, and how it might be different or the same as other companies. If you can talk us through that a bit.
Yeah, in terms of this interplay of philanthropy and the business, I've been at Goldman Sachs for almost 15 years now. And I'd say, look, history doesn't usually feel historic when you're sitting in the midst of it, right? You see it in hindsight. As a Black woman, as a mother of 2 young sons, I haven't really seen the kind of discourse I have around Blacks, around women, around Latinos, that I've seen a real substantive discussion and a real commitment to act. At Goldman Sachs, we think about it across 3 sleeves. So one, we think about it in terms of our people and really looking at our organization internally to say, are we walking the walk? And we've set a number of national goals as it relates to analysts and associates, but also at the more senior level as it relates to our hiring of VPs. The second sleeve we think about it is across our clients. And as you know, in January, pre-pandemic in the US, our CEO, David Solomon, came out and said Goldman Sachs would not IPO a company that didn't have at least 2 diverse board members. So that's one way in which we're really thinking about the interplay of business and philanthropy and infusing it into the work that we do. And the third sleeve is really community, because as we looked at the data across, we saw that business owners in particular tend to be leaders in their community. Upwards of 75% of our Black business owners in particular mentor another business in their community. So that shows that when you invest in that business, you're really getting a double bottom line because of the ripple impact of that business in the community. And also on the flip side, when that business fails, the blast radius of that failure is really reverberates throughout the community. So that's the way we think about that interplay of sort of business, philanthropy across the board.
And finally, as we wrap up here, Asai, I'm just curious on a personal level, as we have seen this wave of increased awareness that has come with the Black Lives Matter movement to some of the business issues around it. I mean, I'm just curious what your reaction has been. Is it kind of like, what took everybody so long? Or, I mean, are you glad that we're finally, as a broader culture, starting to make more progress? And are we really making more progress?
You know, I think we've got to translate this moment into a movement. I hope it's not a false dawn, right? And I think that in order to make sure that we really seize upon this generational opportunity, we have to use it to create policies, procedures, greater access to capital, greater access to network, greater advocacy, greater education that really has multi-generational impact. So what I'd say to your question, Julie, is I'm optimistic, but I know that it's a journey and we've got to stay persistent and committed to really see long-lasting change and not a false dawn.
Yeah, a call to action. I like it. Thank you so much, Asahi. Really appreciate your time. Asahi Pompey is Global Head of Corporate Engagement and President of the Goldman Sachs Foundation. And straight ahead, we're going to speak with the Robin Hood Foundation CEO, Wes Moore, about the organization's effort to fight poverty amid the COVID-19 pandemic. And later, we're going to be joined by the new XFL co-owner, Danny Garcia, to discuss her new partnership with The Rock.
Wes Moore is the CEO of the Robin Hood Foundation, which is one of the largest anti-poverty organizations in the U.S. For over 30 years, Robin Hood has lifted families out of poverty in New York City. Moore is the author of the acclaimed best-selling book, The Other Wes Moore. He's an entrepreneur and a decorated U.S. Army combat veteran.
All right, Wes Moore, the CEO of Robin Hood. Thanks so much for joining me.
My pleasure. Great to see you, Zach.
You know, out of everybody we're speaking with today, I feel like you have the most impressive resume by far. I don't have the time. We don't have the time to go through it because if I read it, we'd be out of time. But I want to start with your current role of heading up Robin Hood, one of America's largest charitable institutions, giving more than $150 million out the door to those in need. And we know philanthropy is so great in these times. So first off, just want to get your take on what the dependency on philanthropy here in 2020 is looking like historically as everyone grapples with the pandemic.
Well, I think one of the things I'm really proud about the work of Robinhood and the work we've been able to really get done, within Robinhood is the fact that we really don't even view the work of Robinhood or philanthropy at all really as a charity, but that we really see ourselves as a change organization. And we see ourselves as a change organization because we think that the reason that these organizations even have to be in existence is because there are frailties within the system that need patching, that they need fixing. And actually, if we're looking what's happened this year, I think COVID-19 has just been a primary example to that. Because when people talk about the impacts of COVID-19 and the damage that COVID-19 has done, both on health and economics, it's actually really important for people to ask the question of what was going on before COVID-19, though. It's not like things were great. When you consider the fact that 23% of people who have lost their jobs due to COVID-19 were actually living in poverty prior to COVID-19. So this is the working poor, people who are working jobs, in many cases multiple jobs, and still living below the poverty line. Over 40% of people prior to COVID-19 could not afford a $400 shock with cash. And we have now seen that shock, and it's very much in living color. And so I feel like the role for all of us in this moment is to actually not just focus on how do we respond in this moment, but also how do we make sure that the frailties and the gaps that existed well before this time, that this is not just about how can philanthropy help to fill in spaces or deal with emergency needs, but how does philanthropy actually focus on changing the structures of society to make sure that all people feel that level of support and that level of opportunity.
Yeah, and I mean, you raise a good point. I mean, it's not like these inequalities or this level of wealth inequality or economic need wasn't there before this pandemic hit. It just kind of shines a light on the problems now. But it's something you've talked about before in your work, which focuses mostly in New York City here, about the way that this has been a problem and the way that it's a bigger problem than people might expect. Talk to me about the numbers in terms of how this is a rolling issue for people who are already at or below the poverty line and can't really break past that.
Yeah, and I think it's a great question, Zach, because I think it's important for people to understand when we're talking about people who are living in poverty or living under the weight of poverty, it's important for people to understand who we're talking about. Because oftentimes people think when a person's in poverty, oh, that's a person, I pass a person on the street and that person's in poverty. That person is in poverty, yes. But here's the reality, and this is just New York City. Half of New York City before COVID-19, half of New York City was in poverty for at least a year over the past 4 years. Not half of a borough, not half of a demographic. Half of the city was in poverty for at least a year over the past 4 years. So when people say, well, I don't know anybody who lives in poverty, the reality is that you are probably passing people and interacting with people who are living in poverty every single day, and you just don't know it. The people who are serving you your coffee in the morning, you're staying in a hotel, the person who's changing your bed sheets, the people who you see doing even city and state functioning jobs that are still below poverty line. These things are real. And so I think what's important for people to understand is not just what does the horror of poverty look like for people who are living in poverty, and oftentimes it's very predictable and generational poverty, this lack of economic mobility, this lack of economic opportunity that people are succumbed with, but also to understand that it's not something that's foreign, it's not something that's separate, it's not something that's away, it's not the others, but that in many ways there are people who are completely around us, and actually that line between them and where we are is remarkably thin.
This level of poverty doesn't exist because philanthropy hasn't done its job. You said it's because we have structures and systems that allow this level of inequality to take place. So in your mind, what are the biggest drivers of systemic poverty here in the US right now?
Well, I think we have to be able to be honest to think about everything from the way we think about wages to tax infrastructure systems, to the way we think about who then has the ability to be able to target supports in the correct mechanisms. I think that we still very much have policies that are both putting people and keeping people in poverty. And frankly, we have policies that are actually increasing the type of gaps that we see. So for example, if we look at things like the wealth gap that exists within the United States, income inequality in the US is the highest of all the G7 nations. The gap between black and white income in the US has persisted over time, where median black household incomes is 61% of the median white household income. That's not just because one group has failed. These are policies, and this is a lack of reinforcement of other policies that we need to be able to have in place. And so when we're talking about things that we can and should be thinking about on a policy level, it is about how are we thinking about things like child tax credits, and where we can make basic adjustments on the child tax credit that could literally, in the stroke of a pen, be able to address issues of deep child poverty overnight and almost half child poverty within a matter of years. How are we thinking about, especially right now in this stage, how we can create more and better supports for our states, where right now we've seen where state revenues take a long time to recover from economic shocks of this kind of magnitude, where after the 2008 recession, state tax revenues overall did not return to pre-recession levels for 5 years. And frankly, we're looking at a crisis right now that is going to have even greater shock levels to not the markets, but to the economy than we saw in 2008. And so these are things that philanthropy can do a really powerful job of being test capital, lead capital, risk capital. But if we're not having true and genuine policy conversations about ways we can adjust and structure those systems, then none of us will have the weight to be able to address the levels of economic injustice that still very much exist within our society.
Yeah, I'm glad you mentioned the race wealth gap there too, because it's something we've seen play out in 2020. Obviously, unemployment rate's still very high for communities of color, whether you look at blacks or Hispanics here in the U.S. But even before then, when you talk about some of these systemic issues, the other big story in 2020, it's been a story years after year here in the country, but it has to do with criminal justice reform and police reform. And it's something that has been noted by you and other researchers out there focusing on the issue, noting that lifetime earnings for those who do get arrested or go to prison take a big tumble in what you expect to see for the rest of their lives here. So talk to me about how that issue is not just a social justice issue, but increasingly an economic issue tied to this as well.
Yeah, I mean, we can't address the racial justice and the racial wealth gap without also confronting this generational harm that was created by the criminal justice system. And we were very proud to be part of a Brennan Center report. Recently, it just came out, and the report really shows how the system is extracting hundreds of billions of dollars from communities of color. The system that we currently have in place. And it's both about showing the fact that there is a distinct difference and a disparity between basic contact with the criminal justice system. I mean, if you look at, there's an overrepresentation of Black and Latino people amongst formerly incarcerated population, overrepresentation when it comes to basic touch points within the criminal justice system. But we also see, exactly as you pointed out, Zach, the lifetime impacts of it. Where formerly imprisoned Black and Latino people, they suffer lifetime earning losses, $358,000 and $511,000 around, respectively, than their white counterparts who have losses of around $260,000. These are massive disparities when we're talking about people who are there for the exact same issues and are still coming back. The reality that and it shows right now that for people, we know that for a white person with a criminal record has a higher probability of gaining entry-level employment than a Black person without any criminal involvement. Yeah. And so you see how it's both about the impact and the racial lens in the criminal justice system, but it's also about the fact that in all of these conversations, we just know that race matters, and race is still the most reliable predictor of life outcomes that we have in this country.
Yeah, I want to unpack that issue too, because I cover cannabis here at Yahoo Finance, and that's something that we've seen. The inequality there for a Hispanic male who applies for a job who has an arrest tied to marijuana might be a criminal past. To a white guy applying it could be a nice resume boost, because we've seen this play out in the data. You look at the arrest rate for blacks in this country versus whites, more than 3 times as high likely than white people to get arrested on that front. And on the focus of cannabis, I know you're a board member at Green Thumb Industries, the Chicago-based marijuana company here. And I looked at board members across the 10 largest cannabis companies. Last year, you were 2 of only 65 board members at those companies. 2 of 65 were people of color. You were one of them. When you look at the issue itself, in Illinois, they're the latest state to legalize marijuana. They set up a system where millions of that revenue goes back to communities of color, communities impacted by the war on drugs. How do you look at that as maybe a system or an example that other states or perhaps the nation can learn from in maybe trying to solve some of those issues?
I think it's a good first step. And I think it's a good first step. And I'm very clear on it being a first step for a few different reasons. The first reason is because we cannot talk about the benefits of legalization without also at the same time talking about the consequences of criminalization. We have seen how cannabis and the war on cannabis have had this not just disproportionate, disastrous impacts on communities of color. Disastrous impacts on communities of color, where we are now even at this day watching states and corporations that are gaining massive revenue, billions of dollars of revenue, while we still have people who are sitting in prison because of it. And this is an issue that's very personal to me and my family. And so there was this hyper criminalization of this issue that was used and very much targeted on communities of color, that we have to be able to have a conversation about everything from expungement and the way we're thinking about that to also the way we're thinking about pipelining and job opportunities. Because you're absolutely right. If right now as it stands, if a person has a felony record, they can come back home and apply for certain jobs in the cannabis industry versus a person who has a misdemeanor or felony record in the cannabis industry. They cannot apply for a job because their arrest record is because of cannabis, which makes no sense. The second piece, though, that becomes equally important is on this issue of the wealth divide, where we cannot have this be a platform where it is creating a massive amount of new wealth and new opportunity and not have there be a conversation about, well, what does that mean for communities of color? Where right now, the wealth gap between America's richest and poorest families have more than doubled from 1989 to 2016. Where in 2016, the top 5% held 248 times as much wealth at the median. And so we now are on the cusp of something that not only a very real conversation that this country needs to have, but also something that is a real moonshot opportunity for wealth creation and supplying opportunities for people that have been historically left out of this. So it needs to be everything from the way we're thinking about distributors, to the way we're thinking about producers, to the way we're thinking about the large scale owners and the board memberships and the C-suites of these companies that are growing and scaling and becoming very profitable on this. That cannot happen without real inclusion as being one of our core principles.
Yeah, and again, speaks to kind of the idea of all of these issues that are still underlying the problem you guys are trying to solve here, or at least play your part in making it a little bit easier. But the CEO at Robinhood Westmore, appreciate you taking the time. Thanks again.
My pleasure. Thanks so much.
Still ahead, we're joined by Guggenheim CIO Ann Walsh, along with Prudential Vice Chairman Rob Falzone, as we discuss the changing role of women in finance and what's in store for the American workforce post-COVID-19. You won't want to miss it.
Walsh is Guggenheim's Chief Investment Officer of Fixed Income and was named by Barron's Magazine as one of the most influential women in finance. She joined Guggenheim in 2007 and oversees $185 billion in fixed income investments. She's also a long-standing proponent of encouraging more women to join the financial services industry. Rob Falzon is Prudential's Vice Chairman and oversees a broad portfolio including the finance, information, technology, and corporate social responsibility at Prudential. He also leads Prudential's influential Future of Work initiative. This year's Future of Work survey on the pulse of the American worker is one of the best reports available on the impact of COVID-19 in the workplace.
Welcome back to Yahoo Finance's All Market Summit. I'm Kristen Myers. Let's go straight to our chat with Ann Walsh, Guggenheim's Chief Investment Officer for Fixed Income, and Rob Falzon, Vice Chairman at Prudential Financial. Welcome to you both. Thank you both so much for joining us today in discussing what the future of work is going to look like, especially in a post-pandemic world. So Ann, I want to start with you. Now, most of us have been working from home now for roughly half a year or even longer. But we're continuously hearing this chatter about what it's going to look like when folks get back to the office. But for right now, I'm wondering how long you think this work from home environment can be sustained.
Well, thank you, Kristen and Rob, and to all of you listening. So, if you had asked me back in March, whether here we would be nearly to November and we would still be in a work from home situation dealing with another wave of coronavirus, I might have been skeptical, probably would have been skeptical. But fast forward, here we are, and I actually don't see many people returning to the office in the way that we used to work anytime very soon. In fact, I think we are looking at a 2021 return timeline, notwithstanding the fact that, we're going to talk a bit about the benefits of working together, but also the way work is, I think, permanently changed in terms of particularly office work. So I would say at this point in time that we're looking definitely at another 3 or 6, or I'm hearing even well into next summer before we will be returning to offices. And I would suggest that the way we work in offices will be used to work, I say, for virtually my entire career.
Now, Rob, I would love for you to weigh in here. I'm wondering about profitability. I mean, can companies be just as or perhaps even more profitable than before without the office?
Well, it's interesting. There are 2 dimensions to that. The first is how productive they are in a remote environment. And the second is, when we go back, what is that workplace going to look like? And what are the impacts of profitability on each of those? I think, in the near term, productivity is actually holding up pretty well. In fact, it's up according to the survey that we did. It was in excess of around 60% of the people that answered the survey said they were as, if not more productive remotely than they were in the workplace. And so that would indicate that the profitability would be enhanced and sustainable. I do think, to the point Ann was making, I'm not 100% convinced that that's sustainable in the longer term. I think there's been some technology innovation, which has contributed significantly to that productivity. But some of it's coming because people are working longer hours, and they, 65-ish% of them haven't taken the same vacation they took last year. Those that are in our survey, they're saving an hour of commute, and 60% of that they're putting back into work as opposed to, harvesting that as free time. And so there's a stress there that I'm not sure how sustainable that'll be in longer term. And then what we're also seeing is, the beginnings of some fraying around learning and development and what that can mean in terms of long-term, sustained productivity. So that piece is a little bit of a question mark. Near term, clearly. Longer term, we'll have to see what will be sustained. Going back, post the pandemic, when we go back to the workplace, it will look very different. And I suspect that most companies are going to adopt different models post the pandemic than they did pre. We're clearly looking at that hard. And I think coming out of that, there'll be rewards for employees and rewards for employers as well. Employees, I think, will have long-term, as a result of this experience, flexibility and how they work and where they work. And that'll lead employers to be able to be more rational about how they invest in real estate assets. And frankly, the other part about that is I think, though, that it opens up the funnel of talent that you can attract into an organization to the extent you have more flexible work arrangements.
So, Rob, you mentioned a couple of things that I definitely am going to want to pick up on during this conversation. But piggybacking on what you were just mentioning about that survey, I'm wondering from you, and then Anne, I would love for you to weigh in. What do you think has changed now that we are in this, remote work from home environment? What do you think has changed in terms of priorities for employees, but also for their managers and for the employers themselves?
Well, first, I think you have to separate the pandemic experience from the remote experience. Pandemic experience hasn't been very good, and it's caused a whole host of reprioritizations as a result of the burdens that are on families, whether it be, child care or elder care, or daycare, schools, the infrastructure that's available in our daily lives, not to mention the sort of societal isolation that we're all feeling. And so there's been a reprioritization of how individuals have to spend their day in order to adjust to the pandemic and its impact on their infrastructure. And I think companies, if they want to be successful long-term, are going to have to be flexible with regard to that. So remote, in my mind, has two dimensions to it. One is location and the other is time. And we need to figure out how employees can get stress out of their lives and get the right priorities with regard to the balance between work and personal by having some flexibility on the work front. I guess the other thing I think about is, from a prioritization standpoint, is that as we look at what we've been able to accomplish with employees working remotely, I think it puts a whole new priority on sustaining the level of gains that we've gotten from the investments in technology and how that has accelerated significantly through this remote experience. And that's been the positive part of remote, separate and apart from the pandemic part of it.
Anne, I would love for you to pick up on that point that Rob was just making there about how this pandemic has really just accelerated some of these trends that we had already been seeing in the workplace.
Certainly. There's a few things. I think before the mass amount of work from home, there was a great deal of skepticism as to whether working from home was even an option. Quite clearly, society has now learned that this is a demonstrable success, and this will give working people so much more flexibility going forward. And I think it also gives employers confidence that the traditional, and I'm going to put in air quotes, industrial model of work that we've all been used to, and dare I've been in it for decades, that it is ready to be adjusted, and that work from home is one aspect of that flexibility. Industrial economists and scientists have been thinking about for years whether or not shorter work weeks worked. Obviously, work from home is now a whole new element, but other aspects of how work can actually change and be adaptive, and for people to be much more productive. Interestingly enough, and I'll actually turn to the survey that was done by Prudential, that in terms of autonomy, individuals have more autonomy. And when individuals have more control over facets of their environment, whether that's their family environment, their work environment, or so forth, they tend to get a lot more enjoyment out of work. And I think that's been probably one of the reasons that individuals really have benefited from the work from home. Additionally, Dr. Danny Kahneman did a study some years ago about the least favorable aspect of your working person's life, and the number one item was commuting, and that the fact that people don't have to make long commutes. Again, the survey that Prudential performed indicates that they're using that for work. But frankly, even if they're using that for some other purpose, spending time with their family, catching up a little bit extra rest or what have you, or enjoying health, for example, taking a walk or something of this nature to help with physical and or mental health, is a better use of time than the painful commute that so many people had to go through. So I think we've shown ourselves as a work society that work can be changed, and the style of work can be changed in such a way that we can get a lot more productivity without that constant, what I call that industrial model of FaceTime and sitting next to your manager and so forth. So I think the work world is ready for a change, and again, harnessing the technology that's quite clearly been a huge benefit here in order to make work change as we've gone through this year.
So then, Anne, how does retaining talent change going forward? Is it all about, you're talking about things like reducing commute time. Is it all about being remote? Is that what workers want? I mean, how exactly do companies going forward make sure they recruit and also retain that top talent?
So, great question. There's several aspects to retaining top talent, and attracting top talent. One is corporate culture, the opportunity set. Again, I'll go back to an individual's ability to gain satisfaction and enjoyment from work. And workplace flexibility, as we've just been discussing, is one element of that. And I think that will go a long way to retaining individuals. We haven't necessarily talked about gender, but certainly women for decades have been seeking ways to balance the burdens of family as well as work. And again, this is not just women, of course. But historically, that's been a very significant issue for women in the workplace. Women have been maybe more disproportionately negatively impacted during the coronavirus because of some of these burdens. But my hope is that on the backside of coronavirus, that women will enjoy the benefits of this new flexibility in work. And quite clearly, I come from the investment management industry, and we need to attract women to the industry and retain them. Only about 9% of all portfolio managers are women, and somewhere along the line, some aspects, whether it's again providing more satisfaction at work or opportunity or flexibility, are going to be strong ways for companies to retain, attract and retain top talent.
Rob, Anne is bringing up a really great point here about diversity. She's talking a lot about gender. Of course, race is also a part of that. So I want to ask you about something that we talk a lot when we talk about the public sector. A lot of folks have said, listen, this pandemic exposed a lot of inequities, and many are saying that this is the time that the public sector can really go forth and tackle some of those systemic issues. But on the private sector side, Rob, I'm wondering if you think this is a time for companies, like Amazon, for example, to go out there and flex their power to change the systems that are going to be impacting their employees going forward. And those systems that actually might be felt a little bit more acutely now that we are all at home.
Yeah, so a couple thoughts on this. Great question, Kristen. First, in following up on Anne's response. Yeah. So in our survey, it actually indicated number one, desire by employees, flexibility. Number two, remote. Number three, learning and development. And in all three, if you think about all three of those elements and the learnings that we've had through the pandemic, we can enhance all of it. And one of the things that's actually, I think, suffering during the pandemic is the learning and development component of it, because it's harder for people to learn on the job when they're remote. They've said that in the survey. All of that does translate into the opportunity to optimize how you're bringing talent into the organization. And clearly what you want to do as an organization, what we need to do as a private sector is you want to take full advantage of the talent pool that's out there. And that includes the diversity in that talent pool. If you're not doing so, It leaves gaps within your organization, and it leaves gaps, frankly, within our total sort of economic output as a society. And so, we need to address this. We absolutely need to. Each individual company needs to do so if they want to have sustainable business models. The complexion of our society is changing, and every company in one way or another is addressing themselves to that marketplace and that changing complexion in that marketplace. And if you don't have the diversity within your organization and you don't have top talent in that diversity in your organization, you're not going to be able to anticipate how the world is shifting and how the marketplace is shifting, and be able to therefore address your organizational or your business strategy or marketing design around the opportunities that are out there. So I actually think that what we're learning through the pandemic, to a point that Ann made earlier, is we've learned to work remotely. In our own organization, our model was, if you wanted to work remotely, you had to prove to your manager why it was okay for you to do so. We intend to turn that telescope around. Managers will have to prove why employees have to be on site, as opposed to the reverse of that. Provide that flexibility. And if we can provide that kind of flexibility, I think we can then, from a geographic standpoint, as well as from a socioeconomic standpoint, we can reach deeper into the marketplace to bring talent into the organization, because we can accommodate the individual needs of that talent in coming to work for us, whether that be scheduling flexibility or it be location remote.
So, Anne, picking up here on this conversation that you essentially kicked off, and Rob has been now commenting on, in this new world where, we're not meeting face to face, we're increasingly using tech, wondering, what the impact could be and how that tech could be used to tackle those problems of diversity around race, around gender, create perhaps race blind, gender blind hiring practices or accountability in the office. I mean, what are the next steps, do you think, that companies are going to be taking to really tackle some of those problems within their own workforce?
So, this is a multi-layered experience for so many in management now, to try and advance corporate cultures and to provide these opportunities for our very diverse workplace. Collaboration and training are very important aspects to attracting and retaining diverse candidates. And I really do believe that if we together come together and apply this, what I would refer to more as a team-based approach to training, to work generally, this is positive. Evidence, and it's strong evidence, suggests that team-based, and particularly diverse team-based approaches to work have much better outcomes. There's strong evidence to suggest this in the investment management business, and certainly anything that we can do to move forward to create these diverse teams is extremely important, and will only benefit companies. But I go back to a few elements. One is training, and I'm going to again cite the Prudential survey in that, training and educational opportunities for our team members is very hard to initiate in this particular coronavirus time. This is where technology can help us a lot. And the learning opportunities should be multi-sensory, using the best of technology. And we should be able to allow and encourage our team members to have more interaction using technology, of course, but it's a substitute for in-person training and in-person learning. And part of learning is corporate culture. It's obviously skills, but it's a multi-dimensional aspect, and it's probably harder for our younger team members and our more junior members because they haven't had years of on-the-job training that give them the ability to advance and continue to work in a fashion during this lockdown period that would be the same as someone who's had decades of experience within a traditional work environment. So we need to adapt for younger people to bring the training that they need, but also for diverse candidates and team members who are also not maybe as experienced sitting in the industrial work environment, after years and years and years. So there's a lot we can do, but we have to harness technology to advance that ball.
Now, Rob, I know we're running out of time, and I wish we had so much more time to chat with you both about this. But Rob, I wanted to kind of end on this question. We've been talking a lot about tech and how it's bringing us together during this time when we can't be together, and how it can be used to address issues like diversity going forward. Wondering how you think that companies can maintain humanity, so to speak, in this world that is increasingly, and of course now as a matter of necessity, tech-driven?
Yeah, that's a very interesting question, because actually, I think the longer we remain in this sort of fully remote environment, there's actually some decay in what I call culture. You can call that humanity. And every organization has a culture, and it's an expression of the humanity in that organization. And I do think that on the edges, it's a difficult thing to maintain. Actually, in the short run, culture has improved, and the sense of humanity actually, in a sense, has improved too. While we have an extraordinary amount of divisiveness in society today, what you have seen in the private sector from a company standpoint is very high ratings from employees to their employers, and how they're stepping up both to the virus, the pandemic, and what they're doing for their employees, and what they're doing in their communities as well, and how they're responding to the things that we're seeing in our society. And so actually, ironically, in the short term, I actually think the humanitarian and culture aspects have been enhanced. And the survey actually shows that when we've asked, I think it was close to 3/4 of the employees rated their employers an A or a B in terms of how they're conducting themselves during this period. And it reflects both that community engagement as well as how they're engaging with their employees. The challenge again becomes with sustainability, the novelty of stepping up and the types of initiatives that you announce, the flexibility that you're providing to your employees, the additional assistance that you're providing to your communities and to your employees. Those are things that almost become expected in BAU over time, and therefore the appreciation of that begins to wear off, and the ability, frankly, to make a difference in culture wear off. So I do think over time we need to get to a new normal. That new normal won't be everyone back at the workplace, but there isn't. We're human beings. We have a human condition. That human condition requires some level of interaction in order for us to get that human aspect that we all crave, and that's the pandemic part of the remote experience. That's, I think, most difficult for many people.
All right. Well, we will unfortunately have to leave that there. This has been a fantastic conversation. Our thanks to both Ann Walsh, Guggenheim's Chief Investment Officer for Fixed Income, and Rob Falzone, Vice Chairman at Prudential Financial. Thank you so much for being with us today.
Thank you, Kristen. Thanks, Ann.
Thank you.
And coming up ahead on Yahoo Finance's All Market Summit Road to Recovery, we'll speak with the Garcia's Company CEO, Danny Garcia, about purchasing the XFL Football League and what it's like to team up with The Rock. That's next.
The Yahoo Finance All Market Summit is sponsored in part by the International Well Building Institute.
Garcia bought the XFL this year with her ex-husband and longtime business partner, Dwayne "The Rock" Johnson, and the private equity firm Redbird Capital. The deal makes Garcia, a professional athlete in her own right, the first woman to own an equal or majority stake in a major pro sports league in the United States. Garcia now plans to reboot the XFL as a serious competitor to the NFL.
All right, Dani Garcia, chairwoman, founder, and CEO of the Garcia Companies and new co-owner of the XFL. Thanks so much for being here.
My pleasure.
I want to preface this interview with full disclosure that I have watched the XFL since I was a wee lad back in 2001 when WWE founder Vince McMahon co-launched the league. And then, of course, when they relaunched the league again here, I covered that for Yahoo Finance. Still have my XFL badge here for field clearance. So that's important to point out. It holds a near and dear place in my heart. And as such, I'm going to be asking hard-hitting questions, extremely hard-hitting questions, which I think is only fitting for a league that was once referred to as the Extreme Football League, but appreciate you being here. So first up, let's talk about how you came to acquire the XFL out of bankruptcy, because it was your bid of $15 million for a league that Vince McMahon had poured $200 million into building before the pandemic brought it to its knees, and eventually Chapter 11 bankruptcy back in April, setting up the potential for what could be the greatest sports acquisitions of all time. So what made you and your partners want to jump in on it?
Well, like you, I had also seen the first iteration in 2001, a little bit differently because I was involved with the WWE at that time in a different manner. But I was actually also, like you, just as excited about the 2019-2020 relaunch and what they had put on the field. So, you know, when Vince had made this second attempt, I was wondering, I was like, you know, is there a little room for some partners? And my hope was in the future there was some franchise opportunities. So I had literally had in my head, I love this iteration. I love this space. I love the opportunity that it gives for the athletes here, and was hoping there might be something in the future. Of course, COVID hit. Surprisingly, he went into bankruptcy with the XFL. And it was an easy decision. It was what I call a soul decision, right? I was very, very passionate about the prospects of what this league could be. And so we went to work to say, okay, we think there's a premise here. Can we go through get through the information, get through the bankruptcy, and find the there of the process? I spent about 2 weeks on it myself with my executive team, a council, feeling good enough to then make that call to DJ and say, hey, I have an idea. Let's do this. And he was on board. And then we spent the summer just getting into the numbers, getting into the deal, trying to put something together so we could, go to the bid, win that bid, which we did.
Yeah, and you say DJ, just so everyone's aware there, that would be Dwayne "The Rock" Johnson, your ex-husband and business partner, and of course your other partner here in Redbird Capital Partners being involved on the deal. But I mean, you're a very skilled businesswoman. I mean, the resume is phenomenal, and I think that's why I was so excited to get the chance to chat with you. But when you're talking about that, obviously there's never an easy deal. There's always risks here. And of course, the XFL came to an abrupt end with the pandemic, just as all of sports did for a bit there. But even without that, there were questions about the viability of the league. Of course, McMahon said he was prepared to lose money for a couple of years in the relaunch, and the bankruptcy filings revealed some of the finances there, that they generated $14 million in revenue through the first 3.5 weeks of gameplay and posted a $44 million loss during that same period. But notably, the league gave away TV rights for free to ESPN, Fox, and ABC. There was hope that eventually that payday would come. So now that it's proven capable of capturing millions of Americans and drawing those eyeballs, what does the business model look like for you moving forward?
Well, right from the beginning, and Zach, you've done great homework. I so appreciate. The league can't, it's a different, as we like to say, it's a different universe now for the league. Those 5 weeks actually did help to prove, and especially from the network and the media partners, they were able to see numbers, and the actual ratings and the numbers exceeded expectations. I think there was probably a public perception of what it would do, but then there was in the industry a realistic perception of could it outperform it, and it did, which was wonderful. So, going forward, having media rights deals where there are no fees, that's not the option that we're looking at. And in fact, we're in robust conversations with numerous partners, and the representation is going to be, these are different deals, and everyone's aware of them. And that's, we have, like I said, we have 5 weeks underneath our belt to discuss. But I think just as importantly, it's the execution and the opportunities that new ownership brings to the interpretation of the XFL, which begins to change the business model. And if you're taking that point of view, you begin to see a lot of white spaces, and there's more opportunities for revenue streams that we can lean into. So the business model, there's a traditional aspect because football is football, but at the same time, we've overlaid additional revenue streams, identified additional revenue opportunities, identified various ways to connect with all the participants that are around the XFL value chain. So it's not just the fans, it's also the athletes, it's also our partners and our sponsorship partners.
Yeah. And when you think about where this league came from, I think that's a big question, what this iteration will look like compared to the 2020 iteration or the 2001 iteration, because if you go back to 2001, DJ, The Rock was there at the LA debut, and he was riling up the crowd talking about what the XFL represents versus what you get from the NFL that took a team away from Los Angeles. He was pretty forceful with that speech, and that was his connection with the XFL. Of course, the McMahon WWE connection as well. But when you think about that, what should people expect from this iteration of the XFL in terms of how it looks at the NFL as either a partner or a competitor?
So I see ourselves as a cohort of the NFL. We are we're working in the same space, right? And we are interpreting the game slightly differently. We have a faster pace, obviously, a shorter time. We will keep a number of the rule changes that were made in the 2020 season. We're actually going through a download now with players and our coaches to see what actually did work and what didn't work, and if there were things that were a little bit rough. The access and the accessibility to the athletes, hearing the plays, seeing the reviews, we had things in place that the audience responded to in a major way. It was fascinating. You were in there and you felt like this brought you closer to the athlete on the field instead of, distancing you, because it has to be a quality of game, right? It's not about anti this or anti that. It's, can we bring the best game possible? Can it be culturally relevant to our players and to our fans and to our partners? And that is a yes for us.
But in terms of working with the NFL, and maybe not looking at it necessarily as a competitor or partner, but there is the question of viability when you have good players maybe moving on. We saw that with a couple even in 2020 who moved on to the NFL, which is good. But in terms of capitalizing on that and the question of whether or not you can build and capture the upside if you have people tuning in to watch these players, how do you look at that as maybe, a challenge or an opportunity moving forward with the league?
I think, well, first of all challenges, and this is mindset, I think all challenges are opportunity. There's when you look at the XFL, you have to look at who are we in the next 2 to 3 years, and who are we in the next 3 to 5 years, and recognize that that's going to be a process and journey throughout the XFL execution, especially if we're looking at the next 5 and 10 years. We're going to be in a position where, yes, well, we have some transient players, and is that fantastic? Is that great for them? Can we still get the quality of play that we need, even if we may have a player for just a few years? Our premise is, yes, we absolutely can, right? We know the number of football college eligible athletes coming out who will never play a game and never play a down professionally. And so we know that pool is very, very large. What we want to concentrate on is, and we get to do this a bit more because this is single ownership, right? When you have single ownership, you actually can culturally create a place where the athletes are excited to play, where there's an investment in who they are, where they are given the best opportunity, not only for their brand, but their performance, treated like stars, and most importantly, have their stories told. So right now, our concentration is to do a great job with who we have and the athletes we have today and build upon that. Because our salaries will increase. We will become more competitive, right? In success. But do we deliver something today at the price point that is viable, right, to make the XFL successful and sustainable? Can we deliver a package that is still competitive? And I think you look at those first 5 weeks and you saw something very special there. You also, what's really interesting, and this is a little bit more psychological, when you look at the athletes that are coming to the XFL in the next year and a half, they all have something to prove. Every play matters. It's a little bit different than when you have a $250 million contract or a $30 million per year contract, which is also amazing and fantastic. I want that for all our athletes. But there's a heart and a soul to the play you see because there's opportunity and possibility. And I think when we look at sports on the whole, we want to see that heart, right? If you're a fan of sports. So that's a really important intangible that lives within the XFL.
But since you said, X in XFL right now stands for X, it brings to mind questions, too, about your own X here and what DJ's role might be in the league. A lot of people have been speculating about what his role might be versus your role. Some people saying he should be in the booth talking about the games. Are you looking to maybe use his brand to bring some of that cachet back to the XFL here? What's the strategy around that?
First, I've got to acknowledge the transition with the X. That was so masterfully done, Zach. I love when people are so, and I also appreciate when the public gets really vocal of how Dwayne should be used. So, Dwayne is an owner, a co-owner with us, and obviously Redbird and Jerry Cardinale. So that element is, in fact, for us, we are extremely hands-on. And the XFL is a day-to-day process for me in particular. And right now, because we're filming Red Notice, it's an in-between scene process for DJ. But we have his schedule blocked out for the season, for each season, so that we actually can be on the road and go to the game. So there's a real presence, not only from the corporate and storytelling, because even though everyone knows DJ is, in front of the camera, he's actually an incredible producer and content producer. So, he's also a former athlete. I'm a professional athlete. He's a former football player. He would be playing in the XFL if we went back so many years ago and that opportunity was there. So, that interaction with the athletes, that representation, the interaction with the fans, making our games, our live games, an event, not just because you're watching the game, but what happens before, what happens in the booth. We actually plan on being extremely forward-facing. So that'll be our loudest time. But we also have content that's happening throughout the year where you'll be hearing from the owners, and we'll have transparency as to what we're doing. Dwayne will be involved in that as well. He's a very hands-on owner.
Well, in terms of your role, beyond the decisions we've already described in trying to make the XFL successful in this iteration, you're also shattering the glass ceiling here, too, becoming the first female equal or majority owner of a major sports league in the U.S. You've talked about the importance of that and representing unheard or unrepresented voices in prior business endeavors. And with the league, you said you expect it to be extremely vocal about normalizing equality and equalizing justice, and patriotism is about expressing yourself. So talk to me about how important that is for an achievement, not just for you, but for a lot of those voices that we don't hear from in sports.
It's one of, we talked a little bit about the intensity of getting to, the point of bidding and auction and then getting the call. You have the XFL. So I have to tell you, it was that moment after the call where the enormity, first it was incredible joy, because this was, like I said, a soul decision. So I couldn't believe it was here. We had done it. But then it was a few days later when I began to recognize that through this process, I had made history. And that's a very humbling moment, Zach, when you have this, you are defining a period of time that never was. And so there is no, that was great. It's not that. It's the weight of it. You actually appreciate it. You feel the joy, but then you recognize that the decisions you need to make and should make going forward, you want to make them in a loud manner so that people can be inspired and learn, and that you're carrying the responsibility. It's not just the moment, it's what do you do with that moment? So I feel the weight of it and I accept it. I think it's amazing. I don't think, if you had asked me at 15, would you, Danny Garcia, want to own a sports league? I would have said yes, absolutely. if you had said, and will you be, do you want to make history? I would not be thinking in that process. But now that I have, I'm extremely grateful. And I'm grateful that my expressions mean something to so many people.
Sandy Garcia, I can't thank you enough for the chat, and good luck with everything out there.
Thanks so much, Zach. It was a pleasure. I look forward to seeing you, hopefully in person.
I don't think this will work down there at the games, but we'll see what happens here when we relaunch. Sandy Garcia. Thanks again.
Thanks, Zach.
Up next, we're joined by Verizon Media CEO Guru Garapan for a discussion about the changing landscape for media and the pandemic. And later, we'll hear from VaynerMedia CEO Gary Vaynerchuk as he gives an inside look at what he's done to grow his brand. Stay with us.
CEO of Verizon Media. He runs the division of Verizon creating what's next in content, advertising, and technology, with brands including Yahoo, TechCrunch, and HuffPost. Garapan is a strong supporter of diversity and inclusion, and is active in conservation, leading and supporting causes to protect the environment.
Welcome back to Yahoo Finance's All Markets Summit. I'm Sabine Marcellus, here with Guru Garapan, CEO of Verizon Media. Now, Yahoo Finance is a division within Verizon Media. Guru, it's great to have you on.
Sabine, it's so awesome to be here. Good to see you, and thanks for having me here as well.
And if it wasn't for the pandemic, we'd be having this interview live from our state-of-the-art TV studio in New York City. But instead, we're doing it remotely. How has the pandemic impacted Verizon Media in terms of our ability to deliver boots-on-the-ground journalism?
Sabine, thanks for the question. First of all, I would say no industry is untouched by COVID-19. Media, of course, where we are, you think about Verizon Media as no exception. We saw human behaviors change virtually overnight, and also how we work change virtually overnight. So when you think about Verizon Media, this has meant that the storytelling, the democratized experiences we talk about, the connections with customers had never been more important in this new world. So now I'll take back the way I think about it is let's think about the landscape, and then let's think about the Verizon Media's response in return to that. When you think about the landscape, the consumer behavior in the entertainment, media, and news is changed in three major ways. One is new preferences, two is around live events, and three is around immersive or interactivity. When you think about new preferences, right, one of the things that happened before COVID, we would have about north of, I think, 40% of streamers were, consuming online were Gen X, and then you had millennials, less than 40%. But when you think about in the new world, you have more families, older audiences, rural geographies across the country really consuming. And the change in consumption is helping us. When you think about family now consuming entertainment, education really scaling up quite a bit, fitness and utility. So those content consumptions are way, way up. And then live events is one we talk about a lot. Again, a lot of the things we do live now in studio or getting to a sports event, the in-person event is still not possible or advisable for most of us. And when it relates to sports, we went and launched something called Watch Together on Yahoo Sports to bring family and friends closer. So that's another area we see evolution. I think example there is, when you think about Meta streaming opera performance, Travis Scott broke his record in terms of Fortnite virtual concert. So we are seeing a fundamental change in behavior on both sides, content creators and content consumers. And that's what is leading to the third massive shift, which is around immersive, mostly around XR. I know you had Hans earlier on talking about 5G. The shift of 5G, we're living in online now more than ever. So we need that infrastructure and experience to be able to have that omni-channel experience even you're at home. So that's how I would say we reacted to the media experiences and the impact we've seen. And I think the same applies to what we're doing to employees in our society, from mental health to helping our society on donating, ad inventory for mental health organizations, launching things like Yahoo Life, again, helping with people with physical, mental, and emotional well-being. So lots going on across how we are reacting to COVID.
That's right. So as you mentioned, the media industry overall is under financial pressure from declining ad revenue. We're seeing many media companies from broadcast to print having to do cost cuts and job cuts. So how is Verizon Media navigating in these challenging times?
So first of all, we've been playing offense now, at least for me, when I look back 2 years, and we've been focused on growth. And you take Yahoo Finance as an example, or Yahoo News, these properties and products have been growing on user consumption and also revenue. We've seen that over the entire year as well. So as a technology and media company, we have a unique advantage as we look at media landscape today and the landscape tomorrow. So the way we are addressing it, coming back to what I was talking about 5G earlier, 5G continues to take hold. It'll fundamentally shape the type of content information that is created and how it is disseminated across and consumed. And technology will shape that consumption. In terms of our strategy, we've been investing mostly on trusted news and content, high growth areas, as well as continued innovation like immersive and 5G. And these categories typically were leaders, either number one or number two. And that stayed that way because, the effort we put on playing offense. So we are really focused on creating trusted content that informs, educates, and entertains, and delivering in the format we think best fits the content. So we are definitely addressed in all the right areas to address consumer needs. As I mentioned earlier, this has led to record growth on Yahoo Finance, Yahoo News, Entertainment, and Life. You think about lifestyle overall is ranked number one. Finance network is ranked number one for us. It's a great example, touching about 80 million monthly active users. So the overall aspect is we treat ourselves as a platform, not just content creators. So for consumers, we bring our own content, and also great third parties come in as an aggregator. And then on B2B side, when you talk about the ad industry, we're focused on streaming, which is doing really well for us, and ads, where categories like travel, of course, have declined, but the categories you take a lot of media content, entertainment, new retail, commerce, and gaming, a lot of these have been growing at a crazy level. So we've been focused on that to mitigate some of the ad declines we've had. So while the ad market, as you said, is impacted, we are seeing a good rebound now in some of the core verticals, and estimates are very positive as we head into rest of Q4 and 2021.
And aside from being a major headwind for the media industry's finances, the pandemic is also one of the biggest stories of our lifetime, but it's not the only one. The killing of George Floyd brought racial injustice back into the spotlight this summer. How is Verizon Media supporting the social justice movement, and what is the role of corporate America in all this?
A great question, Sibyl, and I think this is one every one of us has to be focused on. And the way I think about it is to move forward, we must do this together, right? The issues we are facing today didn't happen overnight, but in some ways, they were indeed illuminated overnight. When it comes to race, the pandemic also has had a disproportionately affected communities of color. Meanwhile, we are grappling with the issues, as you mentioned, of racial and social injustice. So a week after George Floyd's death, anxiety and depression among African Americans shot to highest rates ever when you think about the impact it has had. So that leads to the way we think about Verizon Media. Our commitment to diversity, justice, and inclusion is deep and long-lasting. We've taken substantial steps throughout my tenure here to reinforce that commitment. That being said, there is a lot more we have to do. So I'll talk about the actions. For me, if you want to change the world, I think the quote we've always heard of many times is, if you want to change the world, you start with yourself. That is what we are doing at Verizon Media. We're looking at our processes and procedures and finding ways to be better. We created this roadmap called the Racial Justice Plan. Starts with employees. So hiring, we're focused on amplifying diversity and Black talent in the hiring pipeline by reimagining the process we use to identify great talent. Early results are showing a pipeline 3 times as diverse as previous pipelines. So early hiring trends are also looking good, what we're seeing. Second is around retaining, creating opportunities for diverse talent in multiple ways, including building our diversity and inclusion plan for employees, giving them toolkits. We launched diversity, equity, and inclusion 101 mandatory training for employees. We launched career development plan for diverse employees to identify career growth opportunities and help them advance on that journey. So at Verizon Media, we always think about our stakeholders across 4, right? You have employees, customers, society, and shareholders. So the lot of work started with inside with our employees. Then we focus on customers, society, and shareholders. So in that end, when you think about customers and society, racial justice, again, has been top of mind for us in our content across ecosystem. Our editorial teams, we added a whole Black Lives Matter page to yahoo.com to ensure that our sources are diverse and can provide that diverse perspective, and for our reporting, as well as continue our original coverage on when George Floyd's murder happened to many others. So covering that, as including national protests, really taking care of that. And then the other pieces we did on society was supporting Black-owned small businesses. where we donated 5 million in ad inventory for marketing and awareness. We committed 10 million in aid organizations dedicated to equality and social justice. So that's how we've addressed employees, society, customers, and shareholders when it comes to racial justice plan.
And we're about a week away from Election Day. Many, including both President Trump and Vice President Joe Biden, believe it's the most important election of our lifetime. How is Verizon Media covering the presidential race?
Look, it is indeed the most important for our lifetime. I think bottom line, our goal is to provide our consumers with everything they need to cast an informed vote. And that's what we do. We touch about 85% of internet consumers in the US. This year has marked a time of incredible change, as we all know, reflection across our country. And our mission to provide our audience with trusted and accurate content has become even more important than ever. So the way we reacted, we've created Yahoo Election Hub. The hub allows users to track major events, stream live events, clarify candidates' stances on important issues, immerse themselves into topics, and engage public opinion through polling data. We came out with the polling data just today, and informing audiences on voting process for their hometown leading up to election, Verizon Media will continue to use the power of our ecosystem to drive voter registration, of course, and then provide also accurate information about this process. And we are prepared, fully focused on ensuring the safety and integrity of the election through coordinated efforts across our organization. So a lot of work ahead of us. I mean, we are only a few days away, but our editorial teams will be very cautious in calling any results. We are, of course, working with AP to also coordinate calls for the election as well. So it's a lot of good work going in progress.
Definitely. It'll be very exciting to see the results come in on Election Day. Now, with a phrase like fake news used so often by President Trump, how do we restore trust in the media?
I would say when you think about trust, for us, one of the biggest things we've done is we got out of user-generated content. So if you look back to Verizon Media's core strategy, we said one of our pillars is trusted content. What that meant is when you have user-generated content, it automatically doesn't lead you to verify it easily. So for us to bring that, a lot of media companies have to work together to have common processes and policies to verify a lot of sources. We do that when we have political ads that come into our ecosystem or any content that comes in. Number two, who are the sources you work with? If you think about our own journalism, Yahoo Finance to Yahoo News to all these properties, we focus a lot on getting the right source and doing the right homework and having all the validation points and not going by, again, user-generated content. So I think you have to first start with right inputs, which is making sure company strategies are clear. And it's not about getting clicks, but actually about building that trust by giving the right information for consumers. The second part of that input is having the right policies and procedures. And that's what we've been focused on it. And then three, look, you are going to always have consumers. Many times there is a point of view. They may not like news, but there's a point of view that they want to think that the news should be a different way. You can't change that, right? I think the user behavior is going to continue to happen. Our job is going to be always to come out with as balanced view and share different sources. The other example I would use is the Yahoo News 360. We give you the left and the right and let the consumer choose which ones they want to read and what they want to consume. So a lot of that comes down to building the right input processes, having the right sources, having processes, policies, and then getting feedback from consumers on what's working, what's not working. And UGC for sure is not the right path for that.
And let's not forget about big tech. What has been their role during the pandemic? Friend or foe of the American people?
I think in many ways, the big tech, including us, of course, we talk about Amazon, Google, Facebook, and others. In many ways, they've helped, with getting the news out there, getting people. So they've played the friend role in getting to consumers. But at the same time, when I think about small and medium businesses in that sector, a lot of them have been impacted because the power of big tech also impacts negatively many times some of these businesses. So in many ways, I would say they played both roles.
That's for sure. Well, we'll have to leave it there. Verizon Media CEO, Guru Garapan, thanks so much.
Thank you.
Coming up, the founder of International Well Building Institute, Paul Scialla. How will our buildings or offices and homes change after COVID? He'll tell us. You won't want to miss this.
Hello, everyone. I'm Neela Richardson, Principal and Investment Strategist with Edward Jones, bringing you a Minute Market Update. If 2020 has taught us anything, it's that it can be hard to predict and prepare for the future. That's true of the day-to-day market highs and lows, the speed and shape of the economic recovery, and what each journey and phase of our lives look like, including retirement. According to a recent study by Edward Jones and AgeWave, the majority of U.S. retirees define retirement as a whole new chapter of life, an encouraging outlook in uncertain times. But to make that new chapter look whole, many investors crave guidance, and that starts with a financial professional. In fact, 84% of Americans working with a financial advisor said that this relationship gave them a greater sense of comfort during the pandemic. Whether it's understanding the intricacies of a stimulus package or finding stability in a volatile market, a financial advisor can serve as a guide, helping people prepare for that next chapter. For more information on the new nature of retirement, visit edwardjones.com/new retirement.
passion for altruistic capitalism and sustainability led him to found Delos and the International Well Building Institute, bringing together the world's largest asset class, real estate, with the world's fastest growing industry, wellness. He created the Well Building Standard, the first global rating system to focus exclusively on the ways buildings and everything in them can enhance our health and wellness. It's a system made all the more critical for a post-COVID world.
I'm Akiko Fujita, and now we're joined by Paul Shala. Paul, great to have you on today. Welcome.
Great to be with you.
Let's get right into this momentum or movement that you have created through the Well Building Institute, because this is something you started 8 years ago, pre-pandemic, pre all of this talk about ESG. What was the vision and how have you seen that evolve?
Yeah, we've been merging the health sciences with the building sciences for, as you said, over 8 years. We wanted to really understand the built environment, our homes, offices, schools, hotels, and its impact on the human condition, given we as people are spending over 90% of our lives indoors. So taking an evidence-based approach to quantify the connection between everything that surrounds us indoors, air quality, water quality, lighting, thermal, acoustics, biophilic elements, surface and cleaning protocols, and mapping those directly to our respiratory, cardiovascular, immune, cognitive, and sleep health outcomes.
So walk me through what exactly it means to have a well building. This is an actual certification that businesses get or that buildings get. How do you measure that?
Yeah, so our platform has two components to it. On one side, the International Well Building Institute is the largest certification body for healthy buildings in the world now, with certifications in 63 countries. This is a third-party document review and performance verification of the health and wellness attributes of a building, and now particularly with the Well Health Safety Rating. Really covers the health and safety protocols of any organization, any building type, what have you.
I mean, there's no question you have seen huge momentum as a result of this pandemic. You already had a lot of growth going into this year. Walk me through how the certification has evolved as a result of the pandemic and the new safety and health concerns that have popped up.
So launched about 5 years ago, the Well Building Standard, which covers the full gamut of all health and wellness categories across thermal, acoustics, water, air, light, what have you. Clearly, what happened earlier this year was a need. Industry came at us across sectors asking, can your International Well Building Institute, as the world's leading certification platform for healthy buildings, can you issue us some type of criteria and rating and a third-party review of health and safety protocols? Clearly, this pandemic has caused that need to arise with regards to looking at things like cleaning protocols and frequency therein, emergency preparedness planning, stakeholder engagement, health services, communication policies, what have you. So that was really the catalyst starting in February, where our institute went broad with over 500 virologists, behavioral scientists, building scientists, public health experts, to pull the relevant features from the Well Building Standard that have to do with health and safety protocols, and hence the launch of the Well Health Safety Rating a couple months ago.
So let's try to break off some of those elements there. There's a lot of viewers, I think, who are familiar with the air filters and the basic distancing that we've heard about with the temperature checks, all of that, that come with being able to operate in a building safely during a pandemic. But you've listed a number of other criteria there. Walk us through some of the specifics that are involved.
So this is not meant to just be a reaction to COVID-19. In fact, most of these features already exist in the Well Building Standard and have for years. Clearly, you get into elements of optimizing ventilation, to your point, but emergency preparedness. This can cover and does cover not just COVID-19 as mentioned, but broader pathogen concerns, whether it's today or years in the future, and other elements of health and safety. So these categories are meant to be rigorous at the categorical level with regards to scientific verification, but also flexible enough so organizations can meet the flexible criteria in each category.
And you've talked about working with government agencies. I imagine you've gotten a lot more buy-in as a result of what we've experienced over the last 6 or 7 months or so. Can you talk about those conversations that's happening at the government level, not just here in the US, but internationally?
Yeah, I mean, even here in the United States, first, 1,400 mayors have signed off on the well health safety rating as one of the responsible means and mechanisms to reopen buildings safely with regards to governing practice. But we've got conversations now with governments around the world, even looking at their own real estate portfolios, looking to put all their buildings that they occupy through the health safety rating as well.
And so let's talk about who has actually been adopted the criteria. A lot of familiar sites for those of our viewers. You're talking about Yankee Stadium, Royal Albert Hall over in the UK. How have you had to adapt the criteria that you've set forward to some of these event sites?
Well, good. I mean, this applies to any typology. You will see this seal, the Well Health Safety Seal, on the front of supermarkets, grocery stores, corporate headquarters, manufacturing facilities, stadiums, offices, hotels, restaurants. Basically, if it's got a front door, it actually can be rated for health and safety protocols. And the system was built to be able to adapt across multiple locations, and even in some cases, thousands and thousands of locations as part of a overall corporate portfolio.
And what are viewers going to notice as a result of that?
Well, the seal itself is a symbol of confidence. This process is putting science, structure, form, validity, and most importantly, third-party verification. So employees know that their company has done something, or guests or visitors or patrons or customers know that the building they're walking into has gone through a third-party verified process as it pertains to health and safety. The seal itself has a QRC on it, an element of transparency. So walking into any door, whether you're walking into your office, or into a grocery store, or into a hotel, for instance, that QRC will show and demonstrate the features of compliance for that particular facility.
And so anybody who's visiting that building can actually look at that and see exactly what specific standards were met as a result of the building.
That is correct. That is correct.
You've talked about this unique situation that you're in right now as a result of the pandemic. But to your point, this is something that is expected to go well beyond this moment in time. What is the case for a well building?
You look at the wellness real estate principles: air, light, water, thermal, acoustics, biophilic elements. If one good can come out of all of this is a better awareness that our surroundings have a huge impact on our health outcomes. They have a huge impact on our productivity and obviously on our health and safety.
And from a corporate standpoint, though, how do you measure that? When you're trying to sell the need for this standard and the seal, you've talked about productivity is one thing, but what does it mean from a profitability standpoint for companies and for that buy-in?
Great. I'll compare this to the green building movement, okay? The efforts in green building to reduce energy costs. When you look at any building, about 2% of the ongoing cost of any building is its energy usage, waste, water, utilities, and that has spawned a $4 trillion industry called green building, trying to reduce that cost input. Now consider this: over 90% of the ongoing cost of any building are the people inside of it. Salaries, wages, benefits, healthcare costs, productivity and output, attraction, retention. The well building movement promotes better outcomes for the 90% input of any building. And you consider the cost to achieve this, fractions and fractions of 1% premium to normal construction or renovation, or in some cases even smaller than that, versus the gains in, again, attraction, retention, productivity, reducing healthcare costs. All of these are very big quantifiable indicators that show that the well building movement is an economic movement first that happens to have tremendous societal benefit, using our real estate as a healthcare intervention tool to deliver preventative medical intentions to enhance all these outcomes. Again, it's a good blend of both a societal and an economic win.
And Paul, this is something that you have been preaching for the last 8 years, but it feels like At the corporate level, at the executive level, there has been a shift in the approach of the workplace as a result of what we've gone through with this pandemic. We've talked a lot about the work from home movement, companies being more in tune with the mental health of their employees and overall wellness. Can you speak to the conversation shift that you have seen over the course of this pandemic?
Yeah, big shift is folks in leadership positions at companies want to really figure out how to appropriately communicate to their employees on health and safety protocols. We've also seen a massive recognition of this entire category in the ESG complex. The E in ESG has been largely defined as it comes to our buildings for years. The environmental elements to a building. The S has been largely missing, that social component of how a real estate portfolio, how an office, whether it's owned or leased, but how that real estate itself can contribute to societal benefit. So we've seen a massive jump in interest, not only on the investment side, but also the user side in using systems like the WELL Health Safety Rating, the WELL Building Standard to up their ESG scores to demonstrate that they are making material changes that can be quantified.
The argument, of course, was any kind of standard in building. We've heard it with the green building that the cost is just too high. How do you make it economical for some of these companies, some of these developers who don't necessarily have to deal with sort of the high end? Sure. What does the cost structure look like? And in the broader picture, how much growth do you anticipate?
Okay, so with the WELL Health Safety Rating, this is a document review, of protocol. You're dealing with a system that can be down to a couple $100 per building with regards to third-party verification of those practices. So that is built to scale. We've seen tens of thousands of buildings, hundreds and hundreds of organizations already go through the system, whether it's some of the world's leading banks. JP Morgan will be putting the WELL Health Safety Seal on all bank branches and global offices, stadiums like you've mentioned. But from a corporate standpoint, this is not an onerous cost. Even the full WELL certification of a development project, it's about 1/3 of 1% premium to normal construction to build WELL certified platinum. This is not an onerous economic proposition. And we've seen clients come to us and say, maybe 2 months, we broke even just in reduced absenteeism. And again, this is through the years, not even relevant to the health safety side of this, but very quick break evens. It's a very economic proposition, quite different, candidly, than the longer multi-year payback of green building.
We're, of course, talking about buildings at a time when there are a lot of Americans, a lot of people around the world who are afraid to leave their homes because of the concern around the infection. You've got a good front seat here to see how quickly things are going to start to reopen. When are you anticipating things return to normal? And what does that normal look like?
Yeah, I think the pendulum swings in the extremes. When this first started, there was a lot of talk, well, no one's ever going back to an office again. And you're starting to see that start to shift as well. And obviously, we can't control the population statistics and what the path may be on any type of element here at a governing level. What we want to focus on here is, again, this is not just about today. If one good can come out of this, it's a renewed or re-upped ante and focus on health and well-being and health safety in buildings. So what we're seeing here is a lot of folks, regardless of when they may be fully returned or not, are going through the necessary motions to put this in place.
And finally, the fundamental shift here that we're talking about. I realize this isn't just about the pandemic, but there's no question whenever we return to our offices and these building spaces you're talking about, people are going to be thinking about that differently. What is that shift that you're expecting?
Yeah, that's a great question. I would say, let's relate it to this. I would say maybe 1 out of 100 people a year ago in the developed world probably had an opinion or a concern or even a thought about something like indoor air quality. That number is 99 out of 100. That shift in mentality, that awareness, that learning curve, that change happened in less than a year. This pandemic will come and go. Future ones will come and go. Even look at the forest fires and the pollution issues, but the acute awareness now has been elevated, which is a good thing. And if that's going to lead to more corrective action and better, healthier spaces in the long run, then that's a positive outcome.
Paul Shalla, thanks for joining us today.
Thanks for having me.
Still ahead on Yahoo Finance's All Market Summit Road to Recovery, rap artist and Rock the Bells founder LL Cool J weighs in on the 2020 election and shares his tips for becoming a better entrepreneur. That's next.
Cool J is an acclaimed actor, musician, entrepreneur, and best-selling author. He's a two-time Grammy Award winner with 10 consecutive Platinum Plus selling albums. LL Cool J has received the NAACP Image Award, and he's the first rapper to receive a prestigious Kennedy Center honor. He currently stars in the hit CBS TV series NCIS Los Angeles and curates Sirius XM's LL Cool J's Rock the Bells radio. He's both a passionate and avid philanthropist.
Music icon, TV star, business mogul, trailblazer, husband, father, and now grandfather. In under 15 words, that pretty much sums up my next guest, who really needs no introduction, but I just gave him one anyway. LL Cool J, welcome to the Yahoo Finance All Market Summit.
Thanks for having me, Brian. How you doing?
Good. It's good to speak with you again. And you know, the theme of our event is Road to Recovery, but for you, it's Road to Creating a Business during the pandemic. Tell us about Rock the Bells. Why'd you launch it, and what is it?
I just felt like, Rock the Bells was, something that a journey that I began about 7 years ago. I felt like, Sirius XM had a channel called Backspin, and I felt that although it was classic hip hop, it didn't go deep enough into the culture and didn't really dig into the nuances of what it means to be, a fan of classic hip hop. So, I got with Scott Greenstein and, over the course of 5 years, convinced him to, let me take over the channel. Let me do something with it. Let me work with it. I finally got the channel. You fast forward to now, and we've kind of taken it from where it was to around, 7 million listeners daily, and people are really enjoying it. And what I discovered and what I learned is that there are a lot of classic hip hop fans out there, Generation X fans out there, who are being totally ignored. No one's really speaking to them. No one's talking to them. Generation X has, $4.6 trillion. A lot of that generation are hip hop fans, and they've been completely ignored. So it's like, why not, start a platform and systematically start speaking to these people through content, through commerce, and through experiences. Not trying to boil the ocean at once, but incrementally, just systematically rolling it out. So now we're, really focusing on content and getting heavy into that. And, we're speaking to the people in a way that is kind of awaken this kind of sleeping fan base that was out there with no one speaking to them for many years.
Oh, you think there's too much focus on millennials? Everywhere I go, consumer, big business focused on millennials. But you just said, I'm focused on Gen X.
Well, look, I think that Generation X has been completely, ignored and written off. I mean, they're a group that built, hip hop. They're a generation that is rooted in a culture. They're a generation that really lives it and speaks it. They'll pay for, elevated experiences. I think that they're just a group that really loves and enjoys classic hip hop, and no one has really saw the value in that, and they've just been asleep. So it's not, in any way, trying to say anything negative about the millennial generation, which is a cool generation as well. But I just feel Gen X is a generation that I completely understand and that has really been ignored for a long time. And, Rock the Bells really has the kind of content, commerce, and experiences that generation loves. And what's interesting about that is the dirty little secret is we over-index with Gen Z because of our connection to Gen X. So it's pretty cool.
Yeah, believe it or not, there was life before Instagram, and I can attest to that too. And I recognize all the songs on the Rock the Bell station on Sirius. That much is for sure. So talk to me. How do you launch a business during a pandemic when you can't necessarily get up and close and personal? You can't see them in a room. How do you pull that off?
Well, look, luckily we were building a platform, right? It is a platform business. So, obviously this was, we were well on our way to building this business far before the pandemic. It just so happened the way the timing worked out that we had, we launched in the middle of a pandemic. But because we're an online platform, that helps us. It didn't affect our reach. We didn't start in the bricks and mortars area, so that was an advantage. Beyond that, it's really about just making sure that our stories and our narrative is we tell the right story to the people and that they get it. And people are responding. They love the station. They love what we're doing. And now it's just a matter of getting the people that love the station to understand that rockthebells.com is an extension of that. And it's a place where they can go to really experience classic hip hop in all its various facets and dimensions. And look, hip hop is an ecosystem. You know what I'm saying? And we feel like we could touch a lot of parts of that. And that's what's happening. So, so the how is basically, it's staging and execution, right? Like we're doing it. It's very staged. You know what I'm saying? We're not trying to do it all at once. We have a very clear way of how we're trying to roll things out. We're being very specific about that. But we also know that we have, there is a flywheel there. And between content, commerce, and experiences, we can get that thing turning and get it rolling and build some momentum. And we have. And it's just a matter of time. RockTheBells.com is, really appealing. Rock the Bells is appealing to the fans in a big way. And we just got to keep doing what we're doing and be authentic while we're doing it and give the people what they want.
There are a lot of struggling businesses out there during the pandemic. If someone is watching this and they see, LL Cool J started a business from scratch, I want to do that. How do you know who to trust? I can imagine you have dealt with all sorts of people throughout your career. How do you know who to put your trust in?
Well, you gotta have faith, and you gotta go with your gut. I think gut instincts are an important tool in your toolbox. Using your intuition, using your instincts. And if something is gnawing at you, don't ignore that voice inside of you. Don't ignore that small, still voice. I don't have all the answers, but I just think that Rock the Bells can be something really cool. You know what I'm saying? It is something really cool. And I feel like, you have to do something that you're not only passionate about and that you can be the best at, but then you have to have the people around you that have the skill set to operationalize what it is you're trying to do. Rock the Bells is not just about, LL Cool J and my knowledge of classic hip hop. There's also I put people in positions who really understand the fundamentals of how to, take this business from A to Z. And that's what it's about. And then, the chips are going to fall where they may, but we're going to do our best to give people something that we believe, that we totally believe in. And I'm going to put the right people in the right position so that we can operationalize the business and take it to the next level.
What does that next level look like in 2021?
Well, I think, look, we want to, without divulging all of the plans, I think that, having the Rock the Bells Festival out there, having some great content, offering some premium content. We have some great premium content stuff coming that we'll be announcing. And then, having commerce drops, drops that people can really get into and feel and really get excited about. So, it's really about just, our plan is right. The plan feels right. It's true. It's authentic. It's just about delivering. And we will. You know what I mean? We will.
Let's switch gears here. I can't believe we talked 5 months ago, about 2 weeks removed, or about 3 weeks removed from the killing of George Floyd. A lot of protests sweeping throughout the country. Now that you've had 5 months to digest what's happening in this country, what are some of your thoughts?
I think that, times like this, the country needs leadership. I think leadership is key. I think that, you can't, walk around with a hammer and see every problem as a nail when the country needs heart surgery. I think that there is a real, there's a time this country needs to really reflect. I think that this period has been probably as disruptive as, the 60s or even, Reconstruction, right? That period right after the Civil War. I think that this has been, between the Civil Rights era and now, those have been 3 periods that have been really, really just, full of strife and tension. And, we need leadership, and we need people that, I think it's important to have a person running the country who understands how to communicate with those who agree with him and those who don't agree with him. And, that's a skill, but it's needed, right? You have, in order to be the president or, to be the leader of something, you have to be able to deal with all sides. And you have to be able to see the big picture and hear people out. And I think that what we're dealing with now is a kind of like my way or the highway style that I don't think bodes well for the future unification of our country. In order to keep the country unified, you have to hear everybody out and kind of inspire people. It's not about pounding people. And I think that's the issue.
Well, it sounds as though you're looking for a change atop the White House. How could these leaders do a better job and address really, it's an extremely challenging situation in this country right now?
Well, I think empathy, right? Empathy is important. Understanding what people are going through. When your only goal is to preserve a specific status quo or a specific power source or resource, that's a tough way to go, right? You gotta empathize. You have a lot of citizens who feel a lot of different things and are going through a lot of different things and have a lot of dynamics, and everybody's dealing with it differently based on where they fit in this puzzle of America, right? So it's like, we need a president, we need leaders with empathy. You have to have empathy. It doesn't mean that you can't be tough. It doesn't mean that you're going to be able to please everybody, because you never will be able to. But it does mean that if you're going to, in order for you to lead, you gotta embrace the entire country, man. Like that's part of it. You know what I'm saying? That just comes with the territory. You know, if you're going to be, the president or a leader of a nation, you have to embrace all of the citizens. You know what I'm saying? In some shape or form, and at least hear them out.
Do you think this is the most important election in your lifetime? I mean, you're a young guy, but even still.
I think every election is important. I think that obviously this is definitely an inflection point for America. You know what I'm saying? I think it's an inflection point when you have, Supreme Court, being filled, going in different directions. You have, a lot of legislation being passed. Budgets being put in place that will affect, generations to come. Yeah, it's a key. I mean, there's some elections are not quite as important as others, and this is definitely an inflection point. I think America has to get it right. These decisions have to come from a place of, what's going to be best for the entire nation, or at least the greatest percentage of the entire nation in the right way. You want to be on the right side of history, right?
Ella, have you ever publicly endorsed a candidate?
I mean, in my life I have. I haven't, said anything about who I'm voting for or anything like that. Not really. But I think it's pretty obvious that, the way I'm leaning, you know what I'm saying? Just because I just feel like things are too tense. I feel like there's too many, there's too much negativity being encouraged. You know what I'm saying? People got to vote for who they want to vote for. You know what I'm saying? But, how I feel about it. I just, I think we need a change. You know what I'm saying?
What's music's role right now?
Well, I think, it depends on who the musician is, right? And who the artist is. Hip hop, classic hip hop in general has always been at the forefront of the game, always been at the forefront, you know what I'm saying? Always spoke to the issues of the day, you know what I'm saying? And always spoke from that place of, from the place of an underdog. I don't see that changing, you know what I'm saying? I mean, Rock the Bells for sure is, supportive of, the idea of, supporting the underdog and lifting up, the common man, you know what I'm saying? So, yeah, music and art always speaks, especially hip hop speaks to the current situation that's going on. And it's about not forgetting where you come from and just remembering, right? Like a lot of times you get the celebrities and, the celebs get a bad rap. They forget where they came from, or, get a couple of dollars, can get an extra sandwich, and people think that they can't relate. But I actually care about what's going on in the world, and care about what's going on in the community, and care about, my people, and then I care about America as a whole. I want to see the right thing happen for the nation. You know what I'm saying?
Yep. No, you can definitely tell. Ella, last question before I let you go. I asked you this before. I'll ask it again. Any new music coming next year? You're signed to Def Jam. I had to ask you. I'm a fan. Very much a fan. Your music is the soundtrack of my life. Anything you could share?
My man, yeah. I'm actually working on a new album. Me and Q-Tip are working on it. You know what I'm saying? And it's coming along crazy. I like it a lot. I'm enjoying it. Feels good. You know what I'm saying? And I think the people will be pleasantly. I think they'll feel good when they hear it. You know what I'm saying?
Well, now I really can't wait until 2021.
Yeah.
Hello, Cool J. Again, it's been a pleasure to speak with you throughout this year. Thank you so much for joining the Yahoo Finance All Market Summit. Be safe, be well, and we'll talk to you soon.
Much love, man. Stay healthy. Peace and love, everybody. Peace.
Up next, we're joined by NBA star Chris Paul to discuss the success of the 2020 NBA season and how he's getting involved in the upcoming presidential election. Stick around.
Is the National Basketball Players Association president. The Oklahoma City Thunder's point guard is a 10-time All-Star and 2-time Olympic gold medalist. Paul's business endeavors include his O-Dip Productions, and he's a founding partner in Players TV, the athlete-owned media network. He's co-chair of When We All Vote, a nonpartisan organization to increase voter participation and a strong supporter of historically black colleges and universities.
Okay, welcome back to the All Market Summit. I'm Dan Roberts. We're delighted to have Chris Paul here today. Chris, thanks for joining me. Thanks for having me, Dan. I really appreciate it.
So let's start with your business endeavors off the court. You're an investor in Players TV. You've got your own production company, ODIP Productions. And I know that just recently you guys signed a deal with a company that is part of MGM. So I guess I'd ask, what kind of content do you want to create? What are you aiming to get out there?
I think ODIP is a storytelling platform, right? The fact that I've been in professional sports and involved in so many different entities for so many different years, we just want the ability to be able to tell stories, in a unique, fun way. We have some scripted, some unscripted projects that we've been working on, and I'm excited. We got a project called American Soul about sort of the underground sneaker market. We have an HBCU project coming up. A really cool project is called The Day the Sports Stood Still, which is about, it starts with that game back in March when our situation happened with the Utah Jazz.
Absolutely. And I want to ask you while we have you, what is it about athletes and media right now? I mean, if you look around, so many pro athletes have gotten into media, whether, Kobe had started a media investing fund. LeBron obviously has a bunch going on with TV deals. Derek Jeter started the Players Tribune. And it's funny for us in the media because now you got athletes really just telling their stories directly. And in many ways, they cut out the media. And I just wonder what the appeal is there for you. Why media now?
I think the appeal is the athletes finally realize, like all of us realize, that who can tell our stories better than us, right? Like we're a part of it. We see it firsthand day in and day out. And, to be an athlete is a lot of work. It's more than just throwing a pass or shooting a ball. There's a lot of discipline and a lot of thought that goes into it. So it's been the funnest thing for me over the past, I don't know how many years. I've always been interested in my business. So why not share that with the next generation and create along the way?
Along those same lines, I cover sports business, so I'm often covering what athletes are doing in terms of endorsement deals. Obviously, we see you on TV all the time in the State Farm ads, but along the same lines with what you're doing in media, it seems to me like in the last few years, the model for athletes has kind of shifted. You still endorse products, you might appear in ads, but a lot more athletes are investing in startups to get equity. Do you think kind of the model here for athletes in business off the court or off the field has changed?
It changed drastically. And I'm so fortunate that I played for a long time, right? So 15 years. And there was once upon a time when you come into the NBA and they're like, here, will you hold this and smile and we'll pay you something for it. But, athletes, everyone are so much more in tune now and understand that you want to be a part of something that you really believe in and you want to do equity deals. You want to have an opportunity to grow with the business that you're building. And, luckily for me, you'll never see me partner or endorse anything that I don't really and truly believe in. And I think that's easily the way that everything's going.
Another big role of yours, kind of off the court, but also on the court, president of the NBA Players Association. Now, you've been in that role since 2013, but obviously this year was unlike any other. I mean, with everything going on, not just the pandemic and playing in a bubble, but pushing the league to really promote social justice. Tell me about the leadership challenges you faced as president of the NBPA this year.
Yeah, I don't know if challenges, experiences, whatever word you want to use. It's been unbelievable. I learned a lot about myself. I learned a lot about our league. And I think the biggest thing that we learned is how strong we can be when we come together, right? It's always been bigger than the game, but these times that we're all enduring and going through, we got to go through it together. And we're learning, we're becoming more educated, and it doesn't stop. Like the bubble was thankfully a success, but now it's, we got to do more. And this voting cycle and everything that's going on as far as the election has been a way for us to not only educate ourselves, but educate our audience.
Yeah, you mentioned the voting cycle. You are a co-founder of When We All Vote. And then just about a month ago, you did an event in North Carolina with Joe Biden. You FaceTimed in to Steph Curry. And it's interesting. I wanted to ask you if you think that athletes have sort of embraced promoting their own politics more than ever before. Or, of course, some people say, look, sports was always political. I mean, is this a new shift?
I think sports have always been political. Athletes have just chosen to do so, when they felt comfortable. I think for me and Steph, we talk about it at times, being parents, right? It's more than just about me. I feel responsible for the things that my kids will see and what they'll endure. So that was a choice of mine, you know, and everyone may not agree with it, but that is okay. That is perfectly fine, you know, but for me, it was a big decision, and I was excited to go to my home state of North Carolina to do that.
You mentioned HBCUs earlier, historically Black colleges and universities. You really used your time in the bubble to promote them, to bring attention to them. And I guess I'd ask you, you know, how you think that went, you know, whether you've seen an impact from that already, and then how do you continue the momentum moving forward?
Well, the impact has been amazing. And my passion for HBCUs comes from everyone in my family attending. And I'm not sure if you even know, Dan, but I'm actually in school right now. I attend Winston-Salem State University, hoping to get my degree soon at some point. But I think it went great, and it just raised the awareness. It's the awareness. I think for a lot of time, HBCUs have almost looked, you know, inferior to the Blue Bloods and all of these big schools. But people are finally starting to see that, you know, these schools are just as productive. They just lack the proper funding.
Yeah, it's so interesting. And you know, you talk about bringing attention to something. Let's talk about the social justice element too, with the phrases and the names on the jerseys. You know, I saw a story saying that most likely next NBA season, you won't see those return. So I'd want to ask, how do you keep the momentum going there? And you did say earlier, you know, we have to do more. So what do you see happening down the line in terms of the league and the players kind of keeping this commitment strong to bringing attention to these issues beyond just this moment where it all kind of came to the fore?
Yeah, I think it'll be a conversation, right? When we had that sort of reset, pause, or shutdown where we were in the bubble, we sort of talked about this social justice coalition that we formed so that we can be more proactive when things occur. The good thing about the league is that every decision isn't just mine, and we have a wide variety of very smart players, but these are the discussions that we'll have so that we make sure that we continue to play the game that we love, but make sure that we continue to show people who we are, right? And I just want to give you this quick example of, I don't know if you remember that game in the bubble with Jamal Murray and the Denver Nuggets.
Oh, yeah.
And I think I always remember that game and his speech after the game, because had we not gone to the bubble, you still would have probably heard from LeBron James, Kevin Durant, all these different guys, right? These stars in our league. But I think because we were there, and as emotional as Jamal was, people know who he is as a person now more than just who he is as a basketball player.
That's absolutely true. Absolutely. I mean, there's the breakout performance on the court, and then there's everything off the court. You mentioned LeBron. You know, it's interesting, and I know this as someone who covers sports business. Right now, there's still a very loud, vocal corner of the internet of people kind of screaming, the NBA got political. They always mention LeBron. They say LeBron, you know, social justice, and they're complaining about it. They say it's got, you know, politics are involved now. And it's interesting, you know, one of our other speakers today at the summit is Emmanuel Acho, the former NFL player. And in a recent interview, he said, you know, social justice and police brutality and life and death are not politics. It's not political. What do you say to all the people out there who are just claiming that, you know, the NBA got woke and political? What are they missing?
What would I say to them? I think it's just a right and wrong thing. You can call it political or not political. I think all of us looked at it as being humans, right? Just being good people. And for us, we wanted to speak on the things that we face day in and day out. I say this all the time. When people watch our games, as exciting as it is, and we send you on this emotional roller coaster, and it's these last second shots, when the game is over, we do not walk out of the arena in our uniforms, right? We don't. We get dressed, we get in the car, I go home as a Black man, right, with my family. And so the things that we face on a daily basis, just because we play in the NBA, doesn't make us that much different from our homies that's back home or the people that we grew up with. So the things that we speak on, the things that we talk about are things that are, you know, daily reminders that, you know, yes, playing basketball, football, soccer, whatever it is, our job, but it's not who we are.
We talked about the bubble and how it was such a success in many ways. I'd be curious, especially as president of the NBPA, what have you heard in the last couple of weeks, you know, since things wrapped up from other players on how it went? What has the reaction been from them on kind of just the big picture for this very different 2020 NBA season?
For me, I've got a chance to see it all, right? So I got to see the very beginning stages of players very unsure, as I was. There's a lot of conversations to be had. Everyone was scared, nervous, not knowing what that was going to look like. And to see how grateful everyone has been, right? Not to me, but to each other. Just the fact that not only did we get an opportunity to play and use an unbelievable platform and raise awareness, but we got a chance to really have conversations with each other. We got a chance to teach each other. I am, smarter and more aware of situations that I wasn't as aware of before I went to the bubble. Because a lot of times over the course of a season, we just cross each other in passing. There's no real, how are you? Like, how are you mentally? Like, how are you dealing with this? And in the bubble, we were forced to have those conversations.
Yeah, that's excellent. That's excellent. It kind of seems like maybe people will look back on it, and instead of being this anomaly year that was kind of weird, it was actually really significant and kind of moves a lot of things forward, not just for the NBA, but really for sports.
No question. No question. I mean, I had an opportunity to talk to a lot of the Black players that play Major League Soccer, right? I would have never had that opportunity. I had baseball players that reached out, football players that reached out. The WNBA, we did a call with the NBA and WNBA players with Michelle Obama. That is unheard of. So as tough as things were as far as us being away from our families, I absolutely believe that the things that took place during this pandemic will definitely move sports forward.
I'm so glad you mentioned some of the other leagues, because I was going to ask you, whether it's what they do on social justice and politics, or whether it's what they've done in business off the court or off the field. I always like to ask pro athletes, who are some of the other athletes that you look to for influence as role models in terms of their decisions, either in your sport or outside your sport?
Yeah, there's a number of guys, obviously, that I know in other leagues. Mookie Betts is a really good friend of mine who plays for the Dodgers. We share a bowling interest, but he's just a great person, right? But I think what our league has always been really good about, and it's one of those things but then when something happens, you like, whoa, like really, people really do pay attention to us. And it was when we sort of took that reset. When we had to take that pause and really gather our thoughts, to see the amount of calls that I was getting from the other leagues. I'm usually not surprised by too much, but I was really surprised. And as I was telling our players, I was like, look, man, we have an unbelievable job, a role here to play, because everyone sort of follows our lead. And so it's really a special time to be connected with all the other leagues like we are.
It's a great segue. I wanted to ask you, big picture, if we zoom out, what is the role of the NBA in American culture, or really globally now moving forward?
That's a great question. And I might not be the one equipped to answer it, but I think what we do is we're in it, right? We don't think that deep into it. We sort of just talk it out amongst each other, try to collect our thoughts, see what we envision of ourselves, right? And I think that's the thing that we always take into consideration, is not just how we view ourselves, but a lot of us are fathers, husbands, kids and stuff. And we always make sure that we want to project the right thing to the kids. And as long as they understand that they have a voice, like for us, we had a chance to grow up and see the Cleveland Summit with the Jim Browns, the Muhammad Ali, Kareem Abdul-Jabbar, all these guys, so hopefully we're an inspiration to kids out there who say, look, I do love this sport, but I want to be who I am.
Chris, let's end on this. What is the big picture dream for you professionally beyond basketball?
Man, that is a great question. I'm sure my team, everyone who works with me and helps me, would love to know that answer. I would love to be eventually a governor of an NBA franchise. Obviously, I love the game. Like, I love the game, and I want to be a part of it for a very long time, and just continue to grow our business. ODIP, continue to tell these great stories. I'm an investor in Players TV, which is an unbelievable distribution platform that I'm excited about with other athletes. And it goes back to what you said in the beginning, is that athletes are realizing that we're more than just the product, right? We can be involved in the decision-making and everything like that goes forward. So I want to continue to build these brands and businesses and enjoy my family.
Awesome. Well, wishing you all the best. Chris, I love what you're doing. Thanks so much for joining us.
Thank you, Dan. I appreciate it.
Straight ahead on Yahoo Finance's All Markets Summit Road to Recovery, VaynerMedia CEO Gary Vaynerchuk explains what he sees as a big sea of change in the advertising industry. Stay with us.
Chuck is a serial entrepreneur, CEO, best-selling author, tech investor, and marketer. Among his many endeavors, Vaynerchuk is the CEO of VaynerMedia, a digital advertising agency servicing Fortune 100 clients. He's also a much sought-after public speaker and influencer.
Hi, I'm Melody Hom from Yahoo Finance, and I'm so excited to be speaking with Gary Vaynerchuk today. Thanks for joining us, Gary.
Thank you, Melody.
The theme of this year's AMS is Road to Recovery. Tell us what you're seeing at VaynerMedia. Your focus has always been on innovative experiential marketing. Of course, that has sort of been thrown out the window to a certain extent. Tell us how you've been able to pivot during this time.
It's really funny the way you've been structured that, and I totally get the positioning of us being innovative or disruptive or things of that nature. But in actual business meetings with big and small brands, I've always clarified kind of my persona or like the vibe around us. I've always said, look, people think that we're innovating. I think we're practical. I think that most people talk about today in a very confused way. Most companies really put yesterday on a pedestal, what used to work. And they think of today as the future, but it's actually today. So ironically, I've always thought we were practical versus disruptive or innovative. So to your point in the way you set that up, we were never doing VR or AR. Like the things I talk about are what consumers are actually doing now. Like I think we can all agree that consumers give their attention to this device. And so when we're doing media and creative in these channels, and OTT, Facebook, Instagram, YouTube, TikTok, whatever they may be, LinkedIn for B2B companies, we think it's practical. We think it's underpriced. No different than back to Yahoo in the early days of Yahoo, that ad product, Yahoo, Google ads, like Yahoo ads, that was a driver for my family's business. In 99, 2000, 2001, 2002, people thought Yahoo ads was so futuristic, but if you were doing them, you knew they were practical. You were doing business. So what's actually happened for us is people have thrown out yesterday and have opened their eyes to today, AKA the biggest brands in the world that we work with are starting to understand that paying $600,000 for a production to run on television might not be the best use of their money and have leaned into e-com, DTC, and content and media being together in digital channels to drive business results. And this has been the greatest era of CMOs and real marketing individuals at the highest levels becoming more practical and practitioners. So we're seeing a lot of growth, to be frank. And we're seeing people finally have the aha. You know, I was reading about this on Yahoo or Wall Street Journal or Ad Age, but I never took it seriously because I put yesterday on a pedestal. And now I actually see what you meant. I can't believe Facebook ads and creative can drive my business so much. So we're seeing a big sea change in Madison Avenue and even startup land to a degree. And obviously we're excited about it from our perspective.
When we see this wide divergence, when we look at the industries, right, that are actually spending those ad dollars, even if they're rejiggering their budgets, of course, retail, financial services are two of the top spenders when you look at even the growth that's happening in 2020. How are you seeing that manifest in your business? Are there any particular bright spots that you can call out or perhaps laggards in the space overall?
The bright spots for me are, I can't believe how many, whether it's Kraft or Procter or PepsiCo, the conversations I'm having where the actual sales data is becoming the KPI, not the internal MMA or Nielsen brand lift studies. So, I actually see a lot of, if you're, we're very heavy CPG, we're heavy financial services as Chase is a client, we're seeing, we weren't in a lot, we weren't in airlines or hotels, we got lucky is the only word I can use. Our client mix was very benefited by COVID, to be honest, in the short term. In that time frame, because they're worried about supply chain, to be honest, right? Our clients are much more worried about making more of their stuff than anything else. I think it's just affirmation of my prior statement, which is the bright spots or the advancements are as following. We are seeing bigger allocation to marketing because we finally got clients to measure on how well they're doing on Amazon.com or proving to them that we're moving product at Kroger or Walmart or Home Depot. So what's happening is they're investing more because the debate went out the window because they weren't lazy with their money because nobody could do TV productions. So you're seeing a real world of haves and have-nots. You know, the industries that were most affected are obviously in trouble, more so than others. And then the industries that most benefited from it, food, necessities, were unable to spend their marketing money the way they're accustomed to. Meanwhile, what was happening was the way they were accustomed to, big productions on TV and then doing matching luggage to that TV spot on digital, was for the last decade wrong, or at least wildly overpriced. So they have more business and more opportunity to spend marketing money. They can't waste it to the way they've been wasting it, especially in 2019, 18, and 17, because all the consumer behavior has been shifting more that way. And now they're seeing something new, and they're seeing the business results above and beyond the COVID effect. I mean, this will be a transformational moment on Madison Avenue forever. The television commercial industry will evolve, not to mention, as you know, and everybody watching knows, the growth of OTT consumption versus cable television and network has exploded. And OTT commercials look a lot more like a Facebook or YouTube commercial than they look like buying a TV upfront. I mean, let there be no confusion without knowing who and what everybody who's watching this comes from or what their angle is.
When you think about early on in the pandemic, you launched Vayner Commerce, of course, after acquiring Lucid Fusion. Essentially, you're charging top dollar to companies that have been trying to pivot into this e-commerce space. Tell me about some of the findings over the last couple of months, some of the sort of successful strategies that you've been able to implement.
So what we're doing in that world, I spent about 3.5 years. I started VaynerMedia to eventually buy brands. So I didn't want to go into agency landscape, especially not after some of the good things I did prior to starting VaynerMedia. I wanted to learn Fortune 5000 land and understand what they knew that I didn't, because I was a from the streets entrepreneur kid. So I didn't have certain things that I just didn't know. I didn't understand why Coca-Cola and BMW and Hertz and whatever were doing what they were doing. And so 3 years ago, I went on a journey to try to buy through M&A or start my own e-commerce capabilities. And we started our own inside of VaynerMedia, but I knew I wanted it to be a standalone VaynerX company, which is the name of my holding company, because I knew that e-commerce was evolving, DTC was imperative. I needed to be omni-channel when I bought these brands. So the intent of buying Lucid Fusion and integrating it, we were gonna launch Vayner Commerce in June. Obviously we sped it up a little bit because e-commerce became all the conversation immediately with COVID, was to help people build out the platform for macro LTV, not just getting the ads to work on CAC and LTV in the micro, but packaging, 3PL, building on top of Shopify Plus, which was more nimble than some of the legacy softwares that Fortune 500s were building on. Understanding and amortizing out math matrix to make sure that these big companies could ship direct to consumer and make the economics work in versus what they use with big retail. So it's been wildly successful. I think the biggest thing that we've taught the Fortune 500 landscape right now in the early days is you can do it yourself. You don't need to rely on Walmart and Amazon.com, though those are incredible partners along with Target.com. You can do it. You just have to do it right. You don't have to spend $1 billion on an M&A acquisition to incorporate into your company like many of them think they do. You are capable of doing this yourself, but you have to act like them, not act like yourselves, because yourselves are built to stack it high and let it fly at Kroger's, at Albertsons, at Publix, and that's not going to work with DTC. You're going to have to go consumer up and make the economics work, and so far it's been an extremely fruitful venture.
Of course, in addition to your kind of business portfolio and the vision you have there, you as a brand have been extremely successful, not only with the hustle and entrepreneurship lessons that you've been able to share, especially with a younger audience, but I'm curious if you've attracted a new demo during this time. We see the state of the economy. We know, as you say, it's a world of have and have nots, right? How do you think about this period of time where perhaps some folks who wouldn't have been a Gary Vee fan, have they kind of come into your universe in a surprising way?
I think the word of mouth of the individuals who, obviously hustle gets a lot of the headlines. And I've really been spending a lot of time trying to understand why in a world where I talk about patience or being happy over money, or all these other things I talk about, that hustle really rose to the thing that people latch onto, especially concerning for me that people misinterpret it as burnout versus what I'm actually talking about. And that's something I have to look at myself to make sure that I'm communicating properly. During that time, what became very interesting is over the last 18 months, I tweaked and made sure it was very clear to people where I sat on certain things, like how many hours I like to sleep, 7 or 8, how I think about loving process versus what you could buy with business success. What's been really interesting during COVID is how many people reach out to me that prior to COVID, me talking about them being insecure and caring about other people's opinions, which is why they buy Prada bags or BMWs or Supremes, is a bad idea, and don't use physical products to close up your insecurities. Save money should be cool. What really made me emotional was how many people in March, April, May reached out to me and said the fact that they've lived that simplistic framework for the last year and actually saved some money is now reaping huge benefits from them and limiting their anxiety of losing their job. As you can imagine, Melody, that was huge for me. I think for a whole nother group, they were aware that I'd been yelling about that for a good 2-3 years. And now they're like, oh crap, that's right. And I wish I listened. And so that realization. So yes, of course, there's been people that have stumbled on my content and maybe look at it for a different reason. Actually, to your point, a lot of people have come back to it. I think the biggest thing I've noticed is a lot of comments and emails and messages around, hey, I was off you for 3 years because I was off and running and I felt like I got what I needed, but now I'm in this new restarting spot and you were valuable to me then. And so that's been nice to hear. But then there was also a dynamic that was pre-COVID. I had been exploding on LinkedIn and TikTok for the 18 months prior to COVID, for the last 24 months, because they were the two places where you could get organic reach in a way that you couldn't anymore on Instagram and Facebook and Twitter.
Yeah, that's fascinating. I mean, you of course started with a wine family, you sold Empathy Wines to Constellation Brands, but also you've been really passionate about sports cards, right? During this time. We at Yahoo Finance have seen this huge uptick, right, in retail investing, whether that's traffic to our site, looking up stock quotes. How do you suggest folks diversify their portfolios during this time into sports cards, booze, art? Tell me kind of a quick thesis there when you think about people who are trying to really see the gains of certain industries, especially during a downturn in the economy.
There's a very simple and very complicated answer to this. On the complicated side, you have some really wild conversations going on with the most sophisticated financial engineers in the world around just how much money is being printed around the world. Flat out. Cash being a commodity. So as you can imagine, some of those individuals strategically have diversified in a much more unique way around tangibles. Or, that's what led certain people down cryptocurrency, and it's what has led people down art, wine collecting, and to your point, modern sports card collecting. That 28 to 42 high net worth individual is a little bit more excited about getting a Charizard Pokemon that's worth $250,000 than, let's say, maybe that same 40-year-old 40 years ago going to Sotheby's and buying a $250,000 antique that they may put in their home. So you're seeing that shift. So there's just a very complex conversation of the amount of money being printed in the world, and do you then go into those things? And then you have the complete opposite side of the coin, if I may, which is a more thoughtful conversation around happiness. In its most simple form, I have had more than a dozen conversations that look exactly like this. Hey, Gary, that whole thing you've been talking about for 3 years with sports cards? Well, I kind of got caught up in it, and I decided to spend $100,000 buying Michael Jordan's or Wilt Chamberlain's or Ken Griffey Jr. rookie cards, and I found myself being happier on my 30% or 40% win there than my 30 or 40% win on Tesla or Apple. So there's an interesting conversation to be had right now of just sheer happiness. Like even if you make less money investing in something like sports cards, was it more fun than just doing that with AT&T stock?
so interesting. We always appreciate your insights, Gary. Thanks so much for joining us, Gary Vaynerchuk.
Thank you for having me.
Still ahead, former NFL star Emmanuel Acho joins us to discuss his YouTube series titled Uncomfortable Conversations with a Black Man. That's next. The Yahoo Finance All Market Summit is sponsored in part by the International Well Building Institute.
Former NFL linebacker Emmanuel Acho left the league in 2016 to join ESPN to cover college football. He moved to Fox Sports this year, hosting the sports talk show Speak for Yourself. In an effort to speak directly on issues of race in America, Acho began a YouTube series this summer entitled Uncomfortable Conversations with the Black Man. The acclaimed series tackles many controversial and taboo topics, not just inside the NFL, but in broader society as well.
Okay, I'm Dan Roberts, and we are delighted to have Emmanuel Acho with us today. Emmanuel, thanks for being here.
Of course, my man. Good to see you finally. I don't think we've ever officially met.
I love it. We're meeting virtually. That's how everyone meets nowadays. Dan, during the pandemic, a lot of people have had trouble being productive. You have gone into hyperdrive. You launched your series Uncomfortable Conversations with a Black Man back in June, and the timing was just terrific. I mean, you've racked up millions and millions of views. I'm sure most of our viewers today have heard of the series. At least I hope that they will watch the series. And then you've got your book coming out, also being published with the help of Oprah. So congratulations on that. That's coming out on November 10. Talk to us about just embracing the moment during the pandemic and just, launching the way you did. And did you ever expect that it would be so successful so quickly?
Yeah, so during the pandemic, I had two primary work goals. It was I wanted to write a book and I wanted to sell a show that I created. I tweeted this out in April. I tweeted this out kind of flippantly. I'm not a big goal guy. I got my master's degree in psychology, so I may create an objective without limitations as opposed to goals, right? I have a whole theory on this, but Dan, I won't bore you with this unless you ask. So I have a whole theory on why I don't have goals. I have objectives without limitations. Well, fast forward in a little more somber and tragic of a mind state. The end of May, George Floyd tragically is murdered. And so as a Black man, Dan, I was like, I have to do something. The world sees me as a sports analyst, but I'm a Black man and I'm a human being. It is my responsibility to contribute to the world in some capacity. I called my best friend, Olympic gold medalist. Her name is Mo. And I said, hey, stand in as my producer. True story. I call a wedding videographer, Dan, and I say, hey, I have this idea. Can you come shoot this thing for me? I go to some all white room and I sit down in a chair and I record the first episode of Uncomfortable Conversations with the Black Man. I didn't do it to become famous. I didn't do it to get notoriety. I didn't do it to get now over 65 million views in 4 months. I did it out of a desire to help change the world. And I think that's one thing people have to know. There's your career and there's your calling. Your career, what you're paid for, your calling, what you're made for. My calling of Uncomfortable Conversations, I realized, that is what I was made for. My career is sports, NFL player, NFL analyst, but now this is my calling. And so that really, to answer your question in short and in long, Dan, is how everything took off. I just followed my heart. I followed my skill set. And I teamed up with people who believed in me. A wedding videographer, Dan, a wedding videographer. Like, this is not a Emmy award-winning editor, an Olympic gold medalist. This is not an Emmy award-winning producer. These are intelligent people who saw a vision that I saw, and together we created one of the most, I think, impactful, more than anything, things of the pandemic.
Let's talk about one of your biggest guests. You had NFL Commissioner Roger Goodell. Made a lot of waves, and I'm the sports business guy here at Yahoo Finance. I've covered closely the NFL's various successes, trials and tribulations, scandals. You got him, of course, to talk about the protests that Colin Kaepernick started. And there were a couple of really interesting moments. First of all, Goodell said, we listened to them too late. We didn't listen early enough. Now we're hearing them. He said, now I understand. So I guess I'd ask you, what's the onus now on the NFL moving forward? I mean, he acknowledged that. He put out a really significant video where he said the NFL believes Black Lives Matter. What happens next? And what do you think the responsibility is for the NFL to do more on social justice? Why does the NFL have more responsibility than other sports leagues?
Yeah, because to whom much is given, much is required. The NFL literally owns one day of the week. Every Sunday is owned by the NFL, right? And you could argue 3, right? At least, well, it owns one full day and it owns a couple nights.
Right.
It owns a couple nights. I think to whom much is given, much is required. I've been given a lot, so I do a lot. I try to, at least. The NFL, you are a multi-billion-dollar corporation. You have to do more. Dan, intention without direction is worthless. The NFL has great intention. Now it needs to figure out what is its direction. right? I didn't love the intention of the playing the Black national anthem. That's not going to do anything. Personally, as a Black man, in my opinion, it's not going to do anything. Sooner or later, we have to go from names on the back of helmets and names on the front of helmets of lost and murdered and people who suffered from police brutality to ensuring it doesn't happen again. Dan, an ounce of prevention is better than a pound of cure. The NFL, please start to pour more into prevention. What does that look like? It depends. Dallas is different from LA, which is different from Chicago, which is different from New York. The needs are different state to state, but everybody has to start to get their hands dirty.
Yeah, that's so interesting. You mentioned the names on the helmets. And actually, Malcolm Jenkins just last week was quoted saying the tokenism doesn't really mean much anymore, which, quite a quote, but really making the point that he wants the team owners to do more, to use their political clout more. I mean, do you see that happening? Do you feel confident that the NFL will do more if it's not forced?
No. If it is not forced, no. This is why things get uncomfortable. Change will not occur unless change is forced to occur. Women would not have been given the right to vote if not for protesting in some capacity. Black people would not have been given the right to vote, would not have been given the right to integrate, would not have been given the right to marry white people if not for protesting of some capacity. We have to remember, bro, change won't just change because I feel like changing. Even let's talk sports, even in the NFL. Back when I was playing 5 years ago, you would get fined like $557 for every pound you're overweight. So reporting to camp, for every pound you're overweight. So if you were 10 pounds overweight, it's about $5,000. And mind you, that's per day. So it's not like, we fined him on Monday, so we won't get fined on Tuesday. That's per day. Why am I giving you this example? Because change will not occur unless you are forced. If Emmanuel Acho showed up to camp overweight, I was forced because I was fined. And I submit the same thing in our society. The owners aren't just going to wake up one day and be like, nah, you know what? I feel bad for these black people finally. Let's do something about it. That's not how it's going to work. In all honesty, they'll probably be oblivious to the fact that there is any injustice going on. And so, that's really my stance is change has to be forced. I don't think it has to be physically forced. Change can occur through dialogue, through educated, emotional dialogue, which will lead to empathy. That's what I'm doing. Other people have their approach. I have mine.
Specifically on the protests during the anthem, you mentioned in that interview, it's not about the flag. And you got Goodell to say the same. He said, it's not about the flag. And yet that misconception persists. We had Drew Brees on our own network back in June saying that he felt the protest is disrespectful to the military. He has since changed at least his public stance on that. You have loud corners of the internet where people insist it's disrespectful to the flag. And I guess I would just ask you, how do you go about changing those minds, or do you not try to? How do we convince people that it's about, peaceful protest and standing up for something? It has nothing to do with disrespecting a symbol of America.
No one who is oppressing someone will ever respect their protest, right? No one who is being protested will ever be like, okay, I like the way you protested that. Thank you for how you protested that. That's just not going to occur. Now, what we can say is this. As a truth teller, which I try to be specifically in this realm of conversation, two primary facets of truth. Number one, Colin Kaepernick was told to knee and asked to knee by a Green Beret, someone in the military, Nate Boyer, a former teammate of mine. He was a long snapper for the Seahawks. He told Colin Kaepernick to take a knee, as that is a greater sign of respect. Number two, in general, it is not about the flag. Many people point to Colin Kaepernick saying, I will not stand for a flag that oppresses people, etc., represents oppression. But it is a matter of raising awareness. So there are people, Dan, on far sides, extremes that I don't try to talk to. I'm trying to stand as a bridge and just say, hey, let's all for 1 second just have a conversation about what is and isn't right. I'm not negating Drew Brees' opinion, right? So many people are like, wait, Drew Brees is allowed to have an opinion. He is. Just make sure that your opinion is at least just in its stance. And that is, I think, where the misconception was with Drew Brees, is that his opinion implied that okay, if I stand because so many people fought in this war, and I stand kind of to pay homage for that, it implied ignorance of the black people who fought in the war and didn't get the same rights. And so that's really how I approach the totality of the flag and the national anthem.
We've been talking, Emmanuel, about the NFL specifically and about that protest. Let's zoom out a little bit, because obviously during this time, we've had the social justice movement really show up across the sports landscape. And I wanted to ask you, while we have you, one kind of interesting side effect, and everyone has their reasons. You know, there's also a pandemic going on. There's also the election. But interestingly, right now, live sports ratings are down compared to a year ago for all the major sports. The exception was the WNBA, interestingly. Ratings were up for them. But ratings down pretty significantly for baseball, for basketball. And it's interesting, you know, I wrote about it, and you get immediate comments from people screaming on the internet, and they say, LeBron, you know, social justice warriors. And it's always, they mention LeBron, and they always go right to the NBA. And in one of your recent interviews, you said something I thought was really interesting. It was not an episode from your show. You said, you know, social justice and life and death, that's not politics. That's not political. But you've got people right now screaming, you know, sports have gone political. What do you say to those people?
Yeah, I fervently believe that life and death and justice and injustice isn't political. I personally believe that it is human and it is humane. I don't think that we make things political just for the sake of being divisive and arguing. But I think there's a difference between Black Lives Matter, the adjective, and Black Lives Matter, the noun. I think there's a difference between Black Lives Matter, the noun, being the group, Black Lives Matter. I have never once gone public and said, yes, support Black Lives Matter, the noun. I'm saying support Black Lives Matter, the adjective, being black. Those lives do in fact matter. We try to make things political unnecessarily. I don't get into political conversations. I'm strictly talking about justice versus injustice, oppression versus oppressed. That is where I like to stand with these conversations. There are bigger things going on than sports right now. Like, I'm glad sports are down. Like, and I'm a sports guy. You can cut this for my bosses, for the world to see. Like, there's a presidential election going on. There's a pandemic going on. I would hope to God that a game, which all sports are, is a game, are lesser important than lives. So when people are like, oh, sports are down, I'm like, bravo. Because at least that shows me that we have our priorities right in this country. Sports will pick back up. They always do. So I don't even have an issue with sports being down. When you talk about things being political, life and death, it's not political. It's just not.
Manuel, I wish we had so much more time. I wish we had all the time in the world, but let's end on this. Where can you take your new influence and your new role as a speaker on these issues, not just the series, everything you're doing? Where can you go from here?
I would say this, again, to whom much is given, much is required. And now that my platform has been bigger, I got to do more with it. I went, Dan, from 40,000 followers to 700,000 followers in 2 weeks. And I didn't buy them either. And that's on Instagram. And I think so now it's a matter of, I don't want to be successful. I want to be significant. And there's a difference between significance and success. I wrote the book, Uncomfortable Conversations with a Black Man. You can pre-order it, uncomfortablecombos.com. Why did I write it? Because the spoken word, Dan, has sizzle. The written word has substance. And I can talk all day and you can have clips and they might go viral. But when I give you a book with a just so much more detailed depth and knowledge, it can be passed down from generation. You're a sports guy, let's talk sports. In track and field, a 400-meter 4x1 race, a 4x4 race, you pass a baton. This book, Uncomfortable Conversations with a Black Man, I wanted to be a baton. So you can pass to your offspring, and they can pass to their offspring, and they can pass to their offspring. So to answer your question, thesis statement, where can I go next? Keep my foot on the gas. Like I told you, I have several more episodes. I'll just tell you, the one I'm super excited about, I'm sitting down with a police department. And just several officers, and just let's talk about it. Let's tackle it. So look out for those on my social media channels. Follow my social media channels, as that's where I release all my episodes. And I'm going to keep going, dude, until I see the change. And even when I see the change, I got to see more of it.
Excellent. Well, we love what you're doing. Loved having you on, and we'll have to get you back on Yahoo Finance soon. Emmanuel Acho, Thanks.
My brother. Thank you, dude.
And this concludes the Yahoo Finance 2020 All Market Summit Road to Recovery. There are so many highlights of today's summit to talk about, including Dr. Fauci on the current surge in coronavirus cases, Delta's CEO Ed Bastian on the pain airlines are facing, former New York Fed Governor Bill Dudley on this crazy stock market and the need for stimulus, as well as Walmart CEO Doug McMillon on how American business can get back on its feet. And if you miss anything, you can watch all the segments and guests by going to yahoofinanceams.com. We want to thank all of our sponsors, International Well Building Institute, our financial services partner Edward Jones, and the NASDAQ, and especially its CEO Adena Friedman for hosting us. Thank you so much for watching, and we look forward to seeing you at next year's All Market Summit.